Good morning and welcome. This is NDTV Profit. I am Agam Vakil and you're watching All You Need to Know. Over the next half an hour or so, we'll tell you everything you need to know about the start of the day of trade on the right note. Let's start by taking a look at the headlines. Morgan Stanley says India continues to be a top pick for valuations backed by strong fundamentals. And RBI open to considering deadline extension for Paytm Bank to ensure customers withdraw money. That's an NDTV Profit exclusive. And LIC to get income tax refund worth over 25,000 crores, and that could be a big boost to the insurance giant's profits. And India's states refiners are in talks with Russian oil producer Rosneft over term deals. That's a Bloomberg report. And the SBI is back on the chart, clocks nearly 18% gain in a month. We will bring you a special coverage on the State Bank of India. And the top story of the day, Morgan Stanley has retained India as one of its top picks as part of Asia's strategy. The investment banker expects structural outperformance in both India and Japan to continue, and India is seen as outperforming on the back of its nominal GDP growth and agenda that focuses on capital expenditure and digitization. What's more, Morgan Stanley sees a secular trend in India towards sustained, superior EPS growth, as well as denominated, which is in USD, and compared with other emerging markets, equity inflows going forward will be supported by the country's young demographic profile. And while valuations are currently at a premium, Morgan Stanley says that this is warranted because of superior fundamentals. In a recent report, the investment bank has cited that the rise of central government capital expenditure to a 18-year high is in the current financial year, and the resurgence in private capex as its reason for its bullish outlook on India. Now, this is what Morgan Stanley has to say, but let's take a look at what we have in store as far as the markets are concerned today. And do remember that it has been a relatively choppy session, a rather choppy week. With that considered, let's take a look at how things have panned out on Friday, and perhaps we could decipher as to what traders want to or intend to do moving into trade this Monday. Now, we did see about a 0.3% up move as far as the benchmark is concerned. That is the Nifty 50, about a near 5% decline in open interest, which means a lot of your older shots were considered as far as the Nifty is concerned. Moving on to the Bank Nifty, let's pull that up and take a look at how that's panning out. So as far as the Bank Nifty is concerned, we saw a good amount of strength there as well. In fact, this was where we saw about a short covering, because remember, Thursday saw sharp cuts for the Bank Nifty. And once again, that short covering is very evident, as you can see, near 6% decline in open interest coming through. As we move into the new week, what kind of cues are we working with as far as your option markets are concerned, considering the Nifty? Of course, this is your open interest distribution, so we're still looking at a 500-point range based on maximum open interest, where we have max OI in around the 22,000 call, and lower down, the 21,500 put. So keep an eye on these levels. How did things pan out? Well, naturally, there would have been a little more traction, a little bit more put writing, considering we saw the Nifty advance higher. Moving on, let's talk about stocks then. And a lot was done as far as we had a lot of volatility coming through there as well. So Z Entertainment and Sun Pharma, of course, saw longs building in along with PI Industries. PI Industries is another counter which has once again started seeing a lot of volumes activity. MRF and PFC, on the other hand, looking at shorts coming through. PFC a drop of 8.5%. Keep an eye on that one. It's been one of the biggest movers this year. And in terms of stocks which saw unwinding in trade, let's pull that up as well. And we are seeing a lot of long unwinding in Biocon, Hindustan Copper, as well as Apollo Tyres, and of course UBL and India Cement, on the other hand, looking at shorts being covered. This is as far as our own markets go. And moving beyond just the futures and options, counters, we're keeping an eye on, Hero MotoCorp, because that, of course, will also be coming through a reaction will be coming through based on its earnings. Let's get in Vinay to, give us an update on how the quarter has panned out. Vinay, good morning.
Hey, good morning. So, net profit of the company rose 50. Hey, good morning. Net profit rose 51% on higher sales, and the sales in the quarter rose 18% to 14.6 lakh units. So you can see that there is a rise in net profit because of the sales. But if you look at the margins, there is a benefit there as well, because margin expanded to 49 basis points over the last year in the quarter. So this margin expansion came on the basis of lower commodity costs, higher share of premium bikes in the overall portfolio of the company, and price hikes taken over the last 1 year. So this margin expansion has really helped the company, and they have said that this margin shape will allow the company to invest more in future electric businesses, as well as the part and merchandise businesses, in which it already announced an investment of 6,000 crores. So this investment, they said that it will be used to expand the parts business, where the SKUs, the stock keeping units right now are around 26,000, and they have said that they will expand it to 37,000, around that mark. So, and if you again see at the electric vehicle portfolio of the company, that is also going to expand, because the company has said that it will launch more scooters in the mid and the affordable segment. So if you look at the opinions of the brokerages, MK has given a reduced rating to the stock, because they believe that the stock pricing is including the recovery of the two-wheeler market in the rural areas that is already priced in the stock price of the company. While Jefferies has given a buy, they believe that the recovery will play out and it will benefit Hero MotoCorp ultimately.
Right, Vinay, thank you so much for getting us that review on Hero MotoCorp. And we move on to the other Nifty company, which also announced earnings, and that is ONGC, where we have Mihika joining us to give us an update on that one. Mihika, good morning.
Good morning, Agam. So yeah, ONGC on a standalone and Q-on-Q basis, it was a revenue beat, but it was a profit miss. Revenue fell marginally to the cuts of 1%, while EBITDA margins did fall, and EBITDA fell 13.3%, and the net profit fell 6.7%. The company also declared its second interim dividend of ₹4 per share. The record date set for the same is Feb 17, and brings the dividend yield to around 5%. Now, the weaker earnings were on back of two major things. One was the production output. Now, crude oil production for the quarter was 3.3% year-on-year down, and gas production was also down 4.3% year-on-year. Now, the lower productions in the 9 months as well as the quarter was on the back of the Panamukta offshore platform being shut down, the cyclone Biparjoy in June 2023 that did have after effects, a pipeline leakage in one of the key southern assets, as well as natural declines from mature fields. Whereas the company has informed that they will counter to the mature field production decline, and productions to commence of the upcoming projects, and the KG98 to production will start in Q4 itself. And the second is the realizations, where crude realizations are down 6.45% year-on-year at $81.59 per barrel, and the gas price was also down 24.2% year-on-year at $6.5 per MMBTU due to the revised APM gas policy that capped the realizations that the company could have.
All right, Mihika, thanks so much for getting us that review on ONGC. And on to another story that we are keeping an eye on, an update perhaps here. And that's Paytm. The saga here continues, where we understand the sources have told NDTV Profit that the Reserve Bank of India may consider a review of the February 29th deadline, where Paytm Payments Bank, and the question really is, what's going on here? Well, let's get in my colleague Vishwanath Nair to join us and give us an update on the same. Vishwanath, good morning. What are you gathering from your sources?
Good morning, Agam. So what sources are telling us is that the Reserve Bank of India may consider a review of this February 29 deadline for Paytm Payments Bank. Now, remember that on the 31st of January, the Reserve Bank of India brought in strict business restrictions on Paytm Payments Bank. Bank. Essentially, after the 29th of February, no customer can top up or put fresh deposits or conduct any credit transactions in their Paytm Payments Bank accounts. What they can, however, do is use their existing balances till those balances are extinguished. Currently, what is being noted is that the outflow from those deposit accounts has not been very, very fast. The Reserve Bank of India is going to take a review of how these deposits are flowing out of these accounts over the course of this week, and before the end of this week, the RBI will tell us if they intend to extend this deadline or not. Now, this is entirely dependent on whether the money actually moves out of these bank accounts. If the flow is satisfactory, then the RBI may not feel the need to extend the deadline beyond 29th of February, especially with regard to dormant accounts, because that's a problem for Paytm Payments Bank account that has been going on for a very long time. In case of dormant accounts, the RBI has instructed Paytm Payments Bank to create a structure where money can go back to their source accounts without any restrictions. Typically, in a dormant account, you cannot conduct any kind of financial transactions. So just in case of money flowing back to the source accounts, the RBI has given a bit of a leeway for dormant accounts. Overall, this decision-making process is going to happen over the course of this week. We'll get to know before Friday what the RBI intends to do.
All right, Vishwanath, thank you so much for getting us that update. A lot more coming up as far as Paytm is concerned through the course of the week and, of course, through the month of February as well. We'll be keeping an eye on February 29th. But on that note, we slip into a short break. But on the other side, we get you back a lot more about stocks and a lot more. Stay tuned in.
फिस्कल डिफिसिट के नंबर को आपने अच्छे से मैनेज कर लिया तो थोड़ा खर्च करने का रूम था, चाहते थे तो कर सकते थे आप, लेकिन वो उस चक्कर में भी या उस लालच में भी आप लोग नहीं आए। मेरा कहना आपके पास स्पेस था, फिर भी क्यों नहीं किया?
सबके मन में ये ज़रूर एक भरोसा, कॉन्फिडेंस था कि जनता समझ रही है कि जो योजनाएं हम तक पहुंचा और सरकार जो ट्रांसपेरेंट तरीके से किसी लालच में नहीं पड़ा और कुछ लीपापोती करने का कभी कोशिश नहीं किया, ऐसे सरकार जिसका समर्थन होना चाहिए हम देने को तैयार है, ऐसे मूड में देश है।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Welcome back, and now we take a look at all the stocks which are in the news. We have Mahima joining us to give us that list. Mahima, good morning.
Good morning, Agam. So firstly, we have the JSW Group, where the group is set to have a big manufacturing EV plant in Odisha, where this OEM plant will manufacture not only electric cars but also EV components. The 50 gigawatt EV battery plant will be the world's largest single location project, and it aims at manufacturing 1 lakh electric commercial vehicles per annum and 3 lakh electric cars per year. The investment is aimed at approximately 40,000 crores, and the outlay expected from this project from the Pradeep facility is expected at approximately 15,000 crores, and this will help create approximately 11,000 jobs. So this is a big one for JSW Group. Then we have Vedanta, where the company has completed repayments to its bond holders, where earlier the deadline was extended till 2029. The maturities of $3.2 billion in bonds. Earlier there was a proposal to restructure the 4 series of bonds, but now the group has repaid them. Then lastly, we have LIC, where they have received an income tax refund of approximately 25,400 crores. Previously it was expected that the refund will come to around 16,000 crores. However, the order has now come out and the refund stands at 25,400 crores. So this will have a huge impact on their bottom line in Q4. And this refund basically pertains to the interim bonuses to policy holders in the past 7 AYs. So LIC will also be in focus in trade today.
Mahima, thank you so much for getting us those updates, and we move on to the other important story today. The approved list of models and manufacturers for solar panels will be reimposed from the 1st of April. This is as per a memorandum from the Ministry of New and Renewable Energy. We have Vikas who's joining us with the key details. Vikas, good morning.
Yeah, good morning, Agam. You're right. This ALMM will be reimposed from April 1, 2024, that is this year, mostly because the purpose of ALMM was basically to give boost to the Indian manufacturing, domestic manufacturing, especially after the skirmish that happened on Chinese border. India wanted to focus on Atmanirbharta. And as of now, they have kind of, given or approved almost 40 gigawatt of projects where, manufacturing will take place in India. But after COVID, what had happened was not too many domestic manufacturers could put up their projects, and India's demand for these projects, as in solar projects, was growing, and especially if India has to meet its 2030 target, so it needed more of manufacturing capacity. So it was put in abeyance last year, so that Indian developers could utilize most of these projects, most of these panels, which were mostly coming from Chinese suppliers, for their projects. But as of now, what's happening is that India's manufacturing capacity is still not good enough to meet this requirement. So it needs to be seen how India copes up with this ALMM. As of now, we have 40 gigawatt of manufacturing capacity, but it's not operational fully. So it will take another 1 to 2 years. So some of these solar panel manufacturing companies in India will benefit because of ALMM, but it needs to be seen how projects will catch up. So Vikram Solar, Vari Solar's renewable portfolio, which is listed, that Adani Solar as well as Tata Power Solar are likely to benefit from this ALMM.
Absolutely, and we'll continue to keep an eye on a whole host of these companies. A lot of them are also in the listed space. Vikas, thank you so much for joining us and giving us those details. And on to the earnings which we are tracking. Remember, we are moving into the final leg of this earnings season for the quarter gone by. We now have Varsha who's joining us to give us a list of that we can keep an eye on today. Varsha, good morning.
Good morning, Alex. So let's start with PI Industries, where you see revenue was up 17%. Now this was led by 13% growth in agrochemical exports, which was led by volume growth and newly commercialized projects. But if you see margins, so margins are at 29% versus 25% last year. Now, of course, the reason is favorable product mix and operating leverage, but the main reason behind this margin improvement is one-time impact of recovery of theft material, contributing 300 basis point improvement in EBITDA. Then we have Inox Wind, where revenue is up 2x, while if you see margins at 18%. Now net profit is almost 1 crore versus losses last year. Also with the single largest order win of 1500 megawatt, order book stands at almost 2.6 gigawatt, and they have target to achieve net debt-free status for consolidated in the next few months. Then lastly we have Honasa, where you see revenue uptick of almost 27%. Now this was led by volume growth, and the same store sales growth if you see is almost 31%, which has led to increase in EBITDA and net profit, which is up almost 3x.
Right, Varsha, thank you so much for getting us that list of all the earnings that we can keep an eye on. But those are not the only earnings that we want to watch out for. We have more, and now we have Harsh joining us to give us that. Harsh.
Well, yes, absolutely, Agam. Let me start off with the likes of a Bandhan Bank. In terms of numbers, a very strong set coming in. You're looking at NII growth, which is up 21% year over year. You have profit growth as well. On the back of a lower base, of course, but it's a strong surge when it comes to profits. Your NPA ratios continue to improve, and the bank continues to grow. Second consecutive growth quarter for the bank, and that's one big positive which will spur probably the stock today in trade. So keep your eye out on that one. Let me quickly move on. You have also the likes of a Campus Activewear. And there you go, the numbers there, the revenue, which was up just about 1%, but you look at that EBITDA number, the EBITDA is down around 11 bips. The EBITDA number has come in slightly higher, and the margins, there you go, they've taken a knock of around 781 basis points. So that one down to just about 12%, profit taking a knock of around 50% year over year. Last off, there's Tata Power, up 4% in terms of revenue, steady state. You're looking at EBITDA, which is higher by around 4% or thereabouts. You're seeing a net profit, which is up just about 2%. It's a miss. On most counts, we were expecting margins to be around that 18% mark, but that's a miss. So keep Tata Power on your radar as well.
Right, Harsh, thanks so much for getting us that roundup of the other earnings that we also need to keep an eye and on our radar. And from there on, we move on to a preview. Well, we have Mihika, who's back with us to give us an idea about what we can expect from Coal India. Mihika.
Yes, so according to the Bloomberg estimates, revenues are expected to rise 10% year on year, while EBITDA and EBITDA margin is EBITDA is expected to fall 5% year on year, and net profit to rise marginally by 0.2%. Higher volumes, improved rake availability, and demand growth from both the power and the non-regulated sectors are expected. But when it comes to blended realizations, they are expected to fall on lower e-auction prices. Coal India saw 10% sequential growth in its offtake in December, and the offtake is up 9% year on year in the 9 months FY24. Important management insights that we do need to watch out for is the guidance on FY24 and 25 production and the outlook on the e-auction volumes and premium.
Right, Mehika, thanks for getting us all the things that we need to keep an eye on as far as Coal India's earnings are concerned. And from there on, we talk about the primary market, and it's going to be a busy one because we have 4 listings this week. One tomorrow, and that is APJ Surendra Park Hotels. Of course, it's in the hotels business, where its issue price will be it's been issued at about 155 rupees per share, and the issue is about 920 odd crores worth, and it has seen a substantially high amount when it comes to subscriptions, oversubscription worth 63 times. Moving on, day after we have 3 earnings, three listings on the bourses. One is Rashi Peripherals. This is a distributor of computer peripherals, and this is where the issue has been priced at about 311 rupees per share, and this is a 600 crore IPO, and we are looking at once again 60 times in terms of subscriptions, so that's a high one as well. And then we have 2 small finance banks coming through. So Capital Small Finance Bank, where the issue price is at around 468 rupees per share, and the IPO is worth about 520 odd crores, subscribed at 4 times. And Jana Small Finance Bank, that's the one where we have about 414 rupees per share and an issue of around 570 odd crores, and of course that has also been subscribed at 19 times. So oversubscription for all the 4 debuts that we will be keeping an eye on as we move in through the course of the week tomorrow and day after. And with that, it's a wrap on this edition of All You Need to Know. But don't go anywhere. On the other side, we get you India Markets Open. Stay tuned to NDTV Profit.
अंतरिम बजट के बाद वित्त मंत्री निर्मला सीतारमण का ये पहला इंटरव्यू है। प्राइवेट नेटवर्क में ये पहली बार हमसे बात कर रही हैं।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit. Ask Profit.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Hello and welcome to India Market Open. It's bright and early on Monday morning, guys. No big events except earnings. I guess this is the last leg of the earnings season, so there'll be lots of reaction and lots of managements we'll be talking to.
Yeah, I think the global cues, though, are one to watch out for, and that's reflecting perhaps in the implied open.
Yeah, but frankly, we can do with a bit of a quiet, right? I mean, earnings season, budget, policy. I think we need a break. So I'm happy that this earnings season is coming to an end this week.
Elections are coming.
Yeah, but that's some time away, Tamanna. Give us a chance to breathe. Give us a chance to breathe.
Then the full budget in July.
Give us a chance to breathe.
We have 2 months at least. At least 2 months. let's enjoy the moment.
All right. So, well, we may have, the wish of a quiet day today, but it's unlikely to happen because if you look at your implied open, you're looking like you're off to a positive start today. And where that's perhaps coming from, one of the factors is a very positive outlook as far as the US is concerned in terms of the economy, blockbuster results. Pretty much 80% of your S&P 500 listed companies have beaten estimates. It's a tech rally also which has boosted Wall Street. Pull up the NASDAQ as well, was up 1.5% on Friday. The S&P 500 closed above the 5,000 mark for the first time. And one of the things that has really, lent itself to those positive cues is the downward revision of the December CPI data, which was 0.3%. Then the government comes and says, no, it's actually 0.2%. So you're seeing inflation in that sense trend downwards, and that's what boosted tech stocks as well. The 10-year was flat as a result. Crude is one to watch out for. Crude has slid back after rising over the weekend, but the tensions, the underlying tensions which are hitting crude prices definitely continue. The latest peace proposal by Hamas has been rejected. Israel is on with its entire operation in Gaza, so that's concerning. Asia is quiet for sure. China is going to be shut the whole week. A lot of Asian markets are closed, but we can pull up the Nikkei. Japan is open, and perhaps some trends from there. Japan and Australia, pretty much all that's showing some action in Asia. I'll quickly take you through the fund flows on Friday before I hand back to Neeraj and what we saw over there. Remember, it was not too much in terms of volumes on Friday, and FPIs were buyers there. 142 crores is what they bought, and DIs sold 422 crores. The big volumes, though, have not come out yet. Markets are looking for the next cue, Neeraj.
Yes, just before we get to trade setup, I think the big thing that also came out, and everybody's talking about the India valuation, the Morgan Stanley note on India is very strong, right? I mean, Jonathan Garner going out there and saying that India is the top EM pick, and within Asia as well, India, Japan kind of stay the top ideas. And amongst all the things that he says, I mean, something that a few other people have warranted, but when Jonathan Garner says you stand up and take notice, is that premium valuations are warranted by the superior fundamentals that India has. So I thought
so
that
the Patek Philippe analogy continues.
In some sense, right? Yeah. And this is like Jonathan Garner sending out that Asia note to all their clients and saying that India is very likely to remain expensive, structural outperformance, so on and so forth. I thought that note is very interesting, independent of the Sensex or the Nifty targets that they may put out, but just the fact that there are people saying that India will remain expensive.
While Jonathan Garner says that, Mark Mobius as well, that I spoke to on Friday, was of this very same opinion. He said, we hold 25% India exposure, which is the single largest exposure to a country in his emerging market fund. He said, while we are valuing companies and looking at India as an expensive market, a lot of it is not very forward-looking. So the growth is so strong that those valuations are justified. But just a quick one on, while those are the two guys who are very bullish, CLSA.
No, sorry, just a word on Mobius, nothing else, but people tend to forget, people who are newbies tend to forget that the original EM expert is Mark Mobius.
Is Mobius. And he did say, he said, I was in the country a few months ago, and we were talking about real economy, and it's funny, it keeps coming back to me in various forms, and he said, historically, while I've always made a trip to India, I can significantly see a difference. You can see things changing, the vibe, the whole conversations have actually changed. But talking about expensive and not expensive, I think CLSA put this article out, their report last month, where they say that India stands now to be the most expensive market in the world. They also said it's the only market that's trading in the top decile of its historical trading range. CLSA, Morgan Stanley, well, the market's clearly weighing both and consolidating as expected.
So you can argue that. Actually, the trade setup, on the trade setup, that's what I think, because main indices last week had a very quiet week. It was only PSUs which kind of were to the fore. And I dare say, just looking at the numbers, ONGC, SJVN, Midhani, SCI, etc.
Not great.
Let's see if there's a bit of a breather there on the PSU pack today and maybe for the rest of the week. The other aspect is that a lot of people have been talking about is, can there be a V-shaped recovery in private banks? The weightage of private banks, guys, by virtue of the selling that has happened, has come off by nearly 500 basis points on the Nifty. So that's the extent of damage that has happened. Can there be a V-shaped bounce back? Now, surely the argument around valuations is fact, but if you look at the delivery-based selling that happened last week as well in almost all the private sector banks, and not just HDFC Bank, I think there is an issue there. The delivery-based selling leads one to believe that the V-shaped recovery is not necessarily very, very likely. Sure, you could buy them right now. They are great valuations. 1 year down the line, you'll be laughing your way to the bank, hopefully. We all hope so because we want banks to perform. But the V-shaped recovery from a trading perspective may not necessarily be the case, even though the whole of last week I've been saying that these are levels from where the quant indicators indicate the market is ripe for a bounce back. May not be banks though. Lastly, just from a sectoral perspective, news flow results, Milake, Pharma, probably the sector of the day today for right and the wrong reasons, and cement for the kind of results that have come out, guys. I mean, the stocks have moved up a little bit, but not surprising as we reach the busy end of the construction season, that you see cement dispatches month on month go up, and therefore the stocks continue to see more activity.
Yeah. A lot of stocks really in focus today, but let's start with the big ones
to watch. So you've had, I'm just going to add auto to that list, right? Again, fantastic numbers. So auto sector along with pharma could be one you want to closely watch out. We'll quickly take you through the big earnings. Two big ones, one from the pharma, one from the auto pack, but I'll start with Hero MotoCorp. Fantastic numbers to say the least. We generally seem quite impressed with what we've seen on Hero MotoCorp. Their revenues were up substantially, up 21% to come in 9,724 crores. EBITDA was up nearly 48%. Margins have expanded substantially, and I think that is what the street is going to be very excited about. It's up at 14% versus 11.5% that was seen in the same quarter last year. Well, what stood out for us on Hero MotoCorp was the fact that most brokerages are optimistic. They've all upped their target price on Hero MotoCorp. We've seen Jefferies and Nuvama for now. Both those target prices now stand at 5,650 and 5,600 respectively. Well, they're poised. What brokerages believe is that Hero MotoCorp is poised for a strong growth going ahead on back of two-wheeler demand. Premiumization and EV are the two verticals or segmentization that is going to work out for Hero MotoCorp going ahead. Free cash flow as well is expected to remain strong. So that is the Hero MotoCorp story. No upgrades as such, but increase in target price is what's going to drive the counter going ahead. And the fact that the free cash flow and earnings have been strong, margins are good, the counter will see some buying in early hours of trade today. Well, let's move on from Hero MotoCorp to the other one that looked pretty fantastic was Honasa. Their revenues were up 27% to come at 488 crores versus 382. EBITDA was also up very sharply at 34 crores versus 11.8 crores. Margins here to have expanded sharply by 395 basis points to 7%, so versus 3.08 that we saw in the same quarter last year. A couple of things that stood out for Honasa is their same-store sales have actually grown quite substantially, up 31%. Stronger volumes have led to higher growth. Better festive demand is what pushed this quarter for Honasa. Industry growth in line with industry. What you also want to see here is that, and this we've seen quarter on quarter for Honasa, capital efficiency. The fact that they're sitting on a huge pile of cash helps them with their working capital cycle, which continues to stay at -6 days. So capital efficiency is what has been a pretty impressive factor for Honasa, and that continues to play ball for them. The stock went home with gains of 4% on Friday. Won't surprise me if we get a good gap up on this one too. The other one that's definitely on our radar, and I'm excited about this, is Aurobindo Pharma. Very, very strong earnings for Aurobindo. Revenues were up 14.7% at 7,351 crores. EBITDA was up 68% to come in at 1,600 crores. Margins also expanded substantially from 14.8 that we saw in the same quarter last year. You've seen an expansion of 22%. Net profits also were quite high, at about 92% higher for the quarter. Remember, Aurobindo since December 21 hasn't done margins such as these, so that is what we're excited about. Over 20%, they've not managed to beat that since December 21, so the markets will be excited about that with Aurobindo on the margin front, and profit as well has been the highest ever posted by Aurobindo Pharma. So the stock in early trade, like Neeraj and Tamna said, Pharma is going to be a space to watch, and Aurobindo could be the leader of the pack this morning, guys.
Yeah, and Aurobindo Pharma has gone through a lot of ups and downs as well. There was some negative news flow in terms of observations, etc. So all said and done, the numbers may give it that boost, but not everything is hale and hearty. And ONGC definitely may see some negativity. Now, one thing to keep in mind is that, remember, crude prices have been softening, and that's generally not very positive for ONGC. So you did see, and we're taking standalone numbers here. I want to make a point of that. Revenue is down 1%, EBITDA down 13%. Margins have shrunk fair bit, about 600 bips, and net profit is also down about 6.7%. Couple of reasons. Remember, the gas policy has capped prices. On the other hand, there were some weather-related disruptions to their work. And having said that, though, Citi has retained a buy on ONGC with a 285 rupee target. They say that the results are weaker than expected, like we've been mentioning. The EBITDA is below estimates, and oil and gas production trends have been slow. Having said that, their KG production ramp up, which has started pretty much last month, will start showing benefits on Q4. So that's one to remember. There could be an upside going forward. So positive view on high earnings visibility and attractive dividend yield is some of the points that Citi sees on the plus side. SJVN is another one, I would say. And Neeraj was talking about how for a lot of companies which have run up on the back of promises, the numbers sort of give a clearer picture. So revenue is down about 1.5%, EBITDA down 3%. The margins have narrowed to about 67.81 versus 68.91, so about 112 bips. And net profits, though, are down a fair bit, down 51% at 138.97 crores. So sharp cut over there. There's an interim dividend. Bloomberg put out a story about how JM Financial Institution has cut recommendations on SJVN to sell from a hold, and the target price has also been set down to 72 rupees. So I would watch out for SJVN as well. Of course, they've trailed all of the estimates. Divi's Lab is one, though, which looks, I would say, positive. Revenue is 8.6%, and pharma definitely is a larger trend that we've been seeing over here. Revenue is up 8.6%, EBITDA is up 19%, margins also looking healthy, net profits are up 17%. Nuvama says they have reduced their take on Divi's Lab, but they've increased the price target to 3,200 from a 3,070 earlier. Revenues have disappointed according to Nuvama. No meaningful margin recovery, and pressure in generics and higher OPEX operation expenses has led to EBITDA margin miss. So quite a few. I'll come back with more, Neeraj, because so many stocks to discuss this morning. But what's your top 3 or top 4 on your list?
Yeah, but just a word on Divi's. Much like Loris and much like some of the others, the CDMO opportunities are taking time to fire. And while Nuvama have done what they've done, Elara, Systematics, and one more, all three are negative on Divi's because of this performance. And in fact, I think if I'm not wrong, the Systematics note by Vishal Manchanda speaks of a price target which is 30% lower than the current market price as well. So much like Loris, but maybe as Harsh was pointing out, this is the first quarter of margin recovery for Divi's. So could be interesting to see if the markets reward that or do the markets punish the no growth in sight problem for Divi's. But Tamanna mentioned pharma and PSUs. I'm carrying forward that baton. A lot of weak numbers. So Midhani is the other one. Much decorated, very strongly favored stock, but look at the margin contraction there. Revenues were up 8%, which is okay. I mean, single digit growth, nothing to write home about, but okay. But EBITDA down 45% for Mishra Dhatu Nigam, as a result of which margins contracted 1,400 basis points from 28% to 14%. Now, this is not a good print by any stretch of imagination, even if the valuations were good, which I mean, they're not necessarily cheap. And net profit down 67%. So very likely that Midani will have a correction today, in addition to SJVN. SCI, everything else was okay. Revenues were down 10%, which is not great, by the way. One would have hoped that in a quarter which has seen probably shipping rates move up because of all that's happening around Red Sea, but maybe there are disruptions, what have you. But SCI, revenues down 10%, EBITDA down 11%, margins flattish, net profit down 50%. And for a stock that really rallied from nearly 180 to 260, 270, and then has come back, this is not a good print. Very likely that might see a bit of a reaction as well. And last stock, and then I'll come back with others, but the last stock is on my radar is Campus Activewear. Now, we know what's happened to Bata, we know what's happened to Relaxo. Certainly, the footwear companies, which are not necessarily premium focused, are seeing an issue. Campus revenues were up 1.37, so very blah, if you will. But as a result of that, the margin narrowed to 781 basis points, by 781 basis points to 11.92 versus 19.74%. And by the way, the revenue numbers are kind of in line with, mota-moti in line with estimates. The margin expectation was 20.8 and they've come in at 11.92.
Okay.
PAT at 25, expectations of 57. So very bad performance, very likely Campus too, like Relaxos and like the others Batas have done. Might have a bit of a reaction.
I think one that may have a good reaction would be PI Industries.
Waiting for one.
Very,
good number.
very good number there. It's been a multi-bagger in the last couple of years. It's been a favorite for the street. Let me take you through what those earnings are. Revenues were up 17% to come in at 1,897 crores versus 1,600 crores. EBITDA was also up nearly 34% to come in at 553. Profits were up 28% at 448 crores versus 351. They've also approved an interim dividend of 6 rupees per share. Couple of things that stood out for PI Industries is their strong revenue growth is what has pushed them up for this quarter. Margins have also aided PAT. Very, very solid margins have come in at 27% versus 25% in the same quarter last year. CMS, remember, is the key driver for its earnings, and that's really what's played out for the company in this quarter. 13% growth was seen in the agrochemical exports, which was again led by a strong product mix and by volumes. What we did see on margins, which is worth a mention, is a one-time impact of a theft recovery. So that contributed about 300 basis points to the margin. So while the margins look very solid, a function of that is a one-off item for PI Industries. So the top line numbers are looking great. There is volume growth, there is revenue growth. They've also talked about aggressively expanding. They've spent 763 crores on acquisitions, pharma acquisition, the tune of 500 odd crores. And remember, the counter was under pressure because of Chinese players entering the pro-sulfane business, which is a key product for PI Industries. But the markets, of course, the management did indicate that this is not going to be a problem because they do hold the key licensing on this one till FY28. So good news and bad, but the good news is that good numbers, and while you'll have listed a few bad ones, this one hopefully should get a little bit of a pop-up this morning.
I wish I had another great one to talk about next, but
I do, but you can quickly finish yours. Yeah, no problem.
So you go good, bad, good.
Good, bad, good. Okay. So Tata Power. Tata Power is one I thought we should bring up, and another a bit of a blah quarter. I'm going to use Neeraj's word of the day, blah. So a bit of a blah quarter. Revenues up though about 3.5%, nearly 4%. EBITDA is also doing okay, but just look at the CLSA note where they're talking about the stock being ahead of its fundamentals on a frenzy of power stocks, and that's really what will perhaps give it not too much excitement. Weak coal prices is a key risk to its EPS, though there is a positive in terms of Odisha discoms and pump storage. They have upped the target though to 249. So Tata Power is one that I would watch out for, and we're going to be speaking to them ahead on the show as well. Should we quickly talk about 197? Just because
quickly, but we are out of time completely.
Because there is no relenting to the news flow on it, and we've broken a story this morning about how that 29th Feb deadline may be extended. That could be looked as a bit of a positive.
For Paytm shareholders, cross fingers. Just very quickly, two stocks that might react positively: Inox Wind and DOMS. Very good numbers from both, margin expansion from both. So watch out for both Inox Wind as well as DOMS. Those are two names that might react. But we got to go across to Agam now to try and understand what is there on editor's cut today, because Agam, are we talking about something good? Because we highlighted a lot of bad numbers right now.
Yeah, we're talking about something really good, in fact. And a bit of an outperformer too. And by that I mean State Bank of India. What's really interesting is that State Bank of India has gained 20% from its low made in 2024. And if you take that date where it made its low in 2024, the bank Nifty is flat. So this is a clear outperformer. The question really is, what is it that's really driving State Bank of India? In fact, in the last 3 odd sessions as well, it has moved up by as much as 12 to 13%. And a lot is at foot. And for that, I have with me Vishwanath Nair as well as Harsh Saita, who's going to guide us and perhaps tell us a little more about what could possibly be behind this move. Vishwanath, I'm going to start with you. What do you have for us?
So I'm calling it the giant's age because SBI being the largest lender in this country and moving at the pace that it is, everybody else is sort of in awe of where SBI is at this stage. Yeah. If you look at some of the negatives now, of course, Q3 results came in about last week, and the numbers did show a bit of a disappointment. Primarily, the net profit did go down because of one-time wage-related and pension-related provisions that they made. This, the bank says, is likely going to normalize going ahead, but it's obviously a disappointment. The other thing was that even if you adjust for these one-time hits, the net profit's up only about 1.5% year on year. That's not looking so good.
Yeah.
If you look at fresh slippages, they are up largely driven by retail NPAs. There's lower recoveries and upgradations that have happened in Q3. So those are the slight disappointments as far as the Q3 numbers are concerned. But of course, for a bank like SBI, you need to look at a wider range of numbers. And for me, the moonshot sort of a situation for SBI is the fact that FY23, they ended at the decade's best credit growth, 16-odd%. It's tapered off to close to 14.5%, 15% now, but it doesn't look like it's going to slow down further from that point of view. Asset quality, best in recent history. You're seeing that despite the regulatory tightening on unsecured loans, the bank is continuing these unsecured loan growth at a reasonable level, about 16.5%, which is not too bad as far as SBI's size is concerned. You look at any kind of the capital adequacy. Now, of course, during the third quarter, there was a hit because of the RBI's unsecured loans, unsecured loan norms. 123 bips dip on a quarter-on-quarter basis. But what the bank is guiding is that going ahead, there's going to be improvement on the capital adequacy simply because of the business, the nature of the business that they're in. Investment book re-valuation that will come in from 1st of April. That will boost capital adequacy. You've got ROE outpacing credit growth. That's going to help with capital accretion. These things are working in favor of State Bank of India.
Right.
Business per employee, now that's the important bit, because when you talk about wage-related or pension-related provisions, you have to look at what these provisions are leading to. As far as SBI is concerned, that business per employee number is at about 30 crore per year. That's a lot. That's a very high number. Considering, of course, SBI's large employee base, and they're not seeing that kind of high attrition that some of your private peers are seeing.
Right.
One point that I want to mention is on the corporate credit growth. Now, there, SBI is beating the private sector peers just hands down. There's no way that a private sector bank in the current business macro environment can compete on pricing with SBI. SBI is sitting at a reasonably healthy credit deposit ratio. They've got liquidity reserves, 131% or LCR. They've got, of course, deposits are still growing, 14.5%. They've got that in place. So unlike their private sector peers, that cost of capital or cost of deposits, as well as the lack of liquidity or tighter liquidity situations, does not seem to be affecting SBI that heavily. 4 lakh crore worth of additional SLR, unencumbered SLR holdings. All of that is just free liquidity lying around on the balance sheet for them to grow much faster. Right. But I'll move to Harsh for any view on the valuation of the bank.
Yeah, absolutely, Vishy. So before I go to valuations, let me just add a little bit to what you've said. I think, Vishy, what we were speaking about last evening as well, with regard to ROAs, that's going to hold the key, right, when it comes to SBI, including its valuations and how valuations are to be looked at. Now, ROAs have breached the 1% mark. They've come off that 1% given the one-offs that have happened. Probably another quarter of a bit of pain with regard to provisioning, because there'll be 5,400 crore of provisioning which will happen in Q4. And maybe that's a bit of an overhang with regard to ROAs. But can ROAs sustainably be above that 1% mark? At least analyst estimates seem to suggest that it will be, because they are penciling in a profit after tax FY25 of 70,000 plus crore as per Bloomberg estimates, average analyst expectations. And therefore, you will have that 1% plus ROA continue to come through at least in FY25 as well as 26.
Sure.
Right, which is a big plus. As you said, credit growth will be solid, but you know, the one other key perspective to this is with the ROA, I also want to try and comment on the margins, because margins, it seems, have bottomed now, and therefore there is very little downside scope for ROAs, right? That's just the general sense that we are getting, of course, based on estimates, etc. Now, with regard to valuations itself, you're seeing valuations at roughly 1.4. You're looking at PSU banks which have rallied substantially. Probably on a low free float as well, so let's give it a little bit of discount there. But at 1.4 times trailing 12 months, it's looking extremely good. And at 1.1 times forward, it's looking quite attractive basis your last 5-year average, which is roughly 1.4. So you're trading at your 5-year average, but you're looking at probably a year in which banks have had the best couple of years of run, and the runway seems to be quite solid with regard to the next 2 years in terms of visibility. So, so overall, it looks like despite this run-up, valuations still seem quite decent. It doesn't seem to be stretched in any way, especially for SBI as well as a couple of other larger ones like Canara Bank and Bob. But especially with regard to SBI, given the size.
Yeah, I just want to add one point, Agam. You know, during the results announcement, the management was very clear. They don't need the capital. They're about 13%, 100 bips higher than the regulatory minimum. They're fine as far as the growth is concerned. If they need to, they're ready with a capital raising plan. You know, just listening to the valuation bit, I'm thinking that if there was to be some kind of a QIP or an equity raising plan, SBI is going to be pretty well placed as far as your capital position is concerned, as well as market valuation is concerned. This is important in the current environment because most banks are seeing some amount of you know, movement on the valuation front, simply because business has changed. Last 2 or 3 years have been a period of fairly easy liquidity. Now it's tightening. Now businesses are sort of becoming slightly more complicated on the banking front. So SBI may be best placed to capitalize on any future growth.
Sure. You know, I just want to put things into perspective because we've seen a sharp divergence in the way SBI has moved and HDFC Bank has moved. And it's natural for anyone to compare the private sector banks with the state banks. How do you think this pans out? What do you think investors have at the top of their mind at the moment?
I'll tell you what, during the analyst call that SBI held after its results, they said that they have headroom to grow the balance sheet by about 7.5, 8 lakh odd crore. That's a massive number, right? HDFC Bank is saying that every 4 or 5 years, they're going to add another HDFC Bank. Well, here you have SBI, which is doing pretty much the same thing and at a much higher base. So if you look at it from that point of view, there's a lot of firepower that's left with SBI at this stage. Now, I want to caveat this with, we have seen this in the past. And it didn't really pan out the way people planned it, especially, you know, chief of all these banks. Let's see what happens. We can't write off HDFC Bank yet because at the end of the day, it is one of the most efficient lenders that we have in India. Can't write off HDFC Bank as SBI doesn't look weak in any comparison at this point.
Well,
And Agam, on valuations, you're looking at a sharp divergence. You're looking at HDFC Bank trading just above 2 times price to book, and you have SBI trading just above 1 times price to book. So from a valuation perspective, SBI is probably trading at a 50% discount.
Right, absolutely. So, of course, to a certain extent, the state bank valuations have always been, you know, low as compared to the private banks. But a lot of factors, a lot of points to ponder about when it comes to State Bank of India, which clearly is at the moment in the driving seat, quite literally, even in terms of stock prices and the way things have panned out over the course of the last few days in the Bank Nifty, among the Bank Nifty constituents. The question really is, where do we go from here, and how does the private sector bank, sector play out in going forward? Well, these are questions that will be answered down the line. But Harsh and Vishwanath, thanks for joining us and getting us that perspective. And with that, it's time to slip into a short break. But on the other side, we continue with markets coverage. Stay tuned to NDTV Profit.
Presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity. Co-powered by Bandhan Bank, आपका भला सबकी भलाई.
फिस्कल डिफिसिट के नंबर को आपने अच्छे से मैनेज कर लिया, तो थोड़ा खर्च करने का रूम था. चाहते थे तो कर सकते थे आप, लेकिन वो उस चक्कर में भी या उस लालच में भी आप लोग नहीं आए. मेरा कहना, आपके पास स्पेस था, फिर भी क्यों नहीं किया?
सबके मन में ये जरूर एक भरोसा, कॉन्फिडेंस, ताकि जनता समझ रही है कि जो योजनाएं हम तक पहुंचा और सरकार जो ट्रांसपेरेंट तरीके से किसी लालच में नहीं पड़ा और कुछ लीपापोती करने का कभी कोशिश नहीं किया, ऐसे सरकार जिसका समर्थन होना चाहिए हम देने को तैयार है, ऐसे मूड में देश है.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Welcome back. You're watching India Market Open. A quick check on how implied Nifty is doing this morning. It's expected to see a gap up as we gear up for trade. But remember, it's going to very likely could be a day of consolidation with stock-specific action that will be driving the street. There are also a whole bunch of brokerages that have come out with their reports on PB FinTech in particular. Anushi is joining with more details on that. Anushi?
Right. So on PB FinTech, Jefferies has come out, initiated a buy over here, implying about a 23% upside at a target price of about 1,150. So they are expecting about a 30% CAGR growth over the next course of 2 years, that is from FY25 to 27, and they are backing this by, and also they are backing of 5x EBITDA jump expectation from the 23 to 27 period. So some strong expectations over here. But on the revenue front, they are seeing about a moderation from their earlier 30% CAGR growth to about 22% CAGR growth over FY24 to 27 after the new RBI measures that have taken are in place. Again, key risk over here continues to remain on the regulations that are still evolving in this space, and also strong competition which might emerge from Geo. Another one that I want you to focus on is also Apollo Hospital, in which Citi has maintained its best pick among the hospitals, wherein it has maintained a buy at about 7,670. This was back on the back of Q3, which was mainly largely in line with expectations. While the EBITDA was impacted due to the seasonality and cyclone impact, the management continues to maintain its 200 bips margin expansion guidance over the next 18 to 24 months timeline, and sees a break even for its online 24/7 business. So that can be on radar. Again, UVMA has maintained a buy on Apollo Hospitals as well, with a target price of 7,500 on the back of its strong hospital and offline pharmacy growth. So definitely these two should be on the radar today.
Right, Anushi, thank you for that. Apollo Hospital is definitely one to watch out. All-round positive house notes on the numbers as well. Now, another set of stocks that we must talk about this morning: PI Industries, Inox Wind, and Honasa, that came out with its earnings. We mentioned a few of them briefly in our trade setup, but Varsha joining in with more details. Varsha.
Good morning, Tamanna. So let's start with PI Industries, where you see our revenue was up 17%. Now this was led by 13% growth in that is agrochemical exports, which was led by volume growth and newly commercialized products. Also, if you see, there's improvement in EBITDA margin, which was of course led by favorable product mix and operating leverage. But the main thing why EBITDA margin has been improved is one-time impact of recovery of theft material, contributing 300 basis points improvement in EBITDA. Then we have Inox Wind, where you see huge uptick in revenue of almost 2x, while EBITDA is at 92 crore versus loss last year, and margin stands at 18%. Now, if you see, with the single largest order win of almost 1500 megawatt, order book stands at almost 2.6 gigawatt, and they have target to achieve net debt-free status for the company in the next few months. Then lastly, we have Honasa Consumer, wherein revenue was 27, there was growth of 27% in revenue. Now this was led by volume, and also if you see, the same store sales growth is up almost 31%, and EBITDA is up 2x at 34 crore, while net profit is up 3x, which is led by sales growth.
Right. Thanks for that, Varsha. There's a whole bunch of stocks that will be in focus. Honasa, PI should be getting a thumbs up, guys, this morning. But just a quick diversion from equity markets to another asset class, which we've been tracking, and I think investors generally have been tracking as well, is SGBs. Sovereign gold bonds. Remember, they open today for subscription. They will run for the next 3 days. So if you're looking to add paper gold to your portfolio, you must look at SGBs, which are open for subscription today. We will take you through a lot more details on that later on in the day. But coming back to the markets, guys, I think lots of stock-specific trade, and I think the markets are going to focus on that. One we didn't talk about was ONGC earnings.
I did.
You did. You did mention ONGC. Yeah.
ONGC.
Yeah. So mix sort of back largely, but I think the broader markets may continue to spend time consolidating again. Yeah. Bank Nifty, of course, has maintained 45,000. I think traders taking a little bit of heart from that.
Yeah, the PSUs might be a bit of a pickle today. I mean, we've seen a bit of a pullback sometime last week. We did a piece on that as well, as to maybe a breather. But just the fact that fundamentally the results have been so bad, and all of them come in a clutch. Since Friday evening, 5 PSU stocks coming out with numbers, all of them highly valued, all of them weak. So that is probably a bit of a pickle. Anyways, that index has come off a little bit since the time we did that piece on Editor's Cut as well. But just that stretch valuations, not so great earnings, yes, a lot of promise, but maybe the market wants performance every quarter.
I have a slightly different take on PSUs. Yes, they're definitely cooling off, as they should have, and as is very, very valid. But you are going to hear, by you I mean all of us are going to hear more and more on government intent on driving your goal to develop nation, etc., with PSUs at the forefront.
Most certainly.
So there is going to be more investments. There's going to be better cleanup of books, more efficiencies as well. So this is a mood that could change fairly quickly. Is all I'm saying. Yeah.
100% sure. The only question is, like for example, when I'm not comparing the two, but I'm just saying, for example, when this whole Ayodhya thing happened, and there was a small stock called Praveg, which went through the roof, went up to all the way to 1300, right? And it just seemed that there was just so much of exuberance around the valuations that it left little room for error. The stock has corrected to 1,950 and are now staying there. I'm sure at some, or rather, I'm not sure, nobody's sure, but I believe in 2 years' time, Praveg could be higher than where it is right now based on the commentary and the earnings that they're talking about.
Correct.
But just that the valuations are so stretched and the numbers not getting delivered, might see a bit of a pullback there.
We've talked about this, where order wins are happening. The challenge is going to be execution.
Yes.
And we are seeing it in the earnings. So a few quarters out, right? So while valuations are justified for order wins, they still don't explain
no, but
the
here's
kind
the deal,
of execution challenges.
if we can pull up those graphics, I don't know if we can, it's just too much ask, but if we can pull up those earnings, because we put out the comparative valuations. Chinmay Vasudev pulled out those valuations in that story. If we just look at either price to book or price to earning, whichever you like, right? Let's say, compare it to 10-year averages and budget for some bit of a uptick, because last 10 years are not testimony to what could happen ahead for PSUs. They have changed completely under this current government. But still, that's a gap of valuation is so high. At some point of time, you feel that some of these stocks need to see some bit of gravity.
But really. I would argue today, this morning, all of us spoke about notes and outlooks on the Indian market overall as premium, expensive. Valuations are high, but we still like it. At some point, why would that not extend to the PSU pack?
Expensive,
that's
right?
the only
I
thing.
think that's the argument.
So at some point of time, people will say that if BHEL is trading at whatever 151 times price to earnings, is it expensive at 100? Yes. Is it egregious at 151? Certainly. So could it cool off a little bit? So even if it does nothing, but just that the valuation multiple cools off from 151 to 150, that's a 32% shame off. I'm not saying it will happen. It could happen.
When Morgan Stanley report says what it says, it also says private capex is on the pickup. So are we saying that PSUs are the only ones that can carry the baton ahead? You also have private sector, India, that is going to see a pickup, right? If that doesn't participate, all those numbers will go out of whack. So,
but there's things that PSU companies are doing that private companies are not necessarily going to be able to do in terms of where government is spending its money. So there is a bit of an advantage there.
There are some sectors where the government has said, I mean, defense, for example, right? They've said that they want private companies to come in.
It will always be hedged and it will always be lesser because it's such a sensitive sector. You will not open it up completely. But so a lot of conversation there.
But for now, is there business momentum? Yes. Is our valuations expensive?
Very.
So therefore, could there be a case wherein while business momentum continues, valuations could just see a bit of a pull up?
And maybe not a price correction.
Look at that price to book number.
At least a time correction is only, and it's
exactly.
only,
it would be a time
healthy.
correction.
It's only healthy.
It is very healthy.
So more pain to come before you see maybe an upswing.
Yeah.
All right, but a whole host of other numbers that we're talking about this morning and more earnings on our radar. We should talk about Bandhan Bank, Campus Activewear and Tata Power, some of those stocks that we mentioned, but Bandhan Bank definitely will be hearing from the management also ahead on the day. Harsh, what can we add in terms of what qualitatively these results look like?
Well, Tamanna, in terms of, let me start off with Bandhan Bank. It's a good, solid set of numbers. After a while, we've seen a back-to-back quarter of good numbers coming in from Bandhan. So that's one big positive. And that reaction that's how the reaction ought to be on the markets as well. Of course, need to wait and watch for that reaction, but 20% growth plus with regard to NII is quite solid. They've guided for a 7 to 7.5% kind of a margin number, which they've achieved in this quarter as well. And the loan growth is in high teens. So second consecutive quarter of loan growth as well. So that's the other positive. With regard to deposit growth as well, there's good, solid 14.5-15% of deposit growth, which the bank has clocked in this quarter on a year-on-year basis, of course. And that's there's nothing much to complain about there either. In terms of just the overall metrics, you're seeing profit after tax, which has doubled because provisioning has come off. So the asset quality seems to be getting better, even though NPA on the absolute GNPA side, the number has actually inched up a little bit. So that's one piece to watch out for. And as we speak to management, we'll try to break some of those numbers down. So that's on Bandhan. Let me quickly switch it over to Campus Active, because that one, again, it's been a disappointing quarter here for Campus, clearly. You've seen 1% odd growth when it comes to top line, but EBITDA has really disappointed. Even compared to street estimates, that number is sharply lower, and profit after tax is probably less than half of what the street was really penciling in. So possible negative reaction on this counter, at the start of trade itself today because of those poor set of numbers. Last off, we have Tata Power, mixed kind of a bag there. Overall, you're looking at revenue, which is up roughly 3.5%, and PAT, which is up 2.5%. But we have a CLSA note, we have a couple of notes which have come out, Citi note as well, what it seems to be the case is it's a mixed quarter, and it's going to be in terms of execution. How the execution starts to play out for Tata Power is going to be one of the key monitorables that investors will look out for going forward.
Right. Thank you for that. There will be a whole bunch of them. We'll add the likes of a DOMS, Sri Lanka Sugar to the list, MCX, that will be reacting to their earnings today. Well, Sudeep Shah, Deputy VP Head of Tech Derivatives Research at SBI Cap Securities, joins in. Sudeep, good morning. Let's start with how do you feel about the Nifty? We've spent the last few weeks consolidating. This morning, while implied Nifty is indicating to a gap up, do you think there could be follow-on buying that would emerge today in terms of direction and trading range? What is the call on the Nifty?
Good morning, Tamanna. See, what we are seeing on Nifty is that last week on Thursday and Friday, Wednesday and Thursday, we have seen markets witnessing some kind of a resistance closer to 22,000, 22,050 levels now. This is exactly that same level where there was a pending gap which was created on 16th and 17th January. And that is not able to, Nifty is not able to cross it on a closing basis now. So every time the markets are approaching that zone of 22,000, 22,050, there's some jittery moves or some kind of selling pressure from higher levels is visible. So on the upside now, I feel that 22,000 is a capped resistance as of now. On the downside, the 10 as well as the 20-day exponential moving average of 21,650 to 21,730 zone now. So this band is providing some kind of a decent support. So all in all, I feel that markets still could continue staying in this range between 21,600, 630 on the downside, and 21,950 to 22,000 on the upside. And while GIFT Nifty is right now hitting at a 70-80 points positive opening, which would imply 21,850, 21,870 as a possible open. Again, at that zone, I feel there could be some kind of a resistance, because 21,900 call writers have also built positions aggressively on close on Friday. So I feel that it's important that we don't just rush into the trade, and we see whether the markets, whether Nifty specifically is sustaining above this 21,900, 930 mark on the upside for today's session.
Okay. Watch out. Sudeep, what about specific stocks for the day today?
Good morning, Neeraj.
Very good morning.
I feel that cement stocks in the last week were showing some kind of a positive momentum, and specifically if we see Grasim, now Grasim has closed at its almost highest level post the consolidation since December. So since 1st of December, we have seen Grasim consolidating between 2030 on the upside and 2150, 2160 on the upside, sorry. So from current levels, I feel that there could be a breakout in Grasim. The daily, weekly, monthly charts are hinting towards this same scenario. A lot of other cement stocks have also witnessed positive momentum. So I feel all in all, cement this week could outperform, and Grasim could be the leader of the pack. And 2120 could act as a strong support, which could be with which we could buy Grasim with a stop loss of 2120 for a possible upside of 2250, 2270. The second stock would be Bank of Baroda. Now, we've seen PSU banks showing strong momentum in the last week, specifically Bank of Baroda, PNB, Union Bank. So our top pick is Bank of Baroda. If we see the weekly charts, last 3 weeks we have seen a higher top, higher bottom formation in this stock, and post some kind of a corrective movement from 260 to 245, where the stock retested its 10-day exponential moving average, and thereafter witnessed a strong pullback on the upside. So we feel that there could be a continuation of positive momentum on the upside in case of Bank of Baroda, and this could be bought with a stop loss of 256 and a target of 275 to 280 on the upside.
All right, a lot of focus on banking. Just a few more if you have your eye on them, Sudeep. And this is Tamanna here, so very good morning to you. Bandhan, if you think there is some potential there, PI Industries and Oro Pharma, all three of them news of results, etc. And those reactions will come in, but I'm curious to know how you see them on the charts.
Good morning, Tamanna. See, what we are seeing on Bandhan is that this stock has been a rank underperformer. Now, even while we complain about HDFC Bank being an underperformer or other private sector banks being an underperformer in the last several months, but still they have held on to their key support zones. But in case of Bandhan, every time the stock has moved to 250, 255, there has been a big sell-off. And once again, the stock is at the cusp of an important support zone now. Since last, if I'm not wrong, since last July, there have been 3 retests of this zone of 210, 211. Now, I feel that if 210 is taken out on this stock, there could be a serious downside, which could be up to 170 levels also. So for me, 210 would be the key for Bandhan. If 210 is taken out, it could be a bigger downside that could open up. The second stock which you were referring to, PI Industries. Now, PI Industries, in the last 3 months, we've seen some kind of a decent correction from 3,900 levels up to 3,200 levels. And I feel the stock is not completely on a negative momentum, and in the last few days we have seen support zones around 3,250, 3,300 holding well, and once again the stock has now sustained above its 10 as well as 20-day exponential moving average. So I feel till the time 3,400, 3,420 holds on this, we could see the stock at least moving up to 3,600 where the 200 DMA is placed, and if that is crossed and sustained, then further upside also could not be ruled out.
Right. Sudeep, hi, it's Samina. Good morning. Just a quick one on Hero MotoCorp as well. The stock has been on the radar. Friday had a good day. Earnings were also pretty impressive. How would you trade Hero Motor this morning?
Good morning, Samina. What we've seen in case of Hero Motor is that this stock has been on a big uptrend. Now, in the last 4 months, starting November 2023, now, since it broke out of that consolidation range that it was in October and November, so from 30 to 80, the stock has sustained above its 20-day exponential moving average and has never broken even once. So this 20-day exponential moving average as well as the 10-day also has been violated, but it did not sustain below that for a longer time. So I feel till the time this 4720 zone is guarded, this stock could still continue outperforming, and we could see levels of 5,100, 5,200 in the next few sessions. For any long positions that anyone would be having, I feel a stop loss of 4720 would be a decent level to hold this stock with.
All right, super. Sudeep, stay on with us. We're taking a very short break, but a lot more stocks to discuss, a lot more action before the markets open. But even as we keep our focus on the markets, good news this morning. In a major diplomatic triumph for India, 8 veterans of the Indian Navy who were sentenced to death in Qatar were released by Doha today. The capital punishment was commuted to an extended prison time earlier following diplomatic intervention by New Delhi. The visuals you're seeing is of them arriving this morning, early morning at the Delhi airport after the release from Qatar. This is a big deal because it was a hard-fought diplomatic negotiation with a friendly country, but nevertheless, they have acceded through this intervention, and these guys are back home. So on that note, we'll take a very quick break, but we're back in just a few minutes, pre-open and a lot more when we return.
अंतरिम बजट के बाद वित्त मंत्री निर्मला सीतारमण का ये पहला इंटरव्यू है। प्राइवेट नेटवर्क में ये पहली बार हमसे बात कर रही हैं।
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
All you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Partner, State Bank of India, the banker to every Indian.
All right, back with India Market Open right here on NDTV Profit. We are in conversation with Sudeep Shah on clutches which are doing well. Sudeep, you've given us your views on some of the pockets which might react today. Just wondering, can the PSU index, the PSC index, or some of the PSUs take a bit of a down drift? I don't know which ones do you track on the charts, but a view on the PSC index and any of the PSUs that we have a view for, because they've come off a little bit from the peak of last week.
Neeraj, see, what we are thinking is that if you see stocks like Power Grid, if you see stocks like NTPC, they could still say hold on to their current levels where they are trading at. But a stock like, say, REC, PFC, where we have seen some kind of a serious liquidation on Friday, say 5 to 8%, anywhere they had seen the cuts. So I feel those should be avoided because see, they were the ones which were the first movers and they've seen the biggest rallies. So I feel there could be some profit taking which could be witnessed, and overall on the CPSE index basis now, if we see the index which had broken out above 3900 levels on November 2nd. Now, if you see that index, that has not even reached its 20-day exponential moving average even once. So, and as well as if you see the 10-day exponential moving average, now that is the shortest barometer of any, for gauging any trend from a short-term perspective. Now, if that index also has been only violated once and we have seen a pullback on the next day itself when there were cuts in the month of January once or twice. So, from the current levels, I feel while there could be debate that this indices have rallied too much, but I feel if one is a trend follower, then at least that 10-day moving average, which is around 5,600, 5,580 on the downside, if till that is held, one could still hold on to their existing positions. I am not recommending buying any fresh positions at this current moment, but any trailing stop losses one needs to keep for this index, then it would be around 55.90, 55.80 on the downside. Once this level is violated, then one could consider booking their profits and at least wait for a significant dip to re-enter the stocks.
Okay, fair call. So wait for a dip is what Sudeep Shah is recommending. Now, by the way, we make well classify today as a pharma day simply because of the amount of news flow there. We've discussed the results, right? There is Aurobindo Pharma, there is Divi's Lab amongst the large ones. Then there is Jupiter Lifeline Healthcare. There is Alchem Labs, brokerage notes, and a bunch others. Something that has happened, which may not necessarily move the needle on Laurus Labs, but it's a big win from a cancer treatment perspective. The CAR T cell therapy, which is done by ImmunoAct, a made in India CAR T cell therapy, has been now tied up, wherein ImmunoAct ties up with Apollo hospitals for a rollout of this. This could be a big move in cancer treatment. I don't know if it really impacts Laurus Labs today, because remember, ImmunoAct is not a fully owned subsidiary or a majority owned subsidiary of Laurus Labs. In case you see a reaction, this could be the reason, but please remember, there is no EPS movement happening in the near term because of this news. But Deven Choksi is with us. Deven, good morning. Thanks for taking the time out. Great having you. Just wondering, I'm starting off with pharma. We've discussed the index at length already. Just starting off with pharma, simply because of the kind of news flow and the kind of results that have come in. We've seen mixed views on Divi's Lab, for example, wherein some brokerages are saying that the first quarter of margin expansion and the worst is behind, while some are saying that even if the worst is behind, the good times to come are some time away, and therefore we remain sellers. So that is one. Oro has results. Some others have results. I just spoke about ImmunoAct. What do you think about this space? What stands out for you?
Rich, good morning. Well, I think the important point out here is few. On one side, mainly the input cost related issues, which were haunting the pharma companies in last few quarters, they have by and large settled. And more or less, these companies have been showing their resilience as far as the absorbing the cost is concerned. To a greater extent, they've been able to successfully pass on the cost, both in CRAMS model, PA model as well. So from that perspective, the margin protection is fairly understood and visible going forward as well. On the other side, the efforts pertaining to the specialty generics in some of the pharma space, have actually started yielding results. And that's getting reflected into some of the major numbers which we have seen in these results season so far. So to a greater extent, this is also creating a larger amount of, growth as far as, the earning outlook is concerned. You mentioned about Divi's and Laurus. These two companies remain absolutely very, very convincing and promising. Whatever has been the situation with them, the demand scenario is now basically showing the signs of improvement. Their customers are showing the commitment again, to lift the products. So to a greater extent, I would believe that the worst seems to be over. Maybe it may not happen that in one quarter flat, they'll start rising. But both Divi's and Laurus, I believe, with a good model, they should be, giving a reasonably good amount of rise, going forward in their working in subsequent quarters. So it would be more inclination towards looking at the stock from the investment point of view than to discard them from the portfolio.
Okay, so that's the view on some of the pharma names. Devin, the other aspect is the kind of disappointing results that some of the PSUs have come out with. Everything from ONGC fine, but SJVN, Midhani, Shipping Corporation of India, just very wobbly set of numbers. There are some others like MCX which are in the private space which have come out with weak numbers, but I'm talking about PSUs. What do you do if you have these PSUs in your portfolio? Let's say you got lucky, or let's say you were smart and you bought them earlier, you were riding on some great gains. Would you book those gains on the back of these numbers, or would you stay long?
Neeraj, these numbers of the PSUs, I'm always very skeptical about these numbers sustaining. Largely because of variety of the facts, in each and every company. On one side, the market is gung-ho about the story about the PSUs. I'm not doubting the potential of, these companies. But the fact remains that the inherent nature of the business won't allow them to scale up the business in a manner in which market anticipates. Be it oil marketing, oil refining company, oil exploration company, even for that matter, metal and commodity companies. Each one of them would have limited ability to create the upside in the working of the company, having got, I think, despite of having got the huge amount of potential. So that is a realization that remains very, very clear. And that is one of the reasons for which I think these companies have been up till now quoted at a valuation which was comparatively weaker compared to the peers in the private sector. I think that story is unlikely to change beyond the point. Neither of these companies, I think, which are likely to, I think, show dramatic improvement in the stock price. So if the market price probably moves up in hurry because of the higher potential, then it would be a case for sale. As of now, I think we'll have to ride that particular wave, wherein I think the more amount of money is chasing PSU companies, and that is the reason for which I think the stocks are rallying. Given the kind of higher amount of rally possibilities, I would think that I think one will have an inclination to look at these companies from the selling point of view if the working is not catching up. So wait a while before you start booking your profit. That would be my approach on this particular stock.
Right. Devane, as we are, of course, gearing up for trade this morning, lots of stocks that are going to be reacting to earnings. But I'll quickly come to you on auto. So Hero MotoCorp, Tata Motors, two outliers in terms of earnings and stock performance. Way ahead, what are you making of both of them?
Again, I think the best of the times in which they are and they have entered into. I believe on one side, we have the consumer having the power to spend money. On the other side, we are expecting the interest rates to come down in next 3-4 quarters from here onwards. So it is again going to help generate higher amount of buying power. And at the same time, I think the input cost is remaining under control for most of these companies, largely because of the commodity prices are remaining largely settled at this point of time. Given higher demand, given lower input costs, and given the ability of Indian auto companies, be it in four-wheelers, be it in two-wheelers, they have got a fantastic time ahead. Say, for example, commercial vehicles. Say, for example, buses, electric vehicles within that. I believe that I think the new generation of demand is happening in this area of activity. And that's where I think one remains absolutely very convinced and remain, I think, invested into this counters. I think that some of the companies have run up a bit more, but correction in the price would mean a buying opportunity. As of now, I think we believe that I think one should stay invested in auto and maybe pick up some of the good quality auto ancillary stocks in the portfolio.
Sudeep, let me come to you on some of the banks and PSB banks specifically. Anything that you like over here going forward? You know, that whole cut which came in public sector companies, PSB banks, was still relatively secure. What would you want to accumulate at this point?
See, within the PSU banking space, there are clearly two sets of banks that we feel. One is the Bank of Baroda's, Canara Bank, PNB's, Union Bank. But on the other hand of the spectrum, there is Bank of Maharashtra, then PSB, or a whole lot of other banks. So within both the segments, from the first segment, we feel that Bank of Baroda as well as PNB could continue doing well in the next few sessions to come. And also a stock like Bank of Maharashtra also, we feel that could really do well from here on also. Because see, after a decent amount of consolidation between September and January, the stock had broken out of 50 levels on the upside. And once again, it has retested its 10-day exponential moving average and witnessed a bounce back on Friday from the same levels. So I feel this stock could continue doing well. And also, if you see the last few quarterly numbers of Bank of Maharashtra, they have been really good. So here, this is a case of the valuations also supporting the stock price, the results also supporting the stock price. So I feel that within the entire PSU banking gamut, Bank of Baroda, then PNB, as well as Bank of Maharashtra would be our top picks.
Okay, and the pre-open rates will settle in just a moment from now, but have to mark the other big view that has come in on India, and that is the Morgan Stanley note that has come in from Jonathan Garner this morning, wherein he says that India is the top EM pick, the premium valuations will be driven by superior fundamentals. I think that's the key point that Jonathan Garner and team are making, that we know expensive valuations are expensive, but the fundamentals are superior. We'll get the other views from them. They expect structural outperformance of India in 2020s is what the note says. So it's not just for the next 1 year, possibly for the rest of the decade. The outperformance on nominal GDP, capex, and digitalization agenda are the key factors that will probably drive this outperformance. Remember, India is not the only one. They also speak about Japan as being a preferred Asia Pac play, but India is certainly out there within Asia and within EMs as one of the top ideas, and they expect financials and industries to recover in 2024. Now, this is the big thing. Institutional investors, Jonathan Garner has a pulse on what institutional money could do. If insti money comes back, then certainly financials and IT will benefit quite a bit. So can this happen is the question. But when Morgan Stanley says you pay attention. And the last point, it says expect India to be the key driver for global growth in 2020s. So independent of what the targets are, guys, but just the fact that there's Morgan Stanley coming out and saying that, hey, take notice, we believe India still remains our top pick. I think that is a really big statement, Samina.
Right, that is Morgan Stanley's view on India. Very, very optimistic. The bulls on the street are definitely going to be excited about this. Got a couple of minutes to go as we gear up for trade. Sudeep, very quickly on oil and gas stocks, they've also had and drawn about quite a bit of trader attention in the last couple of weeks. This morning, of course, we're coming to disappointing numbers from ONGC. How would you trade your upstream and downstream companies, if at all you trade them?
What we've seen in case of ONGC is, firstly, just coming to ONGC now, ONGC had rallied from 230 to almost 270. And on Friday, it had taken support at 259, 260 levels and witnessed some kind of a bounce back. So I feel that these last 3-4 days low of 259, 258 levels would be a crucial zone to watch out for. If at all ONGC opens lower and sustains below this level of 260, 259, then the profit booking could take the stock down to 248 levels. So I would not go long, at least for the first 30 minutes. Just watch out for the stock reaction there. And apart from ONGC, one stock which has been doing well is Oil India now. So Oil India is on a big uptrend. Last few sessions we have seen higher top, higher bottom formations also, and on the daily as well as on the weekly charts also. So while there is some weakness visible in ONGC, there is strength visible in Oil India. And also, if you see Reliance, now this stock also has seen a fair bit of buying in the last few days from the lows of 2860, 2870 levels. And in a way that this stock has been instrumental in holding out Nifty also in the last few sessions. So I feel from positional perspective, Oil India and Reliance would be our top picks, and ONGC should be on a wait and watch mode.
Just a quick word from Deven on ONGC, and Deven bhai, if you track SJVN as well, SJVN also down fair bit on the back of numbers pre-market, nearly 11%. ONGC looking like it's set for a weak start. Any take on this space and the sense that perhaps valuations have run ahead of performance here?
Absolutely. I think the price is basically moving quite ahead of the potential. As I was making a point a while back, the potentials of ONGC, Oil India, all marketing companies would remain extremely high. At the same time, I think the kind of renewable and the green hydrogen foray that is now in making, I think is going to give significant amount of upside potential to these companies. But one must remember well that I think these are not the businesses which would get scaled up in a non-linear fashion. I think they will only get scaled up, I think, with the growth in the economy. It cannot be scaled up, I think, with the market, the way in which market euphoria gets created. So I'm very clear about it that great businesses, great potential. Don't expect, I think, too much of number game play as far as I think these companies are concerned on a quarterly basis. Stay invested if you hold these companies. However, I think if you don't, I think wait for better opportunity to buy into the portfolio.
So, wait and watch if you want to buy in. If you are holding, then perhaps you'll have to hang on for a bit for now. But in the entire power space, Devin Bhai, if you could come in on that as well, because you're going to see Tata Power also perhaps with a weak sort of opening this morning. On the back of numbers and that same sense that perhaps it's become overpriced and run ahead of valuations. Do you think that the power energy space is something that you'd keep a distance from now on, or you see at least some sparks over there, some potential there?
Well, again, I think the fundamental approach remains same on this particular case. That you have economy growing at inflation for GDP growth rate of around 11.5-12%. And on that growth rate, I think the industry is also showing a corresponding growth of 15% plus kind of a growth. When we are seeing this kind of a growth, electricity per se as a utility cannot be growing faster than what the industry rate of growth is. I think so it will also consume or get, grown on the particular subject, with the same rate of growth. Now, if you start giving the valuation of 2027, 2028 in 2024, then probably I think you will have to face the problem, because I think the stocks will not perform. They will basically, have the time correction apart from having the price correction. So to a greater extent, I think this is a situation happening in one and another company. One of the reasons for which this is happening, because infrastructure play, people do want to buy in India, definitely for sure. And that should be the case for most of the insurance company, pension companies, sovereign funds to buy into the infrastructure. However, when I think the other than these players who buy into the infrastructure and they buy into the euphoric places, probably I think they are buying expensive. In my viewpoint, I think one will have to rationalize the buying into the infrastructure companies, utility companies in a systematic manner. One should buy when the market gives opportunity during the corrected levels. I believe that power story in India is remaining strong. However, the valuations are run up ahead of time.
Valuations ahead of time, and I think that's been Devin's grouse for a lot of pockets this morning, so bear that in mind. Important to pin in. 20 seconds left for the markets to kickstart trade. Stay on, gentlemen. We'll take in opening thoughts from you and then let you go. But looks like we'll have a flattish start today. Nothing untoward on the index maybe, but a lot of specific pockets, particularly PSUs, maybe some pharma names could be in focus in terms of movement. But let's highlight the big boys on open first. And here are the first trades. 21,800, hardly anything to write home about. Flat for the Sensex. Let's look at banks. Again, flattish move, no changes there. Our mid caps and small caps doing the same. It's a quiet morning, you have to admit. Nothing great. I wonder if there is any point in showing the heat map. Well, there is, we'll show it. And then Tamanna and Samina will highlight the broader end of the spectrum. Dr. Reddy's up 2%. Divi's, well, the margin uptick gains prominence over the no so many triggers over the near term argument for now. But Dr. Reddy is up 2.5%. Wonder I've missed something out there. But the top gainer on the index, UPL, comes back. Well, it seems like a clutch of stocks which have not been performing are going up. IT is right up there, by the way. HCL Tech, Wipro, Infi, LTI, Tech Mahindra, all five in the top list, except for TCS, which actually reached all-time highs last week. Everything else is in the green. TCS must be somewhere there. Yeah, the 11th stock. Even Stevens between the losers and the gainers. What's losing out? Hero MotoCorp, 3% lower. Just in line with estimates. Maybe that is what it disappointed. I don't know. ONGC reacting, not so much, but reacting duly to results. Power Grid has had an iffy up one day, down next day kind of a week. Last week in the results piece. And it starts off as one of the top losers as well. Aside of that, not too much. Maybe the action is in the broader end of the spectrum, but hey, Divi's Lab 1.8%. Tamanna highlighted it. I thought the brokerages were negative, but for now, that view seems to be winning. Divi's Lab up about 2% in trade, Tamanna.
Yeah, absolutely. We called it this morning. So Divi is definitely doing well. The pharma sector, having a good day. But Dawa and Daru. So let's talk about United Breweries now as we move in to some of the stocks that have had result flow coming in and were on our radar. UBL down 2% in open trade. So the numbers didn't seem bad, but ahead of elections, there is a bit of a risk. At least that's how Citi looked at it. They say profitability could also be volatile, and earnings estimates were cut by 8% for the full financial year. So that stock now seeing a pretty bumpy start. Apollo Hospitals, though, had good reviews all round. Brokerages were bullish, but in a market that isn't in a great mood today, you're seeing a tepid response to Apollo Hospitals. Overall numbers weren't bad at all, to be honest. Honasa is the other one that is on our list, and we'll be speaking to the management ahead as well. Honasa, on the face of it, numbers look great, and the market is rewarding it as well. About 6.5–7% up. Sri Renuka, poor numbers. SJVN, very poor numbers. And all of that impact this morning, earnings impact, leading the big movers on the markets. And you're seeing that completely play out. Sri Renuka, definitely a disappointment. In fact, JM Financial has set for SJVN a target price of quite low, very low, for almost 49% less is their target price for SJVN. Just Tata Power is the other one that we will look at. Again, results which weren't very, very exciting. A sell call coming in here, overvaluation concerns, and that stock about 3% down. So most things on my list, Samina, down in the red this morning. Are you seeing spots of green?
Of green, but you know what's happening, Tamanna? Interestingly, we usually see big gains across the broader markets, and they maybe were limited to a few stocks. But this morning, we're not even getting that. The biggest gainer in terms of percentage in the Nifty 500 is E-Strip, and it's not a very big gain. It's up about 3.5%. So no runaway rally in terms of earnings reaction this morning. E-Strip is up 3.5%. They've talked about, and this is not even regarding earnings, right? They've talked about opening a 5-star hotel in Ayodhya, and that is what is driving the stock up this morning. Apart from that, Aurobindo Pharma, that has already been in talk. We've talked about this one. Very strong set of earnings from the company. The reaction is good. It's not a runaway rally in Aurobindo. 3% gains on Auro Pharma after the company posted record profits and highest ever margins of over 20% since December 2021. So you've got Birla Corp as well, that's up 4%. E-Strip, Aurobindo Pharma, like I mentioned. DV's Laboratory as well. If you can take a look at how that stock is doing, up 2.5%. Neeraj, of course, highlighted that a few minutes ago. Godrej Industries, if you can get that one up, it should be helpful to see how the count is reacting to its earnings. It's a thumbs down on the stock, 1.5% off on the stock. PB Fintech, we took you through what the brokerages have to say. They largely seem quite excited about the company on back of those brokerage upgrades. The stock trades the gain of 2.5%. Along with that, 197 Communications seeing a little bit of buying this morning, 2.5% up move on the counter, but still struggling at levels of 430 in today's trade. Well, apart from that, there are lots of earnings reaction. I'll quickly take you through those. If you can pull up Bandhan Bank, Dish TV, PI Industries. So as you fire the stocks, we'll talk about that. Bandhan Bank, so that's an earnings reaction. Dish TV, PI Industries, IRFC. Weak numbers there. The market seemed disappointed. PI now posted a good quarter, but the stock is down 1%. IRFC is trading down with a cut of 2.5–3%. Parag Milk, that's the other one, 4% lower, 4% higher on that stock. 4.5% higher on that stock is what we have. MCX numbers weren't great. The stock does look a little weak in trade this morning, 2.5% on this one. Sri Renuka Sugar, if I can get that one too on the screen, it should be helpful to understand what is happening to Sri Renuka Sugar. Weak numbers, the stock is down about 2% Inox Wind Energy, Wind Energy, Vishnu Prakash, all those are going to be earnings reaction. Inox Wind is up 3.5%. Inox Wind Energy, on the other hand, is trading flat. Vishnu Prakash, DOMS, Cello, Landmark Cars are some of the other names, and I'm guessing Neeraj and Tamanna will continue with the list, but lots of earnings reaction. But what is, I don't know whether Neeraj, you know what's happening, but Aarti Industries, I know those brokerages were quite optimistic. We are seeing a turnaround on the company, but also you've got Birla Corporation that jumped out of nowhere, 3.5% gain this morning on that stock.
Maybe.
Yeah, maybe that. Okay, yeah, that's probably what it is.
Yeah, but just one stock I want to mark is LIC. Now, the stock is up about 3% today. Maybe some income tax refund. JP Morgan upgrades the stock price target as well. So after seeing one dip, while PSUs are iffy, Life Insurance Corporation of India has done remarkably well, 2.5% or 3% higher
in trade this morning. Initial thoughts from our experts. LIC, Devin, if somebody wants to look at insurance, is LIC a good option or is something else better, or you avoid this pack completely?
No, LIC remains, I think, absolutely very convincing option. No questions asked on this aspect. On one side, you have a fantastic amount of demography reach that we have created. That's unparalleled to any other insurance companies. At the same time, I think adapting to digitization to further expand the reach is another important point. What I like most about this business and the possibility is that they are all creating the micro insurance products. And that is going to create the same amount of effect, I think, which the AMC, the mutual funds have created by way of SIPs. So from that particular perspective, I think the potential remains absolutely very convincing and very strong. And LIC remains absolutely very convincing play. At the same time, I think we also look at the investment portfolio of LIC. This is where I think my eyes are on. Some of the best quality stocks are held in the portfolio. And if I consider that India's market capitalization is moving from $4 trillion to $10, $12 billion in 2035, one company which will get phenomenally benefited in next 10 years could be LIC. So from all this perspective, apart from the business, I think the investments, they remain, I think, a very strong play as far as the balance sheet of LIC is concerned for the shareholders as well.
Insurance pack in focus definitely, but LIC the star of that show. Even if you look at the others, GIC, etc., and see what they're doing. Sudeep, any thoughts of LIC? A cracker of a quarter, and the outlook on the stock has changed. It took a while to even get to its IPO price. Do you see a sustained breakout there?
Yes, I do see, because it really it has taken a lot of time for it to come back to its IPO price. But once it has taken that out, we have seen a big rally on the upside, and I feel that this is just a start after a big consolidation. So although there would be intermediate dips in between, but overall this stock is on a strong footing compared to all other insurance stocks, and I feel from these levels also, or on dips, minor dips from here on, this should be added from a medium-term to long-term perspective. Even from a trading perspective, the trend is firmly on the upside. So overall, I feel till the time 1040, 1050 levels are held, this stock could continue its upwards momentum up to 1250, 1270 in the next few weeks to come.
Sudeep and Devin, those are a few questions that you've answered for us. But very quickly, Sudeep, if I had to ask you, any trade that you've picked up since markets have opened, any reaction that has caught you by surprise that you would then trade on this morning? Maybe intraday also.
See, a couple of stocks. One is Birla Corp. Now, while we've at the beginning of the show discussed Grasim as a top pick from the cement stock, we are even seeing the Birla Corp showing strong moves in the last few sessions, and even post today's opening, where a lot of mid caps or a lot of other stocks are witnessing pressures, but this stock is gaining from strength to strength. So I feel that this should be on investors and traders' radar, and this could do well in the next couple of sessions also from here on.
Pfizer, Zydus, Life, all of them having a good day. Positive reports over there. A stock we haven't marked is 197. We mentioned it in our pre-open that there might be some relief over there coming in for Paytm. We broke the story that there is going to be an extension perhaps on the 29th Feb deadline, from the point of view of allowing customers to pull out what they need to from the Paytm Payments Bank. But there has been a positive reaction on that. Thank you so much, Sudeep and Deepak, for joining us today. We're going to take a very quick break, but on the other side, we speak with Chandrasekhar Ghosh of Bandhan Bank to talk about the company's Q3.
फिस्कल डिफिसिट के नंबर को आपने अच्छे से मैनेज कर लिया, तो थोड़ा खर्च करने का रूम था, चाहते थे तो कर सकते थे आप, लेकिन वो उस चक्कर में भी या उस लालच में भी आप लोग नहीं आए। मेरा कहना आपके पास स्पेस था, फिर भी क्यों नहीं किया?
सबके मन में ये ज़रूर एक भरोसा, कॉन्फिडेंस था कि जनता समझ रही है कि जो योजनाएं हम तक पहुंचा और सरकार जो ट्रांसपेरेंट तरीके से किसी लालच में नहीं पड़ा और कुछ लीपापोती करने का कभी कोशिश नहीं किया, ऐसे सरकार जिसका समर्थन होना चाहिए हम देने को तैयार है, ऐसे मूड में देश है।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Hello and welcome to NDTV Profit. You're joining us on Earnings Edge, and today we're discussing the Bandhan Bank Q3 numbers which came in a little while ago. So Bandhan Bank, of course, has reported a 730 odd crore worth of net profit. This is more than double of what it reported last year. Of course, on the profit growth is largely being aided by an improvement on the provisioning side. The provisions has been lower during the current quarter, December quarter, compared to last year. If you look at the operating profit side, of course, there's been a bit of a dip, and this is largely coming in due to the operational expenses. I have with me Mr. Chandrasekhar Ghosh, the MD and CEO of Bandhan Bank. Mr. Ghosh, welcome to this conversation. My first question, sir, is with regard to this OPEX number. Now, the operating expenses have gone up year on year as well as quarter on quarter. If you could just tell us what exactly has happened during the December quarter to push this up.
Thank you to given this opportunities to share on that. Of course, there is an operational cost, a little bit is increase. We are looking on that, the operational expenses on asset. So if we see that the operational expenses on asset, it was in that the 3.5%. It was in the first quarter. Second quarter, it has come to the 3.7. Again, it has come down in the third quarter, 3.6. So we feel that it is a range of our prediction on that, the 3.5 to 3.7% in that operational expenses on advanced assets. Second point on that, you know that the quarter we are new IT system have been introduced. We are transformed from the old CBS to the new CBS and other many of the application we are introduced. So it has been also a little bit cost has come. The last couple of quarters we have been increased the 500 new branch open. We are also given that the number of a good number of employees to them, those branches to serve on that to the customer. So these are also have been also taken some of the cost of operation has increased. And I hope that it is not we are looking as a cost of operation. I am looking it in a cost of investment. And that investment will give the future business growth. We have been planned on that. And that will be like the way we are looking it on that.
Okay. Coming to the core business front now, NII has grown strongly during the quarter. But if you look at your net interest margin front, there again, there's been a bit of a stabilization. I just want to get a sense as to what is happening on the core business front, because your loans are growing about 18.5%, deposits are growing close to 15-odd%. How is this operational sort of improvement helping as far as your net interest margin is concerned and your overall business growth is concerned, sir?
If I say that operationally, the banking industry today, sorry, there is a cost of fund has increased because of the deposit rate increase and the liquidity is very tight in the market. And that is the one cost has come to every bank on that. So that is the one part. But other part is there that because of the quality of the portfolio is increased, and so that is in a slippage point of view and the provision point of view, it has come to control. That have been taken on that both the side are managed on that the NIM, and I saw that the NIM in the bank are maintaining 7.2% in the last quarter, and this quarter also 7.2%, which was the last year is a 6.9%. So better than that. So we feel that it is a good NIM on that, though it is a cost of fund little bit increase, but other efficiency also helped us to maintain this 7.2% of the NIM. And we feel that the next also quarter, we can be like to maintain on that the 7.7 to 7.5 as per our guidance.
Your gross NPA ratio at about 7%. I just wanted to get a sense as to what the outlook is looking like for Bandhan Bank. This quarter, the net slippages are lower, gross slippages are slightly higher, but this is primarily being adjusted because of a sale to NPA that you did during the quarter. I wanted to know what the outlook on asset quality is, gross NPA trend, what is that looking like?
What we saw that in the data showing that is in, we have been seeing that also collection efficiency has come 99%. That is a one side is there. Other side, we saw that there is a measure of the portfolio which are shown as an NPA is an earlier because of pandemic. After that, if you see this is the portfolio DPD SMA 012 and DPD has come 3.4%. SMA 0 is a 1.5%. SMA 1 is a 0.9%, SMA 2 is a 1%. And what we see that it has been 3.4% has come to this quarter, which was in the last quarter 4.8%. So I saw that this has been come down. If I go to this, the first quarter, it was in a 5.6%. So every quarter it has come to 1% and the during that period, that will be given the comfort on that. It is gradually it is coming down on that. So this is the portfolio quality point of view is see that. Again, another point I mentioned about it on that, this is in slippage has come 1,300 crores in the every quarter. and 400 crores have been recovered, and 900 crores as a net NPA has come on that quarter-on-quarter basis. So it shows that it has been not increasing, it is in control on that. And overall, bank has been provisioned 600 crores in every quarter. So I feel that this is gradually it is coming up as a quality of the portfolio. Other part on that, whatever our microcredit portfolio, or what I say that the EV portfolio this year, whatever we are disbursed in the 2023 and 24, that the portfolio outstanding is a total outstanding of the EEB book is a 85% plus. Among this, the portfolio NPA only the 35 crores, which is a 0.11%, which is showing that the new portfolio, what have been developing on that, gradually coming very better than the earlier pandemic portfolio, and which have been also shows that the very good comfort on that. The quality of the portfolio future is better. NPA will coming down. And of course, the slippage already shown that they're coming down on that.
Is there any number on the gross NPA that you're targeting with respect to your business?
Number of?
The gross NPA, is there a ratio that you're targeting?
No, we'll be like to see that how the quality of the portfolio increase and recovery will come. So we see that it will be gradually come down on that. And hopefully this quarter is the best quarter for every year. It will be like to drastically will be like to help us to reduce on that.
As far as your CASA ratio goes, you're at about 36.1%. Overall, your deposits are growing about 14.5%, 15% odd. I wanted to get a sense from you as to what is stopping the banking sector from pushing up retail deposit growth, because there's a lot of emphasis on the wholesale growth portion of the deposits. People are depending on the bulk deposit side to sort of push up their deposit base. But according to your mind, what is exactly stopping banks from going after the retail deposits?
If while my learning of the last 8.5 years in the banking industry, though I am not was in a experienced banker, but we learned about from the beginning to reach to the retail people are more. And then we'll be like to getting that the retail deposit is more to the bank. And which we are focused from the beginning. Until now, we are continuing. We are also like to future continuing on that to reach physically to the customer, who are the retail. And second point, we see that there is a lot of opportunities in our country, semi-urban and rural areas, to physical branch, to give a confidence to the customer that they will trust more and very quick, and they will be like to come to this banking system to deposit their money. So in this, all of this, the things we are practicing last couple of years, and we are also focusing on that, how our employee can be like to reach to the all people who are like to come to this banking system and the deposit their money and to the bank. And that is only the way we have been seen that there is a retail deposit we can be attract. And of course, the service to the customer and satisfied to the customer with a good behavior and very transparent way to given that all information to the customer. It is also another way confidence has come from the customer and given to this the opportunities of the retail customer attract to the bank. So this is the way we are going. Of course, there is a not bank cannot be go in the bulk. The bulk deposit means other customer also who have the bulk deposit opportunities in there. Bank should be like to attract on that. It is not only one segment will be like to make it. So in that sense, we are overall bank like to provide to the customer service and take that opportunities to grow the business deposit growth in the bank. and this is Bandhan is practicing in that way.
All right, the last question from my side, sir. There was some announcement that came from the bank with regard to the NCGTC portfolio review. They called it a forensic audit, but according to you, it's a review. I just want to get an update on where that is at this point in time, sir.
So there is details we are already disclosed on that, but we are like to mention about the update on that. Whatever the data is needed to detailed audit on that, and we are provided already, and they are doing it on that because the data is in use. So whenever it will be like to some queries will come to us. Till now we have not get any queries. And whenever they will be like to complete it, we'll be get the report, and accordingly it will be like to confidence on that. We'll be like to get the benefit on that.
All right, Mr. Ghosh, thank you so much for joining us on this conversation. It's a pleasure talking to you, sir.
Thank you. Thank you to you.
बजट के बाद वित्त मंत्री निर्मला सीतारमण का ये पहला इंटरव्यू है। प्राइवेट नेटवर्क में ये पहली बार हमसे बात कर रही हैं।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right. Some believe in swiping right. Some run away from risk. Others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Well, Welcome back. You're watching India Market Open, and one stock that is in focus is United Breweries. They posted earnings last week. It's a pretty strong sort of numbers coming in on the front line, on the top line, of course, but some sort of margin pressure is what was seen for UBL. We have with us the management, Vivek Gupta, MD and CEO at United Breweries, joining in. Vivek, good morning. Hi. It's been a pretty good quarter for United Breweries, at least on the face of it. Take me to demand trends in the next few quarters. Growth, I believe, this quarter was driven by the South and the East market, while North still is a pain point. Give us some color in terms of what we can expect on volume growth for the new few quarters out.
Yeah, good morning and thank you for having me. Indeed, we had a very good quarter last quarter. We finished with 8% volume growth and 13% revenue growth. I think the growth was quite broad-based. We actually grew double-digit in both in West, in East, and in South. Yes, North was a decline because of some of the changes which are happening in the landscape there, some of the conscious choices we made, and some of the interventions which are going on in some of the markets where we are waiting for policy news there. Overall, we feel very positive about the trends going forward. We know that the trend is on sessionable beer consumption. Our focus is on growing quarter on quarter and really serve the consumers with our innovation and product portfolio. So we are getting into the season. So fingers crossed. We are really hoping that we will have a good quarter as well.
Right. Vivek, let's talk about the state mix before we talk about the product mix and, of course, the margin picture. North volumes have declined marginally. East has done quite well for you, up 22%. South has also seen a growth of about 10-odd%. And West has seen a growth of 9%. Now, in terms of putting a little bit of a number to that, how do you see things playing out in the next few quarters state-wise? Do you feel like things in Delhi will come back on track and Tamil Nadu, Kerala could also play ball?
See, one of the strengths of United Breweries is we have a very broad-based portfolio and very broad-based market presence. We play in almost all the states where beer selling is allowed. So actually, we are very confident on business coming back in North as well. But at the same time, it is going to be an election season for the next quarter. So we will be actually quite cautiously optimistic, depending on the disruptions which are going to happen due to the elections. But we overall feel very confident that our state mix will continue to grow. We are also bringing innovation and expansion of innovation in some of our core markets. For example, in Tamil Nadu, we are launching one of the very successful Ultra Max proposition very soon. We are also introducing Ultra Max draft beer in Karnataka and Maharashtra. We continue to see very positive results on our Heineken Silver innovation. So as we work in some of these markets, we will continue to see the upside. But yes, state mix is going to be tricky, and we will have to wait and watch how the policy framework come out in these states, given the scenario around elections.
Right. Vivek, a couple of other things I want to talk to you about. How much does premium products contribute to your top line? And I know premiumization has also worked out really well for United Breweries, and it's also worked out for the likes of United Spirits. It seems to be quite the theme in urban cities, at least as we see it right now in this earnings season.
Yeah, I think, as I have always maintained, that consumers are looking for economy, premium, mainstream. So it's the entire portfolio which is critical. I know premium is very important because consumers are looking for low alcohol, sessionable beer. For us, premium segment grew faster than our mainstream segment. We grew premium volumes by 14%. We actually grew shares in premium segment in the last quarter. So premium is absolutely critical. We have very strong products like Ultra Max, Heineken Silver. We're also planning to introduce some more portfolio over the next coming months. So we feel confident that we will continue to win in premium and continue to build the category through premium. We have a long way to go. We are slightly behind, on premium, but we'll make it up in the future quarters.
Right. What does market share currently stand at pan-India, Vivek? And what can we expect on market share going ahead?
So we estimate the market share. In December, we ended up with more than 50% market share as United Breweries on total beer category. Now, market share will continue. Our focus is on category growth versus actually growing market share. But we see the market share will be in the similar range over the quarter, but our bigger focus will be to grow category and expand the pie on beer, because only 85 to 90 million consumers in India drink beer as compared to almost 200 million who actually drink alcohol. So we really need to drive the category, and that's our key priority as a United Breweries.
The category you want to focus on and grow, I'm assuming that is going to come on the back of spending on marketing events, and I believe in Sunburn as well, the recall of UB stocking fish is at 87%. How much of your margins are then going to be impacted, or how much does marketing sort of take off in terms of your cost at this stage?
Yeah, in Q3, we actually, invested 300 basis points more on marketing and promotions. We'll continue to invest in brands. We'll continue to invest in category growth. We are very conscious of margins as well. So, of course, we are working a very strong cost program in the company. We are looking at a revenue mix program. So it will be a balanced growth. It will be a combination of top line, but at the same time, we are not going to take our eye off the margin. But our margin progression will be gradual, but our top line should actually be stronger.
Right. Also, if I have to ask you, outlook on margins, Vivek, going ahead, what is the margins that you will be able to maintain in the next few quarters around current levels, or do you think we can expect an uptick on the margin front as, of course, contribution from the premium segment also goes up?
See, we actually are in a very volatile environment. So we definitely get some tailwinds on barley prices, which is an important commodity in our product. But at the same time, we also, as we drive more innovation, we have to infuse new bottles, which also takes away the margin. So I think our aim will be to grow the margins, but we will be responding based on the market needs.
And I believe one of the things that played out this quarter was the bottles, the return of bottles, right? Explain this to me. How much % of your bottles are new? How much do come back? Are there any measures taken to break that illicit trade that is happening in terms of reusable bottles?
No, thank you for raising that issue. I think new bottles immersion, when we actually launch new innovation, is a part of business model. When you launch a new brand or a new pack size, you have to insert new bottle, which costs us a lot. The second is we are working with our partners to ensure that for the sustainability, the reusable of bottle is increasing. Now, in some cases, there is this illicit trade which is going on crushing the bottles, which we are working with various government agencies and regulatory board and actually giving the awareness, because it is not good for sustainability when the color trade is booming. But having said that, I think we continue to work and strengthening our programs with our current bottle suppliers. But at the same time, as we bring new innovation, the new bottles will continue to be, it will be heavy up dose of new bottles in the beginning, and it will gradually streamline over a period of time.
Vivek, so until it gets streamlined, what is the sort of impact that is going to have on margins?
See, it is going to balance it out. As I said, we are going to have tailwinds on some of the commodities, and we will try to balance it. We have also made some interventions with our partners. So I think our aim is going to have a steady margin progress going forward.
Right. Employee expenses have also risen in this quarter. Is that because you've added more employees, or is it largely just inflation and investments that are being made on current employees?
No, we continue to invest in our capabilities. As I said, that one of the focuses we want to make ourselves as future ready. So we are investing in technology. We are investing in also the organization capabilities, in execution, in go-to-market, in brand building. And we are also investing in our manufacturing capabilities so that we actually prepare for 2030 versus actually really focused only on the current quarter. So I think it's the investment in our capabilities, and some of it will actually, as our revenue grows, will actually streamline as well.
Very quickly, Vivek, in your con call, you mentioned that over the next 2 weeks, the impact of MRP increase on pricing and margins, you will get some more clarity in Tamil Nadu. Also, you've said that there will be some volume recovery post the change in operating model. Can you elaborate a little bit on that? What MRP increase are we talking about? When can we see that impact trickle into the numbers?
So as you know that in many state governments have taken price increases on beer. I think there is price increase in Tamil Nadu. So we are still learning what is the impact on our margins on that. And we were also learning that how consumers are going to respond. Usually there is 20 to 25 days of inventories in the trade. So actually we will only know in a month's time when consumer will start seeing the slightly expensive beer they will have to buy. So we'll have to understand that. So that is what I mentioned, that we'll wait for the response. But given the macro trends, we are very positive that we will continue to create interest and purchase intent for beer through our programs and through our better execution in store. But how this all impact, we will see when the rubber hits the road.
Right. Also, very lastly, Vivek, you want to tell us about your strategic initiatives and how that is expected to contribute to your top line in the next 2 to 3 quarters or calendar year 24?
Yeah, I think, as I said, our priority is to drive category growth. I think the first priority is to really fill the portfolio in economy, premium, mainstream, super premium. So you'll continue to see a stream of innovation from UBL. Second, our priority is to work with the regulators to continuously drive and pitch for moderation. As I mentioned, 200 million people in India drink alcohol, but only 85 to 90 drink beer, and beer is moderate alcohol. Even World Health Organization has already started talking about the need to have moderate drinking. So I think we need to continuously educate and work with our regulators to ensure that the taxation on beer is fair and beer becomes more affordable and accessible. And the third is we continue to keep ourselves as future ready in terms of the investment we are going to do in expanding our capacities in our organization, in our capabilities. So those are the 3 strategic priorities. And hopefully we'll continue to see the category growth and momentum on the business.
I'm excited for you. I'm excited for UBL. Good luck. It looks like it's going to be promising in this calendar year. We'll hopefully catch up with you.
We need all the luck. Thank you for your question. Thank you.
Thank you very much. That was Vivek Gupta of United Breweries charting it out for us about how it looks for the company, the product mix, the state mix, all working in favor of United Breweries for now. In the meantime, the markets continue to spend time consolidating, so no relief there from a little bit of selling that we're seeing at high levels, 21,725. Remember, 21,700 will be an important level of support for the markets to watch out for. Bank Nifty as well has been reeling under pressure. This morning is no different. PSU banks also seeing some selling pressure. Hero Motor reported good earnings, but despite a good performance, the stock gets a thumbs down, 3% lower on Hero Motor Corp. ONGC as well on back of weak numbers is off 3%. BPCL not looking good. So remember, oil and gas and OMCs, after a slew of brokerage upgrades, talking about a re-rating for OMCs and downstream companies have gained, and now of course seeing some profit taking. But Tamanna, even the broader markets, earnings reaction, and that's largely what the markets are focusing on.
Yeah, I just wanted to highlight Coal India. Numbers are expected later today, and there is a slide which is being expected. Already the stock is 3.5% down. So if you look at the overall theme in ONGC, BPCL, Power Grid, NTPC, that whole energy pack is looking quite demure, I would say. Fresh listing though taking place. Remember, this is going to be a week of listings, I think 5 in all, and APJ Surendra Park Hotels is the one being listed. Right now you're seeing the D Street debut of the company. Let's just pull up and see what the price seems to be. We have seen a massive run-up for IPOs, great season for IPOs last year. Will it continue? So a decent listing. I wouldn't say it's a complete cracker, but take it. It's opened up about with a 17% premium. So we'll keep an eye on that. We'll get you also information about all the other listings you're expecting this week. But right now, we'll take a very short break. On the other side, I'm speaking with Ramanpreet Sohi of Honasa Consumer. You'll also hear from Premchand Devarakonda of EML on their third quarter performance. Stay tuned.
Presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity. Co-powered by Bandhan Bank. आपका भला सबकी भलाई.
फिस्कल डिफिसिट के नंबर को आपने अच्छे से मैनेज कर लिया तो थोड़ा खर्च करने का रूम था, चाहते थे तो कर सकते थे आप, लेकिन वो उस चक्कर में भी या उस लालच में भी आप लोग नहीं आए। मेरा कहना आपके पास स्पेस था, फिर भी क्यों नहीं किया?
सबके मन में ये ज़रूर एक भरोसा, कॉन्फिडेंस था कि जनता समझ रही है कि जो योजनाएं हम तक पहुंचा और सरकार जो ट्रांसपेरेंट तरीके से किसी लालच में नहीं पड़ा और कुछ लीपापोती करने का कभी कोशिश नहीं किया, ऐसे सरकार जिसका समर्थन होना चाहिए हम देने को तैयार है, ऐसे मूड में देश है।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Welcome, you're watching NDTV Profit. I'm Tamanna Inamdar and you're watching Earnings Edge. The company we're focusing on today is a recently listed parent of Mama Earth, Honasa Consumers. Their Q3 numbers are looking great on the face of it. The net profit has soared 265% year on year. Margins have expanded by close to 400 basis points. Now, the question is that can they see sustained revenue growth? From the con call, the management has indicated that consumption has been slow. When do they see a recovery on this? This and a whole host of questions now for the Chief Financial Officer, Ramanpreet Sohi, who's joining us on the show. Ramanpreet, hi. Great to speak with you here on NDTV Profit. Let's begin by talking about this quarter and what has driven those profit numbers. Your margins also have expanded, very decent expansion there. Net profits have also expanded. Are you seeing this coming in from revenue growth or from a curb on operational expenses?
Yeah, no, absolutely. Hi, good morning to you. Thanks for having me. So, like we said, of course, we delivered almost 28% growth for the quarter. From a like-for-like basis, which is a product business, actually delivered 30% growth. So as we sort of see scale up for our brands, Mamaearth and our younger brands, we're clearly seeing the scale up happening at an efficient, leverage across A&P and some of the other line items in our P&L. Of course, a larger sort of driver for our margin expansion has been efficiency in A&P, which has been optimized by almost 200 bips from a year-on-year basis. I think that continues to be our biggest lever in terms of margin unlocking as we look ahead. And I think in our views, we think we have clear levers to unlock about 100 to 150 bips in operating margins from a year-on-year perspective. And of course, the growth has also, at a 30% kind of a growth from a YTD perspective and for the quarter perspective, that of course also helps leverage to kick in across A&P and other line items, which has helped our operating margins improvement by almost 400 bips.
Okay, so you're saying that you could see another 200 bips improvement in operating margins because of efficiencies. Can you go into a little more detail on that, Mr. Sohi? How exactly are you achieving these margin efficiencies?
Yeah, so, I said about 100 to 150 bips from a year-on-year perspective. What we've seen is as we sort of move our largest brand, Mamaearth, into offline, that channel is clearly more profitable, and we're clearly seeing that play out in our margin profile. Also, our younger brands, the Derma Company, Aqualogica, Dr. Shade, BBlunt, all of these brands, as they scale, we're clearly seeing efficiency, of course, led by A&P reinvestments. And our second largest brand, Derma Company, actually turned profitable for the year. So this is the first full year of profitability for the brand. And clearly, at a certain scale and threshold, we see brands turn profitable. The other younger brands are currently in an investment phase. But as they have continued to scale, we've continued to see at each level of scale-up efficiency coming in. All of that is playing out at an overall EBITDA margin profile as well for us. So clearly, as we sort of focus on deepening and going for further penetrating on the offline distribution side, and as we further continue to scale our younger brands, we should be able to unlock these margins. I think we have clear levers to do that as we look ahead into.
Okay, couple of follow-ups there. You're saying the offline mix improvement for Mamaearth helps better margins in offline. What is the ratio right now? And how many of your brands are now profitable out of the whole pack? I think 6 in all. So apart from Mamaearth, which are the other ones that are profitable?
Yeah, so from a sort of channel perspective, offline in Mamaearth contributes close to 50% of the business. 45 to 50% of the business comes from offline. And of course, this was less than 10% about 2.5, 3 years back. So there is a clear ramp up on the offline distribution side. We today reach 1.7 lakh retail outlets. The distribution is up 36% from a year-on-year perspective. We continue to further strengthen and stabilize and then sort of focus on further expanding our offline distribution from here on. Yeah, in terms of, from a profitability perspective, of course, Mamaearth being the largest brand is the most profitable brand. Derma Company, like I said, our second largest brand, has become profitable. Other brands are clearly seeing improving margin profile, but currently are in an investment sort of phase.
Last quarter, Mamaearth's offline component was about 60%. I had a conversation with your team and it was 60%. So has that dropped? And what is the outlook for the offline margin or the offline business component for the primary brand, which is Mamaearth?
Yeah, no, so I think we've never gotten to 60%. I think from offline contribution, we've been at this range of 40 to 50%, and of course from 40% odd last year, it has now moved on to 45 to 50%. So there is a ramp up as we sort of continue to increase our distribution. So I think offline from Mamaearth perspective, very clearly we see at least 2 to 3 times distribution expansion possibility over the next 3 to 4 years for Mamaearth in terms we currently, like I said, are present in about 1.7 lakh retail outlets. There is a clear headroom there. And of course, from an overall perspective, online, offline will probably balance because the younger brands are focused on digital first online platforms and our own D2C website and e-com platform. So I think given their scale up and journey, we'll probably see a balance in all online, offline at about 50-50, maybe, from a 2 to 3 year perspective.
All right. And what is the dependence on Mamaearth in contribution to your revenues? If you can just give us a sense there. How much is coming just from the mother brand?
About 68% of the business is Mamaearth.
Did I hear 68%?
Yeah.
Okay. And do you see that reducing over time as you load on other brands? Will you be adding more brands in this year?
Of course, the younger brands' growth profile is faster. So from that perspective, the mix will change a bit in terms of the younger brands over time, because the younger brands are at a level where the growth profile of those brands is faster. So we'll see that play out. Sorry, I didn't catch your second question.
How many more brands are you adding? I think 23 was quite a big year in terms of acquisitions, adding on more brands. Are you going to continue at that pace? Are you adding more brands in this financial year, or are you now going to just consolidate what you have on board?
So I think we obviously clearly see certain white spaces. We've been focused on building our brands and scaling our current portfolio. There are certain white spaces we continue to focus and work on those white spaces. Of course, as and when we launch a new brand, we'll obviously disclose that in the right time. But of course, we are interested and we're looking at certain white spaces. We will see some action from our side on that front.
I know you're not going to tell me what you're buying, but what are these white spaces? Which categories?
No, so we're not buying anything. When I say white spaces, most of our brands are organically built and scaled. We've done 2, of course, brand acquisitions, but our largest brands are organic brands. So there is nothing on the table from an organic perspective. When I mentioned white spaces, it is from an organic perspective.
And which are these white spaces? Which categories, at least?
Yeah, so I think one clear category, which has given us a lot of confidence is the color cosmetics. It's a large space. Within Mamaearth, also, we've been able to build this category now. It's almost 150 crore annual run rate category for us. So I think with that, we clearly see that, it's an interesting category. We could look at launching a separate brand for the larger performance-led color cosmetics space. So that's how we sort of see a clear sort of white space. I think that's probably one big white space currently. I think there are others, but we'll probably talk about it.
That's nice. So color cosmetics. So more of color cosmetics in terms of expansion. Or another thing I want to talk to you about is the seasonality that we've seen, and in the con call, etc. The commentary has been that there is a bit of a consumer slowdown, not just in rural but in urban areas as well. Has the festive season not lived up to what you expected? Are you seeing a pattern here in terms of which categories are seeing less demand?
Yeah, so I think, like you said, of course, we are seeing a little bit of pressure in terms of how demand is panning out. Especially, I think what was sort of clearly visible in rural is now starting to impact the urban markets. Like you said, of course, the festive didn't pan out well for the e-commerce platforms. What we are also reading is the offtake from a GT, general trade outlets specifically, also has been slow. And of course, that has meant that a lot of the companies, the larger incumbents who have not been able to see volume growths, are also sort of going aggressive and giving steeper discounts across e-commerce platforms. So all of that is also adding to the competitive intensity. So yes, I think we see, at least in the near term and to a certain extent medium term, some level of pressure coming on the consumer demand side.
By when do you see that easing, or what do you think will ease that?
I think it's very difficult to pinpoint exactly when will that sort of turn around. But at least in the near term, next couple of quarters we see that play out. I think we'll probably take it from there.
All right. Thank you so much, Ramanpreet Sohi, for coming in today, answering all of our questions. And, on the face of it, the numbers actually look very good. There's another income component, but I have not had a chance to ask Mr. Sohi about it. Very quickly, Mr. Sohi, your other income has increased to about 100 crores. Can you give us an idea what that is?
So it's about 10 crores for the quarter. I think that's
10
because we've done, we've raised primary through IPO. So we park those funds, in certain fixed deposits, which is yielding certain interest income. So I think that's it. There are clear plans to invest that as we are aligned in the IPO.
All right, that's a smart move as CFO, as interest rates go up. Thank you so much, Mr. Sohi, for speaking with us. We'll take a very short break, but we'll be right back. Stay tuned.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
फिस्कल डिफिसिट के नंबर को आपने अच्छे से मैनेज कर लिया, तो थोड़ा खर्च करने का रूम था, चाहते थे तो कर सकते थे आप, लेकिन वो उस चक्कर में भी या उस लालच में भी आप लोग नहीं आए। मेरा कहना आपके पास स्पेस था, फिर भी क्यों नहीं किया?
सबके मन में ये जरूर एक भरोसा, कॉन्फिडेंस था कि जनता समझ रही है कि जो योजनाएं हम तक पहुंचा और सरकार जो ट्रांसपेरेंट तरीके से किसी लालच में नहीं पड़ा और कुछ लीपापोती करने का कभी कोशिश नहीं किया, ऐसे सरकार जिसका समर्थन होना चाहिए हम देने को तैयार है, ऐसे मूड में देश है।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Welcome. This is Earnings Edge, and we are taking stock of earnings from Electronic Marts India Limited, where it's been not only a strong quarter, but also a strong 9 months coming through on account of the expansion that the company has taken through the course of the last few years. And well, that perhaps is also playing out in terms of the kind of growth that we are seeing as far as the company is concerned. But to take us through the numbers, as well as what we can expect going forward, we are in conversation with the CFO of the company, Premchand Devarakonda. Prem, good morning. Thanks so much for joining in. Let me start by asking you about how your assessment of the quarter has been and what are the key highlights here?
Yeah, I would say that this is a wonderful quarter. So maybe the best in the history. What happened now, in this quarter, two significant things happened. One is the entire festive season fell in this quarter. And second is the World Cup. So because of that, there is definitely good growth in all the categories. So it is positive on our side.
Right. Prem, I want to understand your geographical current standing as well as expansion going on. Now, from what I gather is that at least your physical presence is in Andhra Pradesh, Telangana and Kerala. Can you tell us about the plans on the anvil with respect to how many more stores that you are looking to perhaps add, not only in the fourth quarter, but maybe the plans that you have for FY25? Secondly, what geographies will these physical brick and mortar stores come through? And thirdly, if you could also give us an idea about your online presence and where that can expand, whether or not that can expand to other states. Again, for the benefit of our viewers, you are present as far as your online is concerned in Maharashtra and Delhi NCR. Can you take us through all these factors?
First thing, I would like to correct a small thing. Our presence is AP, Telangana and NCR. So in Kerala, we had just only one store. It's only an experimental stage. So our focus will be on existing markets like Andhra Pradesh, Telangana and NCR. So as we speak, we have close to 15 stores operational in NCR. And the balance, about 135 stores are operational in AP and Telangana. So, and then in Kerala, we have only one store, so that can be neglected. And then second part is our future expansion. So we will be organically expanding our stores in the AP and Telangana states. Maybe by end of this financial year, we will be adding at least 3 to 4 more stores in existing markets, and close to 5 stores will be added in NCR. So that will be our plan for the current financial year. And next year, we will be adding 25 more stores in these 3 markets. So these are all large format stores. And coming to that online presence, like our focus is only limited in this online platforms. We are selling through Flipkart and Amazon platforms, and that contributes less than it's about 1% of our top line. So that's why our total entire focus will be on bricks and mortar stores.
Right. Well, if you can, then in that case, also give us an idea about the split in terms of mobile phones, electronics, and of course, large and small appliances. How is this ratio currently standing, and whether or not you do in fact expect a little bit of a change, a little bit of a shift as we move into the next year?
Historically, this ratio remained more or less same. I mean, I'm talking about over the last 3-4 years. So since this what you call smartphone revolution, so mobiles have been contributing the maximum. So that is almost 1/3 of our sales come from mobile segment only. And then air conditioner is around 12%. Laptops is about 5%. Refrigerators will be 10%. And home entertainment will be another 16%. and others will be 15%. And this mix will more or less remain the same, even if we compare the previous quarter to the current quarter. So the sales mix is more or less same.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
अंतरिम बजट के बाद वित्त मंत्री निर्मला सीतारमण का ये पहला इंटरव्यू है। प्राइवेट नेटवर्क में ये पहली बार हमसे बात कर रही हैं।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
Hello and welcome. This is Samina Nalwala and with me is Agam Vakil. You're watching the Earnings Edge. Well, it's the markets largely are quiet, focusing on earnings, and pretty much the street is dominated by earnings reaction in terms of trade. Well, we have two big Tata Group companies that we're covering on the next 20 minutes of the show. First up is Tata Power. Praveer Sinha, CEO and MD of Tata Power, joins in to walk us through the numbers and the outlook for the company as well. Mr. Sinha, thank you very much for joining us today on the show. Mr. Sinha, let's begin with the numbers that you've posted. More or less flat in terms of revenue. EBITDA is up marginally, margins remain flat, profits also largely in line with what we saw in the same quarter last year. You want to talk us through how the core business is doing and what's happening on the margin front as well?
Yeah, good morning and thank you for having me on your show. I think we need to look at the results, that consistency is coming in the company. And second is that whatever we are doing, it will be sustained going forward. So that's the good part of the result. Also, the important part of the result is that we are seeing that our performance is now tilting more towards our core business. All our existing operations, whether it is our generation or it is our transmission, distribution, renewables, have yielded good results. And this time, nearly 71% of our profit has come from the core business, which we expect in the future quarters will move to 80 to 90%. Secondly, what is also important is that many of the changes that we have made is stabilizing our operations, and this will ensure that there is a much better and consistent performance in the long run. So it's a very satisfying quarter as far as we are concerned.
So let's take this one at a time. And what we did realize was that the third quarter results was impacted also because for Indonesian coal. Now that has been a key driver of profitability for Tata Power over the last 2 years. This time around, it's actually impacted your profits in a negative way. You want to talk to us about what the net long positions there stand at and what's the outlook on Indonesian coal?
So the Indonesian coal impact to a large extent was last year when the coal prices went up. But if you see it in last 10 years, the Indonesian coal business has not given very great yields. It has given consistent yields, but it has been very stable in terms of the yields that it has given. It was only last year that we saw a huge increase because of the prices of coal. That has now come back to a much stable level, and we expect that it will remain around the same level going forward. So there would not be much of a yo-yo that one would see in the coal prices. But what it also means is that it is giving opportunity for our existing businesses to further enhance their profitability and ensure the consistency, notwithstanding the fact that the contribution of the coal business is less. So I think what we need to see is whether our core businesses are giving us the type of returns, and some of the non-core businesses which were one-off, as to that extent, even with their less contribution, we'll be able to do better.
Right. Mr. Suzana, a question on the generation business. I know that on a sequential basis it's been largely flattish, but year on year we have seen a slight decline when it comes to revenues coming in. What are the challenges here? Why is it that this decline has in fact come through? And you earlier alluded to consistency. Can we perhaps expect from here on a little bit of an improvement as far as the generation business is concerned?
So in power business, revenue has no meaning because it is based on the prices of coal. And last year, since the prices of coal were a little higher, the revenue was higher. What is important is how is your operating profit and how is your EBITDA and PAT, which has shown a very good increase in this quarter. So I think our generation businesses are doing very well. The availability of the plants have improved. Their scheduling takes better because they are very good in merit order. And the efficiency improvements, the benefit of that has started getting seen in terms of better EBITDA and operating profit and the PAT. So I think generation business is a very, very stable business and is a cash cow of the company. And it will continue to do so in future years too.
Right, so and that is evident in the profitability as well. A question then on renewables as well. So what are the plans on the annual in terms of the full financial year? Where have we been in terms of the capacities? By the end of this financial year, that is by the end of fourth quarter, where do we expect capacities to stand? And what are the plans for FY25 going in?
So you will see a lot of capacity addition happening in the last quarter. Last year, we went a little slow on executing some of the projects, considering that the cost of the modules were very high, which has come down in last 6 months, and we will be taking benefit of that by executing large-scale projects in this quarter, as also in the quarter 1 and quarter 2 of FY25, and thereby improve our margin. And we do expect that from our present capacity of nearly 4,300, we'll reach a level around 5,000 megawatt by this year end, but you will see more capacity additions happening in the next financial year. And we are all geared up to implement the projects. All the land is there with us. The evacuation arrangements have been tied up. So also the procurement of the modules. So we will implement, we have nearly 5 gigawatt of projects under implementation, and most of them will get implemented in next 12 to 18 months.
Mr. Sinha, while we are on the space of renewable energy, I have a couple of questions here, but let's start with the government's initiative on solar rooftops. Now, you own a pretty large, significant market share in this space. When do you think this is going to be revenue accretive?
Yeah, it is going to be very revenue accretive and also profit accretive. This could not have come at a better time for Tata Power, because the requirement in this scheme is that it has to be domestically manufactured modules. Our module plant is ready and it has already started production. Our cell plant will be ready by first quarter of next financial year. So we will be able to produce these modules and supply for the rooftop business. The project is a huge project. We are expecting something like 30 to 40 gigawatt of capacity addition that will happen in next 3 to 4 years under this program. And we already have at present a rooftop penetration of 18%. We expect not only to continue that sort of market leadership, but also enhance it, considering that we are very well placed with being there in more than 400 cities, with more than 500 channel partners. So I think we'll take huge benefit of our existing infrastructure and our existing penetration in these markets to provide good quality service.
Quick follow-up on that. While it is still early days for solar rooftops, and you've mentioned that you own 18% of the market share, what sort of a percentage contribution can we expect from this segment on your top line in the near to medium term?
At this time, I would not like to hazard a guess, because I still have to see the details that what sort of subsidy is to be provided and what sort of financing support. But to tell you that this is a business which will be basically a sale business that we will be doing, and it will have a very good margin, because there is no investment that we need to do in this, and it is pure sale and supply of rooftop solar and the maintenance of it. So it's a very, very cash positive business. It's a business with a very good margin.
Mr. Sinha, we've been given to understand that while EPC in renewables has been very strong, there are still some challenges when it comes to the plant load factors in some of your your renewable generation. Can you tell us anything about this?
So we had done benchmarking with similar plants in similar locations, and we find that we are benchmarked in the sense that in most of the places our availability and our generation is much better than any of the other modules or other suppliers of electricity from there. So to that extent, we are very confident, and we keep on working and using many of the digital technology to ensure that our performance of the solar and wind plants are top of the line. However, what we have also seen is that there are huge weather pattern changes that happen. So the number of days of sunshine in few months have changed. Not that on an overall 12-month basis it has changed, but in some quarters it has reduced, and some other quarters it has increased tremendously. So also the wind speeds. The pattern of wind speeds have changed. What used to be very high wind speeds in few months has reduced, but in subsequent months it has virtually. So on a 12-month average, we are very much there, and we do hope that some of the digital technology and artificial intelligence solutions that we are using will ensure that our plants work at the best performance capacities.
Mr. Sinha, one quick question that I'm going to try and squeeze in. I know that you've successfully, in fact, Tata Power successfully managed to win lots of renewable energy projects and the concessions. But I believe the focus really remains for the industry is, to make this a profitable venture going ahead as well. So in terms of outlook on profitability, is this sustainable? Are we expecting an uptake? I know, input costs are benign, but very difficult to predict in that sense. Just give me some color to what we can expect in terms of profitability going ahead.
So I think Tata Power has been very cautious, and in terms of capacity addition, compared to many others, we have not gone just chasing projects, but we have been very calibrated and have only bid and won projects, which has given us the type of returns that we are expecting. And we have lost many projects because of that, because we don't want the winner's curse. Having said that, we are also looking at coming up with complex solutions, which typically are hybrid solutions of solar, wind, and storage. And with our pumped hydro also coming up by 28, 29, we'll be in a much better position to offer 100% renewable energy to the consumer with a mix of solar, wind, and pumped hydro. So I think we will work on a very calibrated manner. We will also expand capacity, which will only give us better yields. Otherwise, we just don't want to take projects for the sake of adding capacity.
All right, Mr. Sinha, we leave it at that. Thank you so much for joining us and taking us through the many factors that have driven the performance for Tata Power this quarter and also what we can expect going in. Well, on that note, it's time for a quick break. But on the other side, we get you the management of Tata Chemicals. Stay tuned to NDTV Profit.
Co-presented by Patanjali Honey, world's best Patanjali Honey, 100% proven on more than 100 parameters of purity.
फिस्कल डिफिसिट के नंबर को आपने अच्छे से मैनेज कर लिया, तो थोड़ा खर्च करने का रूम था, चाहते थे तो कर सकते थे आप, लेकिन वो उस चक्कर में भी या उस लालच में भी आप लोग नहीं आए। मेरा कहना आपके पास स्पेस था, फिर भी क्यों नहीं किया?
सबके मन में ये जरूर एक भरोसा, कॉन्फिडेंस था कि जनता समझ रही है कि जो योजनाएं हम तक पहुंचा और सरकार जो ट्रांसपेरेंट तरीके से किसी लालच में नहीं पड़ा और कुछ लीपापोती करने का कभी कोशिश नहीं किया, ऐसे सरकार जिसका समर्थन होना चाहिए हम देने को तैयार है, ऐसे मूड में देश है।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
you can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Welcome back to Earnings Edge, and we are now in conversation with the management of Tata Chemicals, Managing Director R. Mukundam, who's joining us on the show. Welcome and thanks for joining in. Well, my first question to you is, of course, it had to, most probably will have to do with the revenue decline. And from our understanding is that we are looking at lower volumes, but also pricing pressure when it comes to soda ash. Can you take us through these challenges and what we can expect going forward, perhaps over the course of the next few quarters?
So thank you firstly. And I think if you look at our last quarter performance, it was impacted by pricing pressure as well as by low volume. Low volume from what we could have done, mainly coming out of US, where we had about 80,000 tons short, which was mainly on account of an extended shutdown and some bottlenecks in the supply chain, especially with the rail movement from our plant to the port. Those issues are behind us, and I think we will be probably producing the full capacity going forward. In terms of the situation on the market side, demand side, we have a fairly good situation in India where demand is growing. In China, surprisingly, is being resilient. It's about 4 to 5% growth. US domestic market, again, is fairly stable. There is a bit of softness in Latin America. Most sectors are fine, except that lithium sector may suffer a bit of pressure for a couple of quarters. But the long-term sustainability story in lithium is fairly strong. The main pressure point for us has been in Western Europe, where about 1 million ton was taken out of the market because of the collapse of demand there. And that has meant that material which was going into Western Europe from Turkey had to find home in some other markets, which put pressure on pricing. We expect this capacity rationalization and capacity optimization in Europe to play out maybe next 2-3 quarters. Once that starts to play out, I think the pricing environment will become more stable, and we would see changes in the pricing environment going forward. So we do see a short-term pressure to be there with bias towards upward bias in terms of pricing. But in the medium and long term, we see that the demand conditions are fairly robust for the chemicals we make, driven by sustainability. One of the strongest growth sectors has been solar glass, which has continued to remain robust all the way through. And we do expect both solar and lithium to continue to grow stronger going forward. Other sectors are also in good shape, but main issue is coming out of Western Europe.
Sir, I just want to talk to you about the fact that your US volumes also were down by about 80,000 megatons. I believe there was a plant shut down there, and there was a rail car shortage as well, which has led to lower absorption of your fixed costs and increase in fixed costs during the quarter. And on back of that, we've seen margins also decline very sharply, down to 14 from 22% that was seen in the same quarter last year. Now, looking ahead, what is the outlook on margins? Do you think this is the new range on the margin front, 14% order? Do you think we can go into the 20s as early as next quarter?
Yeah, see, broadly, if you look at the US margin situation, I think from last quarter, the situation would improve on back of two things. One is our contracting for next full year is more or less complete on the domestic market, where the prices are more or less stable and contributions are well protected, and volume should not be having a major impact from quarters ahead. In terms of the exports, certainly, I think the export realization would see a dip of about $100 because the exports are not long-term contracts. They are short-term. They are more or less on quarterly or spot basis. And I think that would create a bit of pressure on the number. But long term, we see our overall margin structure around 20s there and about 40% in India. So those margins should be coming back as we cycle out of this whole situation we are in the next 2 to 3 quarters.
All right. Also, if you could take us through how things are panning out in China. And of course, we understand the solar glass demand has improved out there. Can you tell us about a little more about the current demand environment going forward, what we can expect?
The solar glass market is about 3 million ton market, so it's about 5% of the global demand today. And it's clipping at the rate of about upwards of 10% compounded, and that would continue to grow. Not just in China, it is growing in China, Malaysia, even India is having large solar projects coming on stream. And these would continue to bode well for the sector going forward. In addition to that, we have also seen the new projects which have already been announced where investment has started in lithium in South America would continue to finish. Despite the current pricing environment, which has become more challenging for them in the short term. So overall, the sustainability trend is going to be the clear driver for this business going forward. And we do believe that that would continue to add volumes for the sector, even though there are challenges in Western Europe where volumes have dipped in the short term.
Sir, give me some color on what's happening with Rallis. I know the domestic business has managed to do pretty well in terms of volume growth, and the overall business is also registering some improvement. But I do believe there could be some challenges for the international markets for Rallis going into the next 2-3 quarters.
So in terms of our subsidiary, we continue to work with the management there. And as you would have seen in the management commentary and in the sectoral commentary which has come out, there are challenges in the with the destocking happening in that market, and agrochemical companies are facing headwinds in the international market. But good news is the domestic market remains robust. And Rallis is a good mix of domestic and international, which is why the domestic has done well, but has been under pressure from the international market. We do believe that there again, and this pressure there in terms of destocking has come more from South America, where we believe that another 3 or 4 quarters that would play itself out. Overall, I think the management is focused on launching new products, of giving new offerings to customer in terms of formulation and building its distribution network, and also engaging deeper with the international customers to supply them technical solution, which will. So I think as a team, they are on a good wicket with a focused growth going forward, and we would continue to support the team at Rallis.
Very quickly on debt prepayment, I know that was an objective that you had set out for yourself and the company. Where do things stand on that? Are you on track to make that prepayment of $25 million? And also, I'm going to plug in another question. In terms of your EBITDA and profitability, of course, it's come in much lower, and we are mindful of the fact that, there is going to be some more pressure. But if I had to just get a timeline from you in the sense of, are we looking at 2 quarters out when things actually start looking better materially for the company?
Yeah. So in terms of debt repayment, I think we made a commitment of $100 million payment during the year. $95 million has already been repaid. We would, I think, finish our commitment of $100 million in this current year. And we had said that we would do that pay down over the next 3 years. Our plan of deleveraging continues on track, and that is along with our debottlenecking and capacity addition, which is also on track through internal resources. So our focus on cash flow remains, and we will continue to deleverage, and that should show up with reducing interest costs as we go along, and also with the interest costs coming down. At least that is the anticipation that would also help us pretty much on the bottom line. In terms of the overall issue related to where do we see the pain ending, as I mentioned, that this is immediate term pain, and the way we look at it is that we need to keep a close watch on the situation in Western Europe. Unfortunately, Western Europe has lost its access to cheap gas, cheap energy. Now they have to import LNG, and that situation of high cost structure is impacting that continent. And there are no short-term solutions to this. They have to go through a process of capacity rationalization, which would take at least 2, 3, or 4 quarters. And the industry has to go through this process as Western Europe goes through this correcting its own internal situation.
All right, Mr. Mukunda, we'll leave it at that. Thank you so much for joining us and taking us through the quarter's earnings as well as what we can expect going forward. And that, of course, is the management of Tata Chemicals, explaining how the quarter has been, also laying out the various challenges. And on that note, it's a wrap on Earnings Edge. And stay tuned to NDTV Profit for more news and updates.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
अंतरिम बजट के बाद वित्त मंत्री निर्मला सीतारमण का ये पहला इंटरव्यू है। प्राइवेट नेटवर्क में ये पहली बार हमसे बात कर रही हैं।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential.
Hello and welcome. You're tuned into the Small and Mid Cap Show. I'm Hiral Dadia, and with me is Harsh Saita. Good morning, Harsh. Clearly, if you see in terms of markets, we are in that consolidation phase. let's just quickly pull up Nifty 50. We've broken the 21,700 mark already, seeing cuts of almost around 0.4% as we speak. If you see in terms of Bank Nifty as well, interesting moves coming in on that front. If you have just pulled that one up on the screens, there you go, 0.9% lower. So there is clear underperformance coming in from the financials vis-a-vis what's happening with the benchmarks. Overall, if you see in terms of the top gainers in today's session, interesting names that will come up on your screens right now. Let's just pull up the top gainers of Nifty 50. You'll see names like Apollo Hospital on the back of earnings is up 3%. Wipro is seeing some smart gains. HCL Tech is up in trade. With Apollo, you have a Divi's Laboratories as well as Dr. Reddy's as well. So IT and Pharma is on the upside, whereas pressure building on the back of a Hero MotoCorp on the back of earnings. You're seeing a cut of almost 5%. BPCL trading under pressure. Coal India ahead of numbers is down almost 4% in trade. ONGC on the back of earnings is down around 3.5%. And you have a NTPC also, which is trading under pressure. Harsh, that's with regards to, benchmarks and the large caps. What are you picking up with regards to broader markets?
Oh, there is a bit of a selling frenzy there, Hiral. We're seeing broader markets trading with sharper cuts than the benchmarks. You're seeing 1.5% lower on the Nifty Mid-Cap 100. There you go on your screen, and the Nifty Small Cap down 2+%. And holding out there, it slipped consistently through the day, and it's holding lower. Also in terms of a couple of sectors, if I can highlight, one is the Nifty PSU Bank down 2.9%, of now 3+% on the Nifty PSE as well. So some PSU stocks taking the knock. Nifty Energy is also down 2%, and Nifty Media, which was up in fact early on in trade, is now slipped 2+% from that top. So clearly you're seeing cuts across the board, 2% lower on the Nifty Realty as well. But as we always do on this show, we'll focus on specific stocks, and one of them, and we'll focus more on the infra pack today. We have two infra companies for the small and mid cap show today, and we have PSP Projects in focus. The company posted third quarter results, margin and net profit fell, but revenue has risen double digits. Order inflow and revenue guidance was largely maintained for FY24. Even capex is seen at 3 to 4% of the top line. Now, just want to try and break this down further with PS Patel, who's the chairman and managing director at PSP Projects, joining in live on the show. Welcome to the show, Mr. Patel.
Thank you.
Right. I just want to try and understand how the quarter's gone for you. 12% plus on the margin front. You've guided for 11 to 13. Would you, given the strong quarter this time around, would you care to up that guidance, if at all?
No, still we'll remain on the guidance the same side, but the third quarter was little bit low from our side because there was an incremental construction expenses because the projects at UP were going little bit faster, and we have to pay a little bit more on the labor side because we put in more labor for that work on departmental basis. Also, there is an incremental cost at the depreciation and financial costs, so that has put our PAT little bit down. So 1.5% dip down at the EBITDA level and 0.6% at the PAT level. But we'd like to still maintain our guideline of 11 and 12% throughout the year.
Right. Mr. Patel, this is Hiral on this side. Now, one of the concerns I have with regards to the third quarter is that the margins have come in lower on a year-on-year and sequential basis. Execution with regards to UP has been slightly lower. What's the sense that you pick up? How much of revenue recognition is still pending in terms of UP, and by how much do you think it will help you regain your margin profile? Do you think it will be back to that 12-13% range?
See, UP, if you have seen the figures for the UP is 250 crore for this quarter. So we are almost through with almost all the projects. So about more than 60 to 65 crores only the work which is being left from the total of 1491. So probably now we are out of that risk of UP projects because that project was a little bit delayed after once it was started in just after Corona. But now I personally feel that the margins will be intact. Just this was the quarter where we have found that construction expense going a little bit high because we have a target to complete the projects by January.
Right. So, Mr. Patel, now firstly, in terms of the orders that you have in terms of L1, is that enough to achieve your order inflow guidance of FY24, which is around 3,000 odd crores? And secondly, with the order book that you have in the first 9 months of FY24, what's the kind of revenue visibility that you have from that?
See, we have projected a order inflow of about 3,000 crore. I think out of the 1930, we have already declared as the order gain. And still there are two orders of one is 630 crore of Gati Shakti University at Baroda and one is museum at Science City. Both the order putting together will be somewhere in the range of 900 crore. So we'll be near to 2,800 crore and there are one or two small orders which we are expecting there. So probably by March end there won't be any issue related to the governance or the guidelines which we have given for this year. And going forward with the order book of today's outstanding of till the 9 months was 4,400 plus this order book will put us next year to a revenue of 3,000 crore which we have projected.
Understood. Got it. And with regard to your latest fundraise, 300 odd crore, how do you see that playing out? Is that going to be debt, equity? How are you funding it? And where are you going to utilize that amount which you are raising?
See, everybody knows that there is a blockage of money at the Surat Diamond Boot site of about 140 to 150 crore. And that was the reason that money is being blocked since March 2022. But this process was just for the enabling part that we may go for QIB, not on the debt side. So this is an enabling part. If we get the right opportunity at the right investor, we'll go ahead with QIB.
So what's the kind of dilution that you're looking at?
See, we have taken a permission of 300 crore, but probably will not go beyond 200. So it'll be in the range of 4.5%, 5%.
Okay, so 4.5%, 5% is the kind of equity dilution that you will be looking at.
Yeah.
Okay.
And with regard to this 300 odd crore raise that you're doing, you also have an incremental, or I've seen a debt spike, between March of 23 and September of 23. It's gone up from roughly 150 to 400 crore in terms of your debt, roughly. What is the cause for that, and will it remain at the 400 crore kind of level?
See, as I already said, that we have a legal matter going ahead with Surat Diamond Bush, where we have gone for Section 9 as of now. Still, till we start arbitration, we have to safeguard our money. We have entered into Section 9 as of now. And now, from the books itself, it is 150 crore block from the bills which we have already booked for Surat Diamond Bush. So that the overall working capital has been a little bit stretched, and the inventories with which we are going on, I think this is stretch of working capital is since last 1 year, and the order book which we are now expecting is about to the extent of 3,000 crores. So there will be some money required for growth capital, and before we don't have to go to arbitration and reconciliation at STB, and before that it ends at Section 9 and the client comes to conciliation, then there won't be any too much stress in terms of working capital or growth capital for next month.
Okay. Now, with this, I'm just looking at the order book as well, and if you have to divide it between public and private, private is around 49, government is around 51, so that's pretty much 50-50. But in terms of regions, you have high concentration with regards to Gujarat, where 87% of your revenues come from there and 13% comes in from UP. But before I take that question from you, these are live visuals that we are getting from the RBI as well. That is, Shaktikanta Das. We will start getting comments soon, and this is the budget discussion that will be commencing shortly. So those are live visuals that are coming in, with regards to RBI governor and the FM meet that will be commencing. And RBI governor is on his way to meet the FM budget discussion. These are live visuals that we are picking up so far. We will get you more coverage on it as soon as it begins. Mr. Patel, apologies for the same, but clearly, we were talking about the location-wise concentration, which is 87% Gujarat, 13% UP. What is the plan with regards to diversification? And do you think, concentration only in terms of Gujarat is a risk?
No, it's not like that. It is always better for a company like us who is performing in Gujarat since last so many years. But at the same time, we are also not restricted to going out of Gujarat. That's the reason we have worked for Rajasthan, we have worked for Karnataka, and we have worked for majorly in UP also. And few days back, we had a meeting with UP government that they have already announced an order of about bids of about 7,000 crore. Also, in this year's capex, they have put in 2 lakh crores of capex out of that budget of 7 lakh crore. So probably there will be huge investments coming for the infrastructure. That 2 lakh crore, even if it is used as 30 to 40,000 crore for building and rest of the thing for infrastructure, I think companies like us will have a better opportunity in UP also. So it's not about the region. Yeah, of course, when we are getting good opportunity in Gujarat, it is better for a company like us. But at the same time, still we have that option of going to UP or other state whenever there is an opportunity, whenever there is a qualifying criteria where 4 or 5 companies or maybe 6 top line companies are qualified. So we are open to them.
Understood, Mr. Patel. Now, 2,600 crore is your FY24 target guidance for revenue, which is a 30% growth over FY23. Where do we go in FY25 now?
See, usually we envisage it is in the range of 15 to 20%, but every time we go beyond to 30%. So on the conservative side, we'll put it as 15 to 20%. That's why I've already said that growth for the next year revenue will be in the range of 3,000.
Right, so 3,000 crores is what you're aiming at as well. Thank you, Mr. Patel, so much for speaking to us at NDTV Profit. Let's just pull up a one-year chart in terms of PSP and see what the stock has done so far. There you go. Today, we're seeing cuts of around 4.5%. In the last 12 months as well, no major moves, a pretty flattish, graph is what you're seeing with regards to where PSP projects is concerned. But let's quickly slip into a short break. Up next, Prasad Patwardhan, CFO Cementation, will be joining us to discuss their Q3 numbers as well. Please stay tuned.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash, made from 51 precious herbs.
फिस्कल डिफिसिट के नंबर को आपने अच्छे से मैनेज कर लिया, तो थोड़ा खर्च करने का रूम था, चाहते थे तो कर सकते थे आप, लेकिन वो उस चक्कर में भी या उस लालच में भी आप लोग नहीं आए। मेरा कहना आपके पास स्पेस था, फिर भी क्यों नहीं किया?
सबके मन में ये ज़रूर एक भरोसा, कॉन्फिडेंस था कि जनता समझ रही है कि जो योजनाएं हम तक पहुंचा और सरकार जो ट्रांसपेरेंट तरीके से किसी लालच में नहीं पड़ा और कुछ लीपापोती करने का कभी कोशिश नहीं किया, ऐसे सरकार जिसका समर्थन होना चाहिए हम देने को तैयार है, ऐसे मूड में देश है।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Welcome back. You're watching the Small and Mid Cap Show. ITD cementation, that's the stock to focus on the back of a spectacular set of numbers that have been reported. Now, clearly, 113% jump in terms of profitability. Margins have improved by almost 231 basis points and a 50% growth coming in on the top line. Prasad Patwardhan, CFO of the company, joins us now. Prasad, good morning and welcome to the show, and congratulations for a great set of numbers that have been reported.
Thank you very much. Thank you for having me on the show.
Always a pleasure to speak to you. Prasad, with the numbers that we are seeing, is this something which is going to be sustainable in the coming quarters as well? Or do you think you see normalization at a slightly lower level?
Well, in terms of top line, we expect to only gradually keep on improving on this performance. We have the orders in hand. So, I mean, it's just a matter of executing the orders that we already have on hand. And we are looking at opportunities, further opportunities in the infra space, which will be coming up in this current year as well. So we hope to continue with this performance and improve upon it in the next financial year as well.
Point taken. Harsh also joining in. For 9 months FY24, you've won orders worth 6,100 crore. Your target for the full year FY24 was 8,000 crore. That's a 1,900 odd crore difference which you will have to bridge in Q4. Also, your single Q2 quarter order win was 4,500 crore. Give us some perspective, firstly, whether this is achievable, and secondly, what's happened? Q2, such a large order win, Q1, Q3, not so much. Could you give us some perspective?
Our order wins up to December 23 was about 6,100 crores. Subsequently, we have won orders for about 700-800 crores already. And we need to see how the remaining 1.5 months pans out, and hopefully we should be able to get some more orders in the current financial year. Coming back to your other question, yes, a couple of orders were received by us in Q2. There was one large marine order which we'll be executing on the East Coast that is worth about 3,300 crores, and one order where we were L1 for quite some time. This is an overseas order that we won in Bangladesh. So both these orders, happened to materialize at the same time. Although in the Bangladesh order, we were L1 for quite some time before that. So that is why you see a bit of a lumpy order inflow in Q2. But otherwise, in the current financial year, we have an order for about 6,800 crores so far. And we need to wait and see how things pan out in the remaining 1.5 months. Hopefully, we should be very close to that target of 8,000 crores in this year.
Okay. So basically, if FY24, you're aiming to actually accomplish the 8,000 crore worth of orders, what's the incremental order inflow growth you're looking at in terms of FY25? And secondly, in terms of 8,000 crores that you're aiming for FY24, what percentage of the revenues of this will come in FY25?
Well, our order inflow for FY25, we expect to win orders worth about 8,000-9,000 crores. However, this comes with a bit of a caveat that in the first quarter of the next financial year, because of the elections, Lok Sabha elections, there may be a bit of a lull in new tenders coming up for bidding. So hopefully, once the new government is in place again, we'll see a pickup in infra spending and more focus on infrastructure going forward. So we still feel that we should be able to get around 8,000-9,000 crores of orders in the next financial year.
And what about from the 8,000 crore of orders that you're looking at in FY24? How much of the revenue, how much of it will happen in terms of revenue recognition in FY25?
Well, we'll even if we get some orders now in the next 1.5 months, the monsoon is not far away. So the execution is likely to pick up on these new orders only post the monsoon. So while we may not see significant contribution of those orders, I think 6 months of execution period would still be available in the next financial year. So there will be some contribution coming in from the new order wins in FY25 as well. However, at this stage, it all depends on the timing when the order is placed on us and when we are actually able to commence execution of the project. So it will be difficult for me to give you a number at this stage, but we'll wait and see how things pan out.
Sure, and on your 20,000 crore order book itself, what is the kind of execution timeline that you're seeing broadly on that number?
It should be broadly in the range of 3 years.
Sure, understood. And therefore, your FY25 revenue target would be in the range of 8,000 odd crore. Would it be a 2,000 crore quarterly kind of a clip that you would want to go at?
No, we are actually doing 2,000 crores even now. So we are hoping for a maybe 15-20% growth in our top line in FY25 over FY24.
Okay. So you would therefore do roughly almost 9,000 crore in FY25, if I understand right. Could you confirm that?
Yeah, that's right. It should be somewhere in that range. We hope to close this year at around somewhere between 7,500 to 8,000 crores, and 15-20% growth over that is something that we are hoping for in FY25.
Got it. So that's in terms of numbers. When you talk about top line, how is the leverage looking like? Because the company has been constantly pursuing lower debt. Gross is around 860 odd crores. Net is around 400 odd crores. What does it look like going ahead? Any anticipation of an increase in debt happening, and specifically from a working capital perspective as well?
Well, with new order wins, we need to invest in working capital at least for the initial period of the project. So there may be some increase in the working capital requirements going forward, but we don't expect to see any significant increase in our debt levels going forward. We hope to maintain it at more or less the same level, or maybe a 5-10% rise beyond that. But we don't expect too much growth in our debt going forward.
Sure. Also, with regard to your margins itself, double-digit margin clocked. Give us some perspective. Maybe I can cut this in two pies. One pie is the older orders that you've won. What is the kind of margin expectation there? And with regard to the newer ones, would you continue to expect a 10 to 12% kind of a margin number on some of the new ones? What's the target like? How are you bidding accordingly?
Well, the older orders are more or less out of the system. The legacy orders are almost through. So we expect to maintain the current, the margins that we are reporting, or maybe slightly improve upon it going forward as well.
Right. So overall, Prasad, in terms of the return ratios as well, if you have to compare it to peers, we're in that 10-10.5% kind of a range on the ROE. Where do you see it moving from here on? Because if you look at a lot of competition, there are companies who are above that 20% mark. So how are you seeing that improve from here on?
Well, we have seen an improvement in our ROE numbers over the last year or so, and I'm sure it will continue to improve going forward. What we were talking about just now was, the EBITDA margins on the projects that we execute. But as the scale of operations goes up and we continue making these, 10, 11 or maybe slightly more margins, it will certainly add to our bottom line, and the return on equity ratios are bound to improve going forward.
Sure, understood, sir. And with regard to the kind of pipeline or rather the kind of demand traction that we are seeing overall, just in general within the infra space, I want to try and get perspective. Are you consciously avoiding certain categories of projects that are coming to you in terms of asking you for or requesting you for a quote, or is it that and therefore you're preferring certain higher value and higher margin kind of businesses? Is there that kind of trend playing out for you?
Well, there are two things. One is, we have expertise and experience in maybe 4 or 5 different segments in the infra space, be it underground metro, marine projects, tunneling work, or, that sort of work. So we are focused on those segments where we have the experience and expertise. At the same time, we are conscious of the fact of where we are today, and we need to keep on building on our order book to continue with the growth momentum going forward. So, while we are conservative on one hand, we would like to focus on the sectors in which we have the experience and expertise.
Right, so sectoral focus is going to be key as well. Thank you, Prasad, so much for speaking to us at NDTV Profit, but running completely out of time. With that, it's a wrap on this edition of the Small and Mid Cap Show. Thank you from Harsh and myself. Continue to be logged into NDTV Profit. Lots more lined up on the other side. Please stay tuned.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
अंतरिम बजट के बाद वित्त मंत्री निर्मला सीतारमण का ये पहला इंटरव्यू है। प्राइवेट नेटवर्क में ये पहली बार हमसे बात कर रही हैं।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
headlines you start your day with. What matters worldwide?
Good morning. You're watching Market IQ. I'm Smriti Chaudhary and this is NDTV Profit. Let's take a quick look at the markets. Markets are in a downturn. We started off on a higher note, but the Nifty 50 is trading with cuts of about 0.2%. Broader markets are actually following the lead. In fact, are trading with the Nifty Midcap 150 trading with cuts of about over 1%. Nifty small cap down about 2% in trade today. It's a sea of red in the markets. But if you look at the sectors, we have the two shining sectors in this sea of red today is Nifty IT, that's trading up about 1.5%. The other one is the Nifty Pharma Index. It's slightly in the green. So we'll see how this plays out going forward. But let's look at some of the constituents of the Nifty 50 as well. Now, if you look at the losers, we have Hero MotoCorp. That's the biggest loser in the index today. It's down about 5.5% following its third quarter earnings. Then we have BPCL also down about 4.5%. Coal India down over 4% as well. If you look at the gainers in the market, we have Wipro. As I said, IT is the gainer today, and Wipro is leading gains in Nifty 50, up over 3.5%. Apollo Hospitals also up over 3% in trade. HCL Tech, Divi's Labs. After a decent earnings, I would say, Divi's Lab is up in green today, up about over 2% actually. So that's where we are currently stand on the markets front. But we will soon be taking the questions for Ask Profit as well. Before that, okay, all right. Let's look at some other stocks that are moving today. If you look at the Nifty Midcap Index, we have, if you can pull up Nifty, let's pull up the market breadth first. Let's see where what kind of advances and declines. There you have it. So if you look at it, we started off on a stronger note with favoring the advances, but as we have moved to half a day, like midday, we have declines that are leading, and there's a wider gap. Now, after a stellar Dalal Street debut for APJ Surrender Park Hotels, the stock lists its over 20% premium on its IPO issue price. This is the primary markets we're now focusing on. We caught up with the management on how they plan to use proceeds. Here's a slice of that conversation.
We definitely are going to expand on the asset-light side of the model. Currently, in the asset-light side of the model, we have 1,018 keys. These keys we plan to raise by 1,753 keys to arrive at a number of 2,071 over the next 5 years. Overall, our plan is to raise our keys to 4,403 over the next 5 years. So we are going to be highly focused on all sides of growth, that is our own properties, the asset light, as well as the leased properties.
Okay. Also, your 3-year average ROE and ROCE are minus 3.2% and 3.4% respectively. The ROE stood at 8.9% in FY23, while the return on capital employed was approximately 11% in the same period. Where do you see this going forward? What is the trajectory that you're looking at?
So the numbers are going to significantly improve as we use the proceeds of the IPO to retire the debt. So we would be a debt-free company, firstly to begin with, and we will obviously have a significant amount of cash flow going forward. So all these parameters are going to significantly grow going forward.
All right. Also, your revenue concentration is around 75% of 75% of your revenues come from your top 5 hotels as per FY23. So this could be a concern for you. How do you plan to overcome this? Do you have any strategy in mind?
So as far as our hotel strategy is concerned, we currently are market leaders in occupancy and RevPAR. We have outright leadership in terms of occupancy. Our occupancy of 92%, we have done an occupancy of 92% last year. And this is a 30% premium over our competitors. We have the highest occupancy in the country. We are also market leaders in RevPAR, outright market leaders in RevPAR in the segment in which we operate. We have a very, very strong position in terms of F&B. Our F&B contributions are among the best in the country. We are among the best in terms of EBITDA margins, and we are going to grow at a significant pace in the years ahead.
All right, that's all about the primary markets. But we'll slip into a short break right now. But after the break, we have Shiv Diwan, Managing Director and Head Institutional Equities at Nuvama Capital Markets, joining us for a conversation. Stay tuned.
फिस्कल डिफिसिट के नंबर को आपने अच्छे से मैनेज कर लिया तो थोड़ा खर्च करने का रूम था, चाहते थे तो कर सकते थे आप, लेकिन वो उस चक्कर में भी या उस लालच में भी आप लोग नहीं आए। मेरा कहना आपके पास स्पेस था, फिर भी क्यों नहीं किया?
सबके मन में ये ज़रूर एक भरोसा, कॉन्फिडेंस था कि जनता समझ रही है कि जो योजनाएं हम तक पहुंचा और सरकार जो ट्रांसपेरेंट तरीके से किसी लालच में नहीं पड़ा और कुछ लीपापोती करने का कभी कोशिश नहीं किया, ऐसे सरकार जिसका समर्थन होना चाहिए हम देने को तैयार है, ऐसे मूड में देश है।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit. Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask.
Welcome back. You're watching Market IQ. As promised, we have Shiv Diwan, Managing Director and Head Institutional Equities, Nuvama Capital Markets, joining us on the show. Welcome, sir. Thank you for taking the time out and speaking to us.
Good morning, Smriti, and thanks so much for having me on the show.
Okay, so let's start off with the conference that you're holding on, and tell us a little bit about what the conference is about and what kind of response you're getting from corporates as well. What kind of participation rather are from the corporates?
So, I mean, we're doing this. This is our flagship India event that we do every year in February. This is the 19th year in running, and this time the theme of the conference is now more than ever. We totally believe that, this is the best time to be invested in India and to sort of stay invested for the long term, because it's obviously a very interesting market. And our belief is that for the next few years, with the kind of political stability, macro stability that you're seeing, it offers a fantastic investment, an investment opportunity. So we've got this conference which is set up over 3 days. We have about 190 odd companies that are participating. We have about 700 clients that have registered for the conference. We're currently, we've just started off and it's going to be on till about Wednesday evening. There's been some fantastic participation from foreign institutional clients as well. So it promises to be a very, very good event.
Spoke about 2025 and some participation from foreign institutions as well. So I think you're the right person to tell us about the pulse of these institutions and how they're feeling about India and the growth in India for the longer term. Tell us a little bit about that.
So interestingly, this time around, at least I get the feeling that far more people are open to investing into India than probably the situation was 3-4 years ago. India's relative positioning in world markets has improved meaningfully over the last 3 years, and that's showing up. What also helps is that other emerging markets haven't been as exciting of an opportunity as India has been. So that also obviously doubles up the quotient for India. I think the experience for a lot of the investors over the last few years has also been very, very good, and which has shown up in the way returns have emerged for people who have stayed invested. I think the foreign institutional investors definitely believe that India is a growth story that's here to stay, and like I said earlier, coupled with the political stability, the macro backdrop, the fact that flows remain strong even domestically, that has only added to the excitement that India is.
Right.
And we have about 60-70 odd FIs that have come into the conference. I'm yet to meet all of them, but the few that I've met are definitely looking excited about at least the next 2-3 years, and I believe the opportunity is definitely there.
Right. Should break this down a little bit more for us now. You're talking to these institutions and these foreign institutions as well. What kind of sectors or themes that you as a group, Nuvama Group, is constructive on, and what kind of investment flows are you seeing in particular sectors? Especially you talked about how well India is placed in the global markets as well.
So, I think last year was all about, real estate and autos, and I think that theme picked up and played out very well. Real estate was coming out of an 8-year lull, and I believe last year was the first big year for them. I think that as a theme continues because there is enough and more demand on the real estate side, and obviously all ancillary sectors will also benefit because of the kind of real estate boom that you're seeing. So that's definitely a sector that's, that's a flavor for now and should continue to be for the next few years. Autos had a re-rating moment last year, and now you will probably see them move in line with the markets as we go along. I think the two sectors that I would believe are starting to look very interesting, and probably this will be the year for those two. One is IT. I think IT is the theme that is likely to play out as a lot of the order books that these companies have all been talking about that will come into fruition, and the benefits of which will start showing up in the next few quarters' results. And the other sector that I think has been in has taken a little bit of a beating over the last few years after a very stellar 2020 or 2019-20 was chemicals. I think the benefits of all the capex that they've incurred over the last 2-3 years should start to yield results. So yeah, I think that's another sector that one should watch out for this year. Apart from that, I think obviously you can't have a conversation without talking about private banks. I do believe that they are also in a situation where things should or are likely to get better from here, with interest rates having peaked and things looking up for the entire space. I believe that's another sector that you can't ignore for too long.
Right. Absolutely. Thank you so much, Shiv, for talking to us and giving us your perspective on how these themes are going to play out in the next couple of years. Well, now that was Shiv Diwan of Nuvama Capital talking about the market and the themes that are going to play out in the longer term. But let's get a little stock specific. And to talk more about that, we have Gaurang Shah, Head Investment Strategist at Geopolitical Financial Services, and Rajesh Palvia of Axis Securities. Welcome, Rajesh and Gaurang, and thanks for joining in. We'll quickly jump into the questions. We already have a lot of questions pouring in. Let's start off with Pankaj. This one's he's writing in from they haven't mentioned the Hyderabad. They're writing in from Hyderabad, and they're talking about the pharma and the chemical sector. Now, on a stock specific front, they're talking about Naveen and Viniti. Now, Gaurang, do you have these stocks in your coverage? And if you do tell us what's your long-term view on this and on the chemical space as well. We've seen some headwinds in the space also.
Thank you, Smriti, for having me on the show, and morning to all of you all. So on Viniti Organics, which is from the pharma, more so from these agro-stroke specialty chemicals, we remain positive on Viniti Organics from a long-term point of view. So if this investor has the stock, stay invested for a long-term period of time. But at the same time, in terms of Q3 earnings, with the certain specialty and agrochemical companies have disappointed a little bit, and hence that kind of underperformance. But long-term, we believe that growth story is still intact. In the pharma sector, well, there are quite a lot of companies from the large and mid pharma, but if I have to focus on top 4 names that on the fundamental that I'm positive, I think Sun Pharma, Cipla, Dr. Reddy's and Divi's Laboratories. These 4 qualify as a top priority in terms of investment ideas.
Right, fair point. Next up, we're talking about ESAF Bank, and this one's from Anuj from Delhi. He's already bought in the shares at 69 levels. The current price is below that. Now, Rajesh, he wants to know that if he should, this is for the short to medium term, if he should continue holding on to it, or if there are key levels that you can tell us about, if this is a good point to exit, or of course that will be on a loss, but would you suggest holding on to it?
So we have very limited data setup in terms of technical. Stock has shown very sharp downtick in last 2 trading sessions especially, and now stock is almost now trading near to its all-time low trajectory. So looking at the technicals, stock is in weak zone until the stock not again recover above 74, 75 level. It may face furthermore supply pressure. So I think our advice would be avoid at this moment. There is a significant downtick which we have seen in last 2 trading sessions. So that needs to settle down at certain price. Then only one should look to buy at this moment. So I think furthermore downside we can see from the current level also.
Right, okay. Next up, we're talking about the aviation sector. This one's from Nikhil from Pune. This one's for you, Gaurang. He wants to know if this is the right time to enter the aviation pack. And he's talking about some correction that has happened, and that the government is setting up a panel to curb the flight rates. I'm not sure if that's the case, but Gaurang, give us a little bit more clarity on this, and a good time to enter into aviation.
Well, I don't know about the timing, Smriti, but I am extremely positive about the aviation sector. And within the sector, there is one company that we have been having coverage right from the time of the IPO, and post that as a standalone coverage is Interglobe Aviation, one of the largest LCC models. Has got a very decent fleet in terms of aircrafts. They have ordered more aircrafts to do a fleet addition and to increase the connectivity under the Udan 1 and Udan 2, which the government has unfolded. Realization per seat, flight occupancy, etc. are up to the mark. The only problem or an overhang in the immediate short to medium term would be the number of aircrafts which are grounded on fallback of the technical issue with the Pratt and Whitney engines, and inability of Pratt and Whitney to service those engines in the near date. But having said that, I think tourism as well as business travel is growing at a great pace. Government's initiatives in terms of making India a holiday destination and opening up much more avenues is something that is extremely positive about. And if you have to just take a green shoot from the hospitality sector, the number of new openings that some of the hotels have lined up, I think that translates into positivity for aviation sector as well. So we remain positive on Interglobe Aviation.
That's a very important point that you mentioned about the green shoots in the hotel sector and how that's going to have an impact on the aviation as well. But next up, we're talking about Walkdart, and this one's from Hari, and he's writing in from Chennai. I'm not sure if he's already bought the shares, but this one's from short to medium term. Now, Rajesh, this has been a multi-bagger stock in the last 1 year. It's under a bit of pressure right now, but is there more upside to the stock in the short to medium term?
So definitely, Smriti, very strong buying action we have seen in last couple of months. The stock is now consolidating since last 4-5 weeks. Looking at the overall structure, we believe that now if the stocks continues to hold above 430, 420 levels, then possibly again we may see another round of rally in short term. And once the stock crosses above 470 mark, then possibly we can see target towards 540 to 560 on the higher side. So overall structure is bullish. Some consolidation action is happening. So I think one can buy and accumulate if he has not bought. So our advice would be one can buy and accumulate the stock with stop loss of 415. Upside target we can see in the short term towards 470, followed by 530 to 560.
All right. Next up, this one's for you, Rajesh. This one's from Rajesh, and he's talking about Som Distillery. And he's already bought in the shares at 320 levels. The stock is on a downtick today. It's down 9% in trade today. Now, Rajesh, tell us if what kind of prospects do you see for the stock in the short to medium term?
So there is supply pressure in the stock, and again, stock is facing the supply at around 270, 260 zone. So until the stock not crosses about 270, 260, again on a weekly closing basis, some more pressure we can see in the stock on the downside. On the lower side, the important support area, which we can see on the near-term perspective, that is placed at around 240 to 35 zone. If at all stocks breaks those levels, then we may see further more follow-up selling pressure in the stock. So at this moment, I think one should wait for this 235 level. If stocks holds those levels, then some pullback action we can see. As already we have seen a significant correction in last couple of weeks in the stock. So 270 on the higher side is the key level to watch for, and 235 is the downside critical level on the near-term basis.
Right. Next up, we have a question from Jaya Krishnan from Coricor, and they're talking about Deepak Nitrate. Now, I know, Gaurang, you have spoken about the chemical sector, but this one in specific, they have already bought the shares at 2,536 rupees. From a medium-term perspective, would you suggest our viewers to continue holding on to a stock like Deepak Nitrite?
So Smriti, don't have a specific coverage on Deepak Nitrite, but it's a strong company. Unfortunately, because of the third quarter numbers being disappointing, not for one, but one too many specialty and agrochemical companies, the sector is underperforming. And even otherwise, if you go to see with the kind of capex and new launches that most of the companies are lined up, there was a little bit of underperformance, and this might get extrapolated to for another maybe 2-3 quarters before we see any meaningful contribution in terms of earnings coming through for the specialty agrochemicals as well as for a company like Deepak Nitrite. Won't be able to answer straight away buy, sell and hold since we don't have a coverage. But if you are investing in specialty and agrochemicals, I think you need to have at least 1.5-2 year kind of time horizon and have patience because of the underperformance that we are witnessing right now.
All right, fair point. Let's take up the next one. This one's from. Okay, this is a stock. It's called Bliss GVS. I'm not sure what stock this is. I'll just. Okay, Rajesh, Bliss GVS. If you can pull up the charts on this one. The question is from. If you look at right, the question is okay. They've already bought the stock at 117. That's the average price for this one. Now, would you suggest an exit from this stock, as these stocks and the time period they're talking about is 6 months? So would you suggest exiting at this point, or should you wait for a little bit?
So Bliss GVS is in corrective phase. Now stock is penetrating to its 100-day moving average on the downside. So that clearly shows, since last couple of weeks, there is a sustained supply pressure is taking place, and stock is showing, little bit weakness on the near term as well as on the short term chart. Until the stock not manages to cross over 125 level, there would be, supply pressure is likely to be there in the stock prices. On the breakdown of 110, there could be more pressure we can see towards 90 level also. So 110 is the critical level. He has already bought at 117, 17. So I think he should follow a stop loss of 110, which is almost closer to the current market price. If it breaks, then possible pressure we can see towards 95 to 90 rupees on the downside also.
So stop loss for this one is 110, as Rajesh said. But we're completely out of time on this edition of Ask Profit. Thank you so much, Gaurang and Rajesh, for joining us and answering so many questions for us. And viewers, thanks for tuning in. We'll be back tomorrow, same time, 11:30 a.m. Do keep writing us to your questions to us, and we'll take them tomorrow. But lots more coming up. Stay tuned to NDTV Profit.
बजट के बाद वित्त मंत्री निर्मला सीतारमण का ये पहला इंटरव्यू है। प्राइवेट नेटवर्क में ये पहली बार हमसे बात कर रही हैं।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right. Some believe in swiping right. Some run away from risk. Others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Welcome, this is NDTV Profit's Earnings Edge. I'm Agam Vakil and with me is Hiral Dadia. And we start by taking a look at the first company, that is JK Lakshmi Cement. It's been what it looks like a steady quarter. We are looking at 9% revenue growth and well, its margins coming in at around 17.9%. against 11.9%. In terms of volumes, we've seen about 7.5% growth year on year, with cement capacity utilization standing at 79% and clinker capacity utilization at 105%. To talk to us about the quarter gone by and what we can expect going forward, we're in conversation with Arun Shukla, the President and Director at JK Lakshmi Cement. Arun, good afternoon. Thanks so much for joining in. Let's start with your assessment of the quarter gone by. How are you looking at things and what can we expect going forward?
Good afternoon, Agam. Thank you so much for inviting me. Yes, we had a very good quarter. All those actions which we have put in place, all those actions are getting realized. So I am happy the way we are progressing and the kind of roadmap we have. I am confident that will even improve further. One of our objective, first milestone was to achieve 1,000 rupees EBITDA per ton. So that we have done last quarter, and hopefully we are going to maintain that in coming quarters as well. So I'm quite happy the way we are progressing, and all right, I think we do have plan to grow further organically. We have announced a capacity addition of 4.6 million ton and a capex of 2,500 crore, which we are going to implement in phases. So overall good, I think going is good.
Right. Arun, overall, if you see in terms of the run rate that we are seeing right now, in terms of top line as well as bottom line, what does it take you to in terms of FY24 and what's the growth that you're looking at in terms of FY25? Because, and the reason I ask is this being an election year.
Yeah, so I see FY24 first, our net sale definitely will be in double digit for sure. January, March typically is a good quarter in terms of volume. And I'm hopeful that we are going to have even better growth this quarter. So we'll close somewhere around, double digit net sale growth in FY24. FY25 also, yes, despite being election somewhere around Q1 of next year, typically April, June quarter is good. Yes, a little bit of impact on account of election, but I don't think much impact because all those, jobs or the projects which are going already going up, they will continue and hence the cement demand will be there. So probably I think Q2 is going to be kind of, combination of impact of election, which would have happened during Q1 of next year. And of course, the cyclicity during monsoon. So Q2 is going to be a little challenging, but till Q1, I see things are going to be reasonably all right.
Right. Arun, you did speak about 2,500 crores of capex lined up going in. Can you tell us where this is going to go in and what sort of capacity can we expect going forward once we see this entire capex being come through fruition?
Yeah, so we have announced 4.6 million ton of additional capacity at a capex outlay of 2,500 crore. And $65 per ton, that is what our estimation is. We are going to put up increase our capacity in East because East we do have limestone reserve We will put up, second line in Chhattisgarh, and there are going to be, 4 grinding stations. One of course at Chhattisgarh, and 3 at other locations somewhere in eastern part of India and central part of India. So that is what our plan is. As you know, additional 2.5 million ton of our subsidiary Udaipur Cement Works Limited is going to get commissioned somewhere around end of March. So along with this 2.5 million ton and 4.6 million ton which we have announced, we have a clear-cut roadmap of 24 million ton plus. As you know that we have a plan to go to 30 million ton by 2030. We are well on course, and hopefully I think we are going to achieve that milestone even before. So this is what I think in terms of our growth plan which we have for coming years.
Okay. Overall, with this capacity expansion, firstly, where does your utilization stand currently? And how much incremental revenue are you seeing at its peak once the capacities come on stream?
So we are at about close to 80% of our cement utilization, and clinker of course is more than 100%. And if you really go to east where we are going to expand our capacity, so our capacity utilization, we have almost exhausted our capacity. If we do not add capacity, then perhaps I think we'll lose market share. So that is what the rationale why we are going for expanding ourselves in east. In terms of revenue growth, I think right now we are at 14 million ton. We'll go to about 24 million ton in coming years in phases, and revenue I think would be almost close to double what we are. That is what I see.
You said that you're looking to consolidate in UP, Bihar and Jharkhand. You also mentioned that your expansion will be in the east. Can you give us an idea about the kind of geographies that you're looking there?
So we are looking. I think we are still exploring, but probably I think places would be there in somewhere in the Bihar, Jharkhand area and UP East as well.
Okay. Arun, with regards to cement pricing, how is the current trend looking like, and how are you seeing it from here on? If we are expecting any increase to come in, how much could that be, and are the markets open to absorb that price hike?
So we are into good demand months. Typically, last quarter of the financial year is good in terms of demand. So I expect prices would inch up a bit, definitely. But if you look at last quarter where we have mix of months, during November we had festivities of Diwali and Dashara, so we had a muted demand. But October and December was good. In North, where we are present, I think we had another issue of severe cold and this, of course, regulation in terms of construction activities. So demand was not that great last quarter, because if you look at last quarter growth was 6% YOY, right? And this quarter is going to be good. Prices are going to be range bound. Definitely, it will inch up a bit because demand is good. That is what I see, but it's difficult to kind of quantify as to how much percentage it will go up.
Right. Arun, we leave it at that. Thank you so much for joining us and taking us through the quarter as well as what we can expect going forward. We wish you the best.
Thank you, Arun. Thank you so much.
Right. But that's the management of JK Lakshmi Cement telling us all that is in store as far as capacities and expansion is concerned. And we slip into a short break. But before that, we get you a slice of the conversation we had with the management of Thermax, which has in fact reported a very strong quarter. Here's what the management had to say.
Overall, from a large projects basis, we have said that for some time, that after the refining and petrochemical, little bit of a down movement this year, we haven't had as much of an opportunity set of large projects. And that, as we look towards the future, is starting to build up again. And we can talk about that as a separate note. I think this one part was not really in our control. What was in our control and we did not do as well was we've been talking about a theme of consistent profitability improvement. And we are delivering that in two big parts of our businesses. the industrial products, which is continuously building both in terms of volume and in terms of profitability, and continues to go from strength to strength. And even in our chemicals business, we have talked about a similar ramp up. The profitability ramp up is showing. I expect the volume numbers to start showing up very well as well. On the project side of our business, which has always had a little bit of this up and down, on our project execution, we did not do as good a job as I would have liked. And so on one big project, we have had to take a bit of a hit, which has pulled the overall profitability of Thermax down. Finally, on green solutions, the numbers were as expected. There was a little bit of a weather-related issue in relating from the floods in Chennai. But overall, a quarter where I thought on the project side we could have done better. And I continue to look for quarters where on the orders side, we do much, much better. So those would be the two asks. But otherwise, in general, the theme around consistent volume, consistent profitability growth, that continues.
Let me kind of ask you a few follow-ups on that, Ashish. On the project side, I heard this execution miss, if you will. Could it be a one-quarter phenomenon, or due to various reasons beyond and within your control but not able to execute types, that it may be a recurring phenomenon? I'm just trying to understand.
So it has been a recurring phenomena. Yeah, it is something where if you take a look, see, Thermax has a history of doing projects where we are very, very tight in our payment terms. We run our cash flows on projects extremely well. Even in the most toughest of years, our projects business has been a business that churns out cash. And that is no different right now. Yeah, our entire projects business runs on negative working capital. It's a very well, tightly managed ship. Where we have had issues is relating to profitability. And historically, the profitability of this business has been in this 3 to 5% range. And we've been trying to and committing that we want to get this north of 5%. And that some quarters we are doing a good job and some quarters we are not, where a particular project we could have a surprise on. But in general, there are two things we are working on. One, saying no to projects where we think the project doesn't fit what we think is good profitable intake for us. Some of it is also reflecting in lower orders that we are seeing on projects. The second bit is doing more and more projects where it is not just EPC, it is EPC plus core technology that we can provide. Yeah, and so as we are starting to move the business in that direction, there will be some areas where we will have surprises. But the long-term path of our projects business is to work more and more in areas where we can do EPC, but with core technology that comes from Thermax. And historically also, the reason we did power very well was that the core technology of boilers was the anchor that came about in this EPC business. So that theme is what we want to continue to build upon.
Co-presented by Patanjali Honey, world's best Patanjali Honey, 100% proven on more than 100 parameters of purity.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trip.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the sector.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Welcome back. You're watching Earnings Edge. Jupiter Lifeline Hospitals, that's a stock to focus on. 7% up move coming in today's day of trade. If you see the margins, good expansion. We're above the 22% mark. Profit, a number of 44 crores versus a loss that was reported earlier. Let's welcome in Ankit Thakur, CEO at Jupiter Lifeline Hospitals, to discuss more. Ankit, good afternoon and welcome to the show. If you could help us understand what has worked this time around where we've gone back into the black now. Margins have expanded substantially as well. Is this something which is going to be sustainable in the coming quarters?
Hi, thank you for having me. So, I think if you look at the EBITDA profiles and margins, they have been fairly steady and growing Q on Q in line with expectations. Probably last year on a consolidated basis, because of Indore being a new hospital and some operating and financial costs there, there was a lower PAT number. This year we have become fully debt-free post the IPO, and also our operating profile of the Indore hospital has improved. That is why on a console level also you see healthy numbers.
All right, Ankit. So tell us about your current bed capacity. And, the last time we spoke about the earnings and what you had, all the plans you had on the annual, you guys were talking about capital expenditure in one more hospital coming up. Can you take us through the current updates there and what we can expect going forward perhaps by the end of this financial year in terms of the total beds?
Sure. So currently we are operating about 960 beds. We have a total capacity of about 1,200. 30-40 more can be added in Pune, and about 200 more can be added in Indore. So that is a 1,200 bed capacity that we have now. As you rightly remember, we have started CapEx and project to put up a new hospital of 500 beds in Dombivli, which is in the Mumbai metropolitan region. And we are adding 500 beds there, which will take our strength to 1,700 beds.
Okay, so taking the 1,700 beds into consideration, How are you looking at the average occupancy, and how are you looking at the average rate per operating bed, taking both, all of them, Thane, Pune and Indore into consideration?
So occupancy of Thane is kind of mid 70%. That is pretty much near maturity stage. Pune, we have added some beds last year. As I said, we have 30-40 more beds that we can commission, which are in a semi-ready state. So the Pune occupancy, which is in the early 60%, can go up to mid 70s. Indore is just getting started. It can, it is at mid 50% now, but we have more beds that we can add. So significant headroom for growth in occupancy for the Indore hospital as well. In terms of the average revenues, Thane and Pune are now matured. We don't expect more than inflationary rise in prices to drive ARPOBs there. Indore, besides the inflationary and price hike related factors, we also see and anticipate a little bit of case mix optimization to play a role there.
Ankit, and what about specialties? Because I believe that also leads to higher margins. I reckon it may have some impact on your average revenues. But are you working on specializations in certain hospitals? If so, which are these specializations?
So as a thought process and philosophy, we have decided that all our hospitals to be full service comprehensive hospitals where we do all branches of medicine and surgery. So there is no key focus area for any one of the branches. However, having said that, as I said, Indore is not fully matured yet. So some of the branches will not be doing as much of critical care work or as much of quaternary care work as our Thane and Pune hospitals are doing. So definitely there is some scope of improvement and optimization for the Indore hospital on that front.
Right. Ankit, when I'm looking at your P&L as well and the balance sheet, borrowings are going down, and that's on the back of the IPO proceeds. In turn, finance cost has come down substantially as well post the debt repayment, right? Now, taking both of these into consideration, how much improvement are you expected to see in terms of the cash flows? And secondly, the capex that you're planning as well, will it be met through internal accruals then?
Yes, so we have probably an annualized interest cost saving of in something like 40 crores annually. That is our cash saving post becoming debt free. The capex that we are doing currently can definitely be funded with our reserves and internal accruals. We have a plan to do a couple of more hospitals, and currently we are sitting on 300 plus crores of cash in our books, and internal accruals coming in the way they are coming in now. We believe reasonable amount of our capex can be funded internally. And debt will only come into play if there is more growth opportunity.
Right, Ankit, I reckon that there's no seasonality in this particular business, but my question then is, if we look towards FY25, and considering that there is a lot more capacity which will come into play through the course of the year, can we expect the company to maintain these growth rates that we've seen in the first 9 months of this financial year?
Yes, I think so, because in terms of occupancy, like you said, there is no seasonality. These are fairly steady state and they grow incrementally over the years. So in Thane and Pune, we expect similar numbers to keep coming in. Indore, we expect a slightly faster rate of growth than Thane and Pune, because in the early phases of a hospital's life, the growth might be faster till it reaches a stable state and then starts plateauing.
Right. So that's with regards to what it looks like going ahead. Thank you, Ankit, so much for joining us on the show and sharing the views. So good numbers coming in there with regards to Jupiter Life as well. And if you see the kind of CAGR growth and the return ratios that they've maintained have been pretty strong as well. One of the recent listings seeing strong gains of 7% as we speak. But completely out of time. With that, it's a wrap on this edition of Earnings Edge. Thank you from Agam and myself.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
अंतरिम बजट के बाद वित्त मंत्री निर्मला सीतारमण का ये पहला इंटरव्यू है। प्राइवेट नेटवर्क में ये पहली बार हमसे बात कर रही हैं।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Well, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Thanks for tuning into Talking Point. I'm your host, Neeraj Shah. Our guest today is Rajiv Batra, head of Asia X Japan and China equity strategist at JP Morgan. Rajiv, welcome to the show. Thanks for taking the time out. Hope all is well. Just wondering, what are your thoughts around what the world markets do in a year which is fraught with election risk as well as geopolitical election calendar and the geopolitical risks being as heavy as they are?
As you have rightly pointed out, 2024 is a record-breaking year for elections, with elections taking place in 77 countries. Although the US elections are arguably the one race which will going to have a broad global consequences. But that's where we will need help of navigating the equity markets, particularly the high beta Asia or emerging market equities. In that, the idea should be trade rather than invest and go through with earning cycle, because the P re-rating phenomena or valuation re-rating phenomena will be largely dependent on the monetary policy maker. If we see any kind of a rate cuts and easing, then valuation will come into play. If not, then earnings will be buy all end all for market to track, and that will be driving the performance from here on. But that said, there will be cycles within the cycles that will play out, like domestic cycles could be divergent from what is happening globally, and particularly in the domestic markets like India, where they are having a long-term growth prospect in play, structural areas are working, so that will help them do well in this kind of you can say a very complicated year or an environment to outperform the emerging market equities.
What's your sense about what the Fed or central banks at large could do? The beliefs have been very, very disparate, and post the Fed comments as well as the comments from some of the FOMC members in the last 3 or 4 sessions, the view around when the rate cuts start are very, very different. What's your base case, and when do you think the market starts discounting that?
13th December last year, Fed took a pivot by saying they may need to relook the policy stance, and within the dot plots, it was revealed that we may witness 3 rate cuts this year. So bond market or equity market pricing shifted quite rapidly, and at one point of time, start of this year, market was pricing in close to 7 rate cuts this year. Now, looking at the inflation data, which is slowly, steadily making a comeback, robust economic growth print in the US, and still a broad-based gain in employment, Fed is going to take some time to go for either a rate cut or say we are totally done with this cycle. Premised on that, JP Morgan economic team is forecasting the rate cut starting from June this year, and we are forecasting 5 rate cuts, 1 in June and then 4 in the second half. Once Fed starts cutting, that will open door for Asia, emerging market, even India to relook at their monetary policy situation. But before Fed do anything, can emerging market or any other Asian countries react and go before Fed? Chances looks pretty low.
Okay, yeah. And to an extent, the Reserve Bank of India in the policy meeting earlier kind of highlighted to that effect as well, that the eyes on the globe, and of course they also mentioned about the global debt sustainability, but it seemed in some fashion that central banking, global central banking would probably drive risk assets. Just one perspective. I read in your note very interestingly, because I was looking at Asia notes more closely by virtue of our viewers being such a large dominant Indian population, which is that you mentioned that you might be partly constructive on China. Please correct me if I'm wrong. My question would be, there seems to be a view that the foreign preempting when is the foreign selling in China going to end has been a rather tough job, and therefore best not to do so. How do you think about that aspect?
You're talking about China beyond geopolitics. Investors are searching for answers regarding when the physical property markets may settle, when business and consumer confidence may recover, and how policymakers will resolve local government leverage, banking, NPLs, and financial tail risk. Hence, investors have approached China equities more tactically based on event-driven catalyst and extreme position or valuation. Now, when we look at MSCI China, it is now trading below to close to our 2024 bear case target and clearly in the buying zone. The relative performance gap, if you look China versus rest of Asia, it is currently at extreme wide. Even within the China, the A share, H share premium are at a record high level. Hence, we believe a sharp reversal could occur if market support measure materializes, and this is driving our tactical overweight recommendation on China.
So, but again, I mean, it kind of coincides with the other view that you put out, that unless you mentioned that Asia Pacific returns will be front-ended in 2024. So, is there a correlation out there that China, because it's trading at the valuations that it is, sees some bounce naturally so, and that leads to Asia Pacific markets at large seeing an uptick? Part two of my question: can Indian markets, which from an optical perspective are expensive, or actually from an actual perspective are expensive on the Nifty, can they participate in this front-ended uptick for Asia Pacific in 2024?
Last September, we argued that Asian equities were troughing and would soon see upside, and we expected MXASJ, that is MSCI Asia ex-Japan Index, to reach 660 by January of this year. So MSCI Asia ex-Japan surpassed 640 levels by the year end, and it was up from lows of 580 during last October. Now, with this benign US setup, markets are likely to keep trading higher and may absorb any minor risk event. In this context, there are a lot of laggards in Asia equity space that may start to catch up in this scenario. Now, there are many signs that this has been happening since last week of December, like price action in Asia is broadening out, but it isn't yet extremely elevated. The momentum factor has started to underperform and also looks quite crowded. Now, when we look by markets level, the most prominent laggards are still China, Hong Kong, and Thailand. So they are yet to catch up and yet to discount the Goldilocks scenario, which other equities are discounting globally. In case of India, I will say that right now, the stronger growth trajectory in India is help justifying their higher valuations for the country, which is a big question mark most of the investors are putting. And remember, India is one such market which has consistently outperformed emerging markets for last 2 decades. And the reason behind is very simple. Growth is a scarce commodity globally, and particularly in today's environment. Hence, foreign investors do take into account relative growth, that is your growth versus a peers over there, not just the valuation only to take a call. And most importantly, foreign investors are growth tourists. They invest in the destinations that offer them premium growth compared to either developed market or other regions. India is offering that growth endlessly year after year. Hence, they are deserving this premium and valuation. So we do expect there will be a period where markets trade sideline because of lack of catalyst, but it will be a kind of a small blip because there are long-term trend emerging where investor interests are rising. There's a virtuous cycle of deepening and broadening liquidity. There is rising fundamental coverages and analysis along with the capital issuance. And most importantly, India is one such market where we are seeing long-only investors have the highest breadth of benchmark holdings. That is the stocks name beyond large cap indices.
Rajiv, then one question before we hit that break. Has, by virtue of people that you may have spoken to on the global side who are investing into India or looking to invest into India, whether passively or actively, has the budget math and the budget statements, the fact that fiscal discipline has not only been maintained but surprised positively, and we have a Reserve Bank of India which is, been fairly prudent on almost all things that it has done in the last 12-18 months, has there been a change in the tone of investors who might be thinking about India? There is also this very high probability of policy continuity in India as well, right? For the next 5 years in a busy election calendar. Do all of these things become a heady cocktail for investors who want to allocate to India, thinking of, okay, let me go and allocate more, or people who have not looked at India thus far, saying that, you know, it's a large market and there are these factors, let's look at it?
This plays a very important role, and particularly for the long-only investors or investors with a horizon of 5 to 10 years, pensions, insurance, retirement funds, who look into allocations based on the long-term decision-making of the country and policy framing. That's where the fiscal prudent approach from government in budget and literally revealing out the plan for not just 6 months or 1 year, but a 5 year, that we are going to stay prudent on the fiscal terms. We are going to look at a long-term growth trajectory through capex, not just a near-term stimuluses only. And then RBI, which is helping country to move out from a twin balance sheet stress towards twin balance sheet advantage when we look at the asset qualities or even the NPL cycle. So that is what helping India's narrative, particularly in terms of valuation. I'm sure you would have seen that the risk premia in India for the last 10 years or under the current government regime have declined substantially. At one point of time, the risk premia were close to 4.5%, 4.8% based on a calculation back in 2010. It came down almost to 1.1% by 2021. That is all led by this efforts taken by central bank and the government, and getting a lot of traction from the foreign investor. So not only it benefits India in form of a sustainable and a quality growth, but also decline in risk premia or a premium at that level what developed market like US is enjoying.
Okay, well, I have a follow-up to that, which we will do on the other side of the break, because we need to slip into one. Stay tuned, we'll be right back, viewers.
फिस्कल डिफिसिट के नंबर को आपने अच्छे से मैनेज कर लिया, तो थोड़ा खर्च करने का रूम था, चाहते थे तो कर सकते थे आप, लेकिन वो उस चक्कर में भी या उस लालच में भी आप लोग नहीं आए। मेरा कहना, आपके पास स्पेस था, फिर भी क्यों नहीं किया?
सबके मन में ये ज़रूर एक भरोसा, कॉन्फिडेंस था कि जनता समझ रही है कि जो योजनाएं हम तक पहुंचा और सरकार जो ट्रांसपेरेंट तरीके से किसी लालच में नहीं पड़ा और कुछ लीपापोती करने का कभी कोशिश नहीं किया, ऐसे सरकार जिसका समर्थन होना चाहिए हम देने को तैयार है, ऐसे मूड में देश है।
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks
on your show, Hot Money.
Back with Talking Point in conversation with Rajiv Batra, Head of Asia Pacific ex-Japan and China equity strategist at JP Morgan. Rajiv, you told us about how some of the measures that have happened on the fiscal side, on the monetary side, maybe even policy continuity and policy making is important for global investors to when they consider either investing in a country or in an economy or deepening the investments in the economy. I was wanting to ask you, have you heard a change in the tone as well post the budget specifically, wherein the fiscal deficit has been forecasted at 5.1 as opposed to the earlier beliefs and beat the glide path target of 4.5? Has it been a dominant conversation, if you will, in conversations that you may have had post 1st Feb, or is it early days as yet?
No, so anecdotally, talking to most of my investors, they all gave thumbs up to this budget because this is actually has the potential of increasing India's long-term GDP growth, which people were thinking in the range of 6.5%. Now they are even contemplating and asking, are we moving towards a range of 7.5, 8? And the comparison is being drawn from 2000 to 2003 period, where India was going through a deleveraging cycle prior to 2003. Asset quality or slippage ratios were getting better, and then we saw a compounded annual of 8% real GDP growth. So that's what investors are now discussing and talking after this kind of a budget which was delivered, where the focus is not just on fiscal consolidation, taking towards a glide path of 4.5% fiscal deficit, but also maintaining the capex growth. Now, critics will say that the capex growth is slowing down from 28-30% measure to 16-17%. But we need to recognize the base have changed. That 30% or 28% growth was happening from a very low base. Now, with this high base, even the high teens kind of a capex growth means this will open up the avenue of a higher potential growth for the country in coming 5 years' time. So that is what is exciting my long-term investors or long onlys. But for the short-term traders or people who invest on like very short horizon, 1 month or a 2-month basis, they are not seeing the immediate growth catalyst. So they were like a bit 50-50 on the budget, but majority of it got the thumbs up.
Okay, from a valuation perspective as well, which is the most spoken about point for India, but I think you mentioned that it's kind of been at a premium for a while. But it currently, from an FII perspective, Rajiv, seems to be a tale of two halves, right? Because traditionally, the sectors that FIIs have usually preferred, which is banking and IT, largest weightage, largest FII overweight, are actually trading cheap. So in some sense, while you're buying into an expensive market, you're probably going in for themes which are not that expensive. So how does that work, and what is your advice therefore to clients when they're talking about allocations to India?
So most importantly over here, if we look at valuation, large cap relative to mid cap or large cap relative to small cap are trading cheaper in a relative valuation term because they have not fully participated this rally. Even in case of a large cap index, as you clearly pointed out, majority of the heavyweights, particularly in the banking space, have not joined the rally. And beside that, even in the consumption side or the consumer name side, there are a lot of names who are yet to participate. So in case if we move out the stocks and few sectors which have rallied quite a lot based on the theme being played out domestically or externally, then there are certain pockets which are trading cheaper. From our perspective, we are maintaining overweight on banking sectors or financial sector where we believe they are yet to participate in this growth rally which is happening. And sooner rather than later, they will join the bandwagon. And it is a part of our a theme where laggards will join this Goldilocks scenario as we progress through the year. Besides that, selective consumer names and even IT names, heavyweight large cap IT names may also do well.
It's interesting you have that view. I'm just trying to understand commentary from IT companies, or actually, you know, we are looking at this commentary from, let's say, Cognizant, who the CEO is saying that we don't know what we don't know. And the conversation around discretionary spending is not quite clear. So in some sense, is it a bit of a preempting that at some point of time, the US economy will stabilize in the calendar and spends will begin, discretionary spends, and therefore these stocks will start seeing some uptake because they discount 6 months, 9 months in advance? What's the rationale behind IT services at large, be it India or some of the other businesses existing worldwide or in Asia?
The narrative has changed. If you remember, at one point of time, market was discounting a hard landing scenario almost up till mid of last year. Then the narrative shifted towards a higher for longer when your 10-year in US moved from 3.3 to almost 5% level. Recently, the narrative shifted again and started pricing in a soft landing or a Goldilocks scenario. But it needs to take into account that even if we are not encountering a recession in the near term, if we look at economist forecasts, GDP growth globally as well as in US is expected to slow down from above potential number of last year. Now, when your GDP will slow in the key customer market, that is in US, your top lines may get impacted due to that. Hence, this is the reason why it is kind of a conundrum which either corporates or even clients and even we are on the sell side are navigating, as we have said start of this interview, that we don't know how the year will pan out. Are we actually heading towards a full soft landing, or somewhere or other even the accident recession can happen? But base case wise, we are sticking with a soft landing kind of a call. But to be very frank, it's need a monitoring on a monthly basis rather than taking a call what will happen 6 months or a 12-month down the line.
And Rajiv, that it might hold, it might have some bearing on exporting economies or exporting companies from countries like India as well, meaningfully, as to what the US and maybe even the European economy does. So what's the view there? I mean, I know you mentioned that you need to monitor it on a monthly basis, but if you were to, I mean, if I were to put a gun to your head and ask you that, give me a view about what could happen to exporting economies for 2024, what would your best guess be?
In our report outlook, we have clearly mentioned that we prefer domestic over export, and the reason behind is very simple, because we do expect slowdown happening globally. Now, when we look at investor positioning, they are already significantly over positioned in the tech trades, particularly in Korean tech, in Taiwan tech. Now, when you look at the revenue exposure of Asia countries and sectors, Korea, Taiwan, Australia, and some part of India are exposed towards global markets, that is particularly US and Europe. That pockets are vulnerable, and they are more vulnerable if investors are already positioned, because during the slowdown time, they will sell what they own. And if they are owning this kind of a high revenue exposure places, that's where the maximum downside would be. Now, compared to like Taiwan and Korea IT, India IT, which is on the services side, is not that heavily exposed or overweight by the global investor at this juncture. No doubt, recently they have reduced their underweights on Indian IT space and gone to a marginal underweight to a neutral kind of a position. So they may not be as vulnerable, I will say, the Taiwan or the Korea on the world. In terms of our allocation, we are holding neutral on Korea and we are underweight on Taiwan, worrying about this export slowdown or a global slowdown risk.
Got it. And my final question, Rajiv, and that is, since you mentioned that focusing on domestic, there is a thought, and there's a bit of a dichotomy, firstly, that the last 5 years, Indian public sector lenders have done way better than the private sector lenders. Part of it could well be because FIs have sold consistently through the last 18 months, and they're the largest overweight or the largest weightage. But the question is, there is a belief or there is a thought coming that by virtue of the fact that the Indian corporate is so deleveraged, that if a capex drive comes to the fore, the capex growth may far outstrip credit growth of the private sector lenders as well, and therefore the growth rates in private sector banks may not be as strong as people may think of when they think of a scenario similar to 2003 to 2008. So my question, sorry, a long question, but my question is, do you think these valuations are good enough for investors to put into private sector banks in India, or are there better pockets out there in India?
Definitely, private sector banks will come also into the play, because the corporates are not just your large cap only. There will be entire supply chain along with them who will try to grow. So based on the tiering and lending, and also on the like a positioning on their asset side or a cash side, will help them navigate. So in case if the large cap corporates are cash rich and they may not want to tap into banks for the credit growth or the borrowing requirement, but along with them, the suppliers or the various other part of mid-cap or companies and small cap who are along with them, maybe their credit ratings are not that great enough to directly tap, or maybe they do not have that higher cash level. So they will still have a borrowing requirement and need. So rather than just focusing on few cash-rich corporate who can drive the private capex cycle only, we have to look into the broader sleeves over there who will also grow along with them, and they will have borrowing need. And this will be the audience who will be tapping into your private banks and can generate growth higher. Now, here, the expectations are being so low over here that even a small bit of a change can lead to a big delta, like coming through on the credit growth side, like if the numbers come through. So that keeps us still positive on the private bank space.
Got it. Okay. Well, on that note, Rajiv, such a pleasure talking to you. Thank you for taking the time out and speaking to us and giving us your overarching view. Really appreciate your time.
Thank you, Neeraj.
And viewers, that's JP Morgan saying that maybe gains could be front-ended in calendar year 24 for Asia, and India could well participate despite the valuations. By the way, just before we wrap up the show, he's saying that if indeed certain conditions happen, which is the Reserve Bank of India does a few things and there is policy continuity, then the Nifty may even trade in the expensive zone of 22,000 to 25,000 in the current calendar. So bear that in mind. Thanks so much for tuning in, viewers, to this show.
अंतरिम बजट के बाद वित्त मंत्री निर्मला सीतारमण का ये पहला इंटरव्यू है। प्राइवेट नेटवर्क में ये पहली बार हमसे बात कर रही हैं।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit. Hello and welcome. You're watching Market IQ on NDTV Profit. I am Pallavi Nahata and I'm joined by Harsh Sehta. So
So today we'll start off with an NDTV Profit exclusive. Now, over the weekend, the JSW Group announced its plans to set up a $5 billion EV plant. My colleague Tushar Deep Singh has managed to gather some additional information about the plant. Let's hear what it is. Hi Tushar.
Hi Pallavi, hi Harsh, good afternoon to both of you. So while like you mentioned that JSW announced its plans for a $5 billion EV enterprise in Odisha spread across two cities of Cuttack and Paradeep, today we can say, according to sources, JSW sources told us that the construction of this EV enterprise will begin this year after the regulatory approvals are in place. The commissioning of these facilities will start in the next 2 or 3 years. Let me take you quickly through what all JSW is planning. JSW is planning to spend about rupees 40,000 crore in the two facilities in Cuttack and Paradeep, generating 11,000 direct jobs in the state. Now, what all is going to be constructing? What all is in the offing? A 50 gigawatt hour battery plant for mobility and storage solutions, an OEM plant, that is a car making plant to make 1 lakh electric commercial vehicles, that's electric trucks and buses, and 3 lakh electric passenger cars. An auto components plant is also will go on the floors to produce electric powertrains. A vendor ecosystem will be developed to bring in the other components that goes into making of an electric car. Apart from this all will happen at Cuttack. At Paradeep, the company will set up a 1 million tons per annum copper smelter, as well as a 60,000 ton lithium ion refinery in that place, as well as there will be an R&D center that will be also set up. Now, one begs the question that why JSW is choosing Odisha for its operations. It's quite actually an expansion of what JSW already does in Odisha. Though one must remember that the EV project is a JSW group venture and has no links with its steel and energy ventures existing in Odisha or elsewhere. So the Odisha is mineral rich, it's a long coastline. JSW believes that this can create jobs. This can push Odisha's economy to a $1 trillion economy when India becomes a $10 trillion economy. And it can also be the first state to eliminate internal combustion engines altogether. Pallavi.
Right, that was of course on JSW. Thanks for all of that, Tushar, and bringing us all of that perspective. Now on the stock itself, if I can pull up the the chart for over the last 1 year or so, up just about 12.5%. So really underperforming the Nifty, that one. But elaborate plans on the EV front, and of course have to wait and watch as to how those really play out. And there you go, JSW Holdings though has done fairly well over the last 12 months or so. We're now joined by Umesh Revankar, who's the Executive Vice Chairman at Shriram Finance. He's sitting on the sidelines of a Nuvama conference. Welcome to NDTV Profit, sir. I just want to try and understand, there's plenty of chatter, and I'll go straight to the concern and the pain point that the industry has been getting marred by, largely by the unsecured side of things. So what's the chatter around that at the conference? Of course, there'll be a plethora of leaders there, including yourself. What's the sense you're getting?
Yeah, see, basically, when I look at unsecured loan, as you were mentioning, or talking about having a lot of attention, it's basically because RBI has raised the risk weight, thinking that it may get balloon into a larger scale and maybe a crisis. So I don't, but if you look at overall the unsecured loan portion, it's so small and insignificant on the overall lending program of many of the banks and NBFCs. I think one is it's not really large enough to cause what call a significant challenge. And also, if you look at all the lending decision or the lending what I call the lending methodology, if you look at, all are based on data, information, track record of the customer. So, for example, we lend to the existing customer with track record as an additional loan once they complete the previous loan. So that is how we do, and many of these banks and NBFCs they do on similar line. So they are not new to credit as what you call people perceived. So I think that's one thing. However, we do understand the regulators' anxiousness, because many of this loan getting into for the application or use which is beyond the normal business or maybe normal the consumption. If it is going into something like games or betting or cryptos, maybe in that way the regulator is little worried, and they are wanting to have some control on the same. So overall, I feel the banks or NBFCs by and large have a control over the situation and nothing really to worry about at this stage.
So, Mr. Revankar, I do want to ask you about the cost of funding. We've seen a little bit of a rise. We have seen a rise in cost of funding in recent months, and it's expected that we will see a further rise going forward. The RBI, for instance, did talk about incomplete transmission, and because of a multitude of other factors, there is going to be a rise in cost of funding. So could you tell us a little bit about what's the expected impact on the industry of that?
Yeah, the liquidity situation is a little, I should say, I don't say tight, but it is controlled, mainly because I think RBI wants the inflation to be under control. That is the main reason for the overall tightness in the liquidity, and that is in a way it's a good, but at the same time the availability of liquidity from the banking system to the NBFCs, RBI wants it to be at a moderated. In that way, they're asking NBFC to raise resources in the alternative areas. Maybe through a bond issuance or maybe through the other instruments that being available. So overall, I feel what I have observed is all the banks have not increased the cost of lending to NBFCs, but the banks have been wanting to restrict or moderate the flow of lending into NBFC. That's what I can see. And if the total cost of the increased liability cost of the bank is not passed on to systematically to the NBFCs and the other lending activities.
Sure, sir.
Maybe true, because there are some segments like a housing loan or even a vehicle loan where
Mr. Revankar, I'm gonna have to interrupt you there, because we have live feed coming through from Mauritius and Sri Lanka, where UPI and RuPay card services have been launched. Let's cut across to the Prime Minister, Narendra Modi, who's speaking at the launch of that event.
His Excellency Pravitt Jagannath to kindly deliver his remarks.
Shri Narendra Modi Ji, the Prime Minister of the Republic of India, His Excellency Mr. Ranil Wickremesinghe, President of Sri Lanka, my colleague ministers, members of the Diplomatic Corps, Mr. Havesh Sigulam, Governor of the Bank of Mauritius, the board members of the Bank of Mauritius, governors and executives of central banks, CEOs of banks, distinguished guests from Mauritius, India, and Sri Lanka. Ladies and gentlemen, good afternoon to our dear friends in India and Sri Lanka. Allow me first of all to convey warm and fraternal greetings to His Excellency Sri Narendra Modi ji and His Excellency Mr. Ranil Wickremesinghe, who are amongst us this morning for the e-launch of the RuPay card and UPI projects. It gives me great pleasure to join you all on this milestone occasion. The RuPay card, co-branded with our national payment switch, the MOCAS, will be designated as the domestic card in Mauritius. India and Mauritius share strong cultural, commercial, and people-to-people linkages which date back to centuries ago. And today, we are giving yet another dimension to this relationship.
Right, so that was of course digital payments being launched in Sri Lanka, Mauritius, and UPI services being utilized there for that launch. But I continue to have Mr. Revankar with me. Mr. Revankar, first off, apologies on cutting you short there. We were interrupted by, of course, the Prime Minister who was speaking on the back of that digital launch, but digital currency launch. But talk to us. So you seem to suggest at the fag end of that chat that it seems that banks lending to NBFCs has started to reduce, if not completely dry up, of course, but there has been a reducing trend with regard to them lending to NBFCs. What is your sense with regard to cost of funds, one on industry, and second, if you can also talk to us about where your margins therefore will get affected? Your margin roughly in that 8.5% to 9% kind of band. Last we spoke, you were fairly confident of that margin guidance. You continue to remain confident of that?
Yeah, we are very comfortable, and we feel that our net interest margin will remain stable, mainly because we have that ability to pass on increased cost, if any, to our end borrowers. So incremental increase in cost will get passed on to the new lending that we do. So I don't really see that as a challenge. And since we are in a priority sector, most of our lending is to priority sector, we are able to securitize our assets and get resources on a priority. So to that extent, our cost of funds are not really, compromised. So we are able to raise at reasonable cost from the banking system. So I don't really see any pressure on the same.
Okay. So what about the industry at large? Can we expect some impact there? And also another thing I did want to ask you was about the ARC business that the group had announced a few months back. What's the latest we have on that? Could you provide us with some kind of an update?
Basically, we wanted to start ARC to address the recovery challenges in the retail segment. We felt that we, having experience of more than 4 decades in retail lending and recovery, we can start ARC to help the industry in addressing this issue rather than passing on the difficult collection to the outside agencies, where unregulated agencies. As a ARC, if you are able to manage it, I think we'll be able to establish a good example, is what we felt. So that is the idea behind getting into ARC. We're awaiting the RBI approval, so hopefully we should be able to get as soon as possible.
Got it, sir. So, when I talk of loan growth, as some of this overhang with regard to RWAs starts to trickle down to customers, do you therefore feel that rates might inch up as a result of some of the bank funding drying up towards or bank funding reducing, I won't say drying up, when they are funding NBFCs. Would you think that there is a second order impact with regard to growth as well, because rates from a lending perspective to customers may go up?
Yeah, definitely when rate goes up beyond a particular or a preferable level, the borrower can delay or postpone his borrowing. That is a possibility. So I feel increased in lending rate will bring down the growth rate, and that is more of a given. So if the lending rate goes up, or if the liability cost goes up for our NBFC industry, then overall growth rate may come down. But most of the NBFC would prefer to keep their margins, because margins are sacrosanct for the NBFCs. We will not be able to sacrifice the margins. It is required to cover the risk we have in underwriting risk we have in any lending activity. So there could be a possibility of growth rate moderating a little in the increased borrowing cost scenario.
Okay, all right, sir. And, taking forward some of the conversation that we've been having about the RBI's impact on non-bank funding and the attempt of the industry to now diversify funding. From an industry perspective, can you tell us what's happening and how's that going? Also, again, from an industry perspective, like you've already answered what the impact on growth is or won't be in case of Shriram Finance. We're curious to understand what's the industry impact now looking like from the growth perspective.
Yeah, see, if the banks have been the funding the NBFC, and NBFCs which are largely dependent on bank need to diversify their resources, and it's always safer and better to diversify, even if it's a little expensive to start with. For example, you can go to capital market and raise bonds. And in India right now, the bond market, corporate bond market is not, it's shallow. It is not deeply penetrated. Secondary transactions are not very much happening. But I feel with better democratization of distribution of the retail bonds, it can become popular, and it can be an alternative for NBFC industry to raise resources. So I believe everyone will work on this and try to build a good market, bond market. So that's one. And also there are other options for NBFCs. You can do a co-lending. You can securitize your pool. That can be another option. So there are multiple options are available. So it's only thing is how each of the NBFCs plan to build their liability portfolio through diversification. It depends upon that. So for example, we are always diversified, and we don't have more than 25% dependence on bank lending on balance sheet. So it is around 25%. So that's how each of the NBFCs will find its own level of raising resources in each of these segments.
Okay, all right. Well, Mr. Revankar, thank you so very much for taking time out for us today. With that, it's time to slip into a very short break, but stay tuned. We have a lot more coming up on the other side.
फिस्कल डिफिसिट के नंबर को आपने अच्छे से मैनेज कर लिया, तो थोड़ा खर्च करने का रूम था, चाहते थे तो कर सकते थे आप, लेकिन वो उस चक्कर में भी या उस लालच में भी आप लोग नहीं आए। मेरा कहना आपके पास स्पेस था, फिर भी क्यों नहीं किया?
सबके मन में ये ज़रूर एक भरोसा, कॉन्फिडेंस था कि जनता समझ रही है कि जो योजनाएं हम तक पहुंचा और सरकार जो ट्रांसपेरेंट तरीके से किसी लालच में नहीं पड़ा और कुछ लीपापोती करने का कभी कोशिश नहीं किया, ऐसे सरकार जिसका समर्थन होना चाहिए हम देने को तैयार है, ऐसे मूड में देश है।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with.
Hello and welcome. You're watching Earnings Edge. I'm Harsh Saita. With me is Pallavi Nahata, and we have Indigo Paints, which is in focus because third quarter net profit as well as numbers overall have been quite decent. In fact, profit has jumped 43% year over year. The stock is up 2% as we speak, and we have Hemant Jalan, who's the chairman and managing director of Indigo Paints, with us live. Welcome to NDTV Profit, sir.
Thank you for having me.
Right. So, first off, I want to try and understand from you. Actually, sir, we'll have to put you on hold for just about a minute because we have the Prime Minister addressing the launch of the digital currency in Mauritius and Sri Lanka.
We are creating today modern digital links between our countries that share historic relations. This bears testimony to our commitment to the development of our people. Fintech connectivity will not only strengthen cross-border transactions, but also cross-border connections. India's Unified Payments Interface, or UPI, is now taking on a new mantle that
यानी यूपीआई आज नया दायित्व निभा रहा है, यूनाइटिंग पार्टनर्स विद इंडिया. फ्रेंड्स, भारत में डिजिटल पब्लिक इंफ्रास्ट्रक्चर से एक क्रांतिकारी परिवर्तन आया है. हमारे छोटे से छोटे गांव में छोटे से छोटे व्यापारी भी डिजिटल पेमेंट्स कर रहे हैं, क्योंकि इसमें सुविधा के साथ साथ स्पीड भी है. पिछले वर्ष यूपीआई के माध्यम से रिकॉर्ड 100 बिलियन से ज्यादा ट्रांजैक्शंस हुए हैं. इनका मूल्य 2 लाख करोड़ रुपए यानी 8 ट्रिलियन श्रीलंका रुपये और 1 ट्रिलियन मॉरिशस रुपये से जुड़ा है, ज्यादा है. जेम ट्रिनिटी यानी बैंक अकाउंट, आधार और मोबाइल फोन के माध्यम से हम लास्ट माइल डिलीवरी कर रहे हैं. इस सिस्टम से अब तक 34 लाख करोड़ रुपये यानी $400 बिलियन से अधिक सीधे लाभार्थियों के बैंक अकाउंट में जमा किए जा चुके हैं. कोविड महामारी के समय कोविन प्लेटफॉर्म के जरिए भारत में विश्व का सबसे बड़ा वैक्सीनेशन प्रोग्राम चलाया गया. टेक्नोलॉजी के उपयोग से ट्रांसपेरेंसी बढ़ रही है, भ्रष्टाचार खत्म हो रहा है, समाज में इंक्लूसिविटी बढ़ रही है और लोगों का सरकार में विश्वास बढ़ रहा है। फ्रेंड्स, भारत की नीति है नेबरहुड फर्स्ट। हमारा मैरीटाइम विजन है सागर। सागर यानी सिक्योरिटी एंड ग्रोथ फॉर ऑल इन द रीजन। हमारा लक्ष्य है पूरे क्षेत्र में शांति, सुरक्षा और विकास। भारत अपने विकास को अपने पड़ोसी मित्रों से अलग रख करके नहीं देखता। श्रीलंका के साथ हर क्षेत्र में कनेक्टिविटी लगातार मजबूत कर रहे हैं। पिछले वर्ष राष्ट्रपति विक्रम सिंघे की भारत यात्रा के दौरान हमने एक विजन डॉक्यूमेंट अपनाया था। वित्तीय कनेक्टिविटी को बढ़ाना उसका एक प्रमुख हिस्सा था। ये खुशी की बात है कि आज हमने इस संकल्प को पूरा किया है।
Right, that's the Prime Minister speaking at the launch of the digital payment offering that is happening with both Sri Lanka as well as Mauritius, India enabling that, and a proud moment for India, and him speaking about that. But let me move across. We continue to have Hemant Jalan live with us. Welcome, sir, to NDTV Profit. Apologies on the delay on that one. Sir, want your perspective with regard to where Indigo Paints goes both in Q4 as well as full year FY25. Generally, Q4 is a stronger quarter, but this time you have competition coming through as well. So you will have additional supply in the marketplace. How are you going to cope with that, and how does FY25 look thereafter?
No, I don't think one is overly concerned about the new competition coming in. How many states will they penetrate in this quarter is as yet unknown. So I don't think we'll see any headwind coming on that account. Fourth quarter for us has traditionally been our strongest quarter, both in terms of sales and in terms of underlying profit. And we expect this quarter to be no different. So fourth quarter will have a much higher weightage on the overall numbers for the year. And we see our, continued outperformance of the rest of the paint industry getting wider with each successive quarter. So I think that that will continue to play out in FY25. And we look forward to even better results as far as the next year is concerned.
Sure, understood, sir. Actually, we're completely out of time on this edition of Earnings Edge. So we will have a longer conversation with you, but for now, we're completely out of time. Of course, thanks so much for joining us on this show. And thanks, viewers, for sticking with us on NDTV Profit. More on the other side. Stay tuned.
अंतरिम बजट के बाद वित्त मंत्री निर्मला सीतारमण का ये पहला इंटरव्यू है। प्राइवेट नेटवर्क में ये पहली बार हमसे बात कर रही हैं।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
What are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell?
Welcome. You're watching the Mutual Fund Show. I'm Tamanna Inamdar. This is the show where we talk about your mutual fund investments, tell you what's happening in the industry, and speak to the top experts so you can make the smartest choices for your investments. Now, the topic for today is an interesting one. It's talking about redemption. We are constantly talking about, and the information you're constantly getting is about investing into mutual funds, and we know that these numbers are increasing month on month. The latest SIP figures, SIP figures for the month of Jan have crossed 18,000 crore rupees. But is it always one-way traffic? Should you redeem, and if when? Now, the trigger for this conversation actually has come from some interesting data highlighted by one of our experts on the show today, Arnav Pandya, founder of Money Edu School, and Pankaj Matpal, founder and CEO Optima Money Managers, are with us on the show. And Arnav highlighted how your outflows for SIPs in December were at the highest level in at least the last 6 months. I'm just going to pull up that data to set the context for you first on why we're talking about this today. So, for example, in July 2023, your SIP outflows, and of course, you had massive inflows as well of 15,000 crores in that month, but your outflows were 9,751. Now, cut to December 2023, and that's the data which we have with us publicly available. 17,000 crores, 17,610 crores were your inflows, but your outflows were 11,141 crores. Now, there could be a number of reasons for this. Remember, markets were at highs, at peaks towards the end of the last year, so maybe people felt it was a good time to redeem. But we thought it's an interesting question to address as well. When should you be redeeming your mutual fund investments, if at all? So let me begin with that basic question to Arnav first. Arnav, there could be n number of reasons why your outflows were high in December, but is it safe to say that when markets are touching new highs, there will always be temptation to take some money off the table?
There is a tendency for people to do a little bit of profit booking, especially when markets show a sudden jump. Because if you see in December, there was one very important catalyst which happened, and that was the election results of the 5 states which came in. Now, following that, what you saw was a massive FII inflow, which normally doesn't happen in December. Normally, you find that December is like slightly less activity month as far as the institutions are concerned, and then in January, after the new allocations start coming in, things pick up. But because of this election result and what the market analyzed in terms of the impact on the Lok Sabha polls for 2024, you saw a massive change, one in terms of sentiment, two in terms of the ways the FIIs behaved. So that pushed the market up. And I presume that there is always, and some element of redemptions which will be coming in. But the sharp spike or the difference which you see in the month of December is probably due to the fact that a lot of investors also thought that I might as well do some profit booking, because this sudden rise is like an event which I need to cash on.
That's possible. That's possible. And maybe it was a good decision, maybe it was a bad decision. That's very individual. But having said that, Pankaj Matpal, let me come to you on that broad question that we're asking. Now, I'm sure you get a lot of questions. Should I redeem? And I'm hazarding a guess, but your standard answer must be, don't remove the money unless you absolutely need to. Should that be always the case? If you have been a patient and a disciplined investor and you see these kind of opportunities, should you then leave the entire portfolio untouched?
No, exactly what you said, that if you don't need money, then don't redeem. That is what I believe in. Second thing, what Mr. Arnab said, I fully agree with him that this time, this looks like a profit booking only, no other reason. Usually we have seen when there is a rally or there is a crash in the market, in both the cases, investors start redeeming their funds. So this time it is a profit booking. But the question is that whether they should book profit or no. Tamanna, it is very simple answer. If you have set your financial goal and you are investing for that, so you should stay invested until you achieve that goal. Because if this kind of opportunities will definitely come on your way, but if you keep on booking profit from time to time, then it may delay in achieving your objective. See, if you feel that your portfolio has grown by 20%, 30%, and you are booking profit, then how your investment will double? So if you let it grow and it enjoys the benefit of power of compounding, then only you will be able to double or triple or multiply your wealth. Second thing, the question when to book profit or when to redeem units. See, one thing is very simple. If your investment is not able to achieve your objective, or you realize at any point of time that you have invested in some schemes which are not as per your objective of investment, risk appetite, or your investment horizon, it is not matching with the investment scheme. That may be one reason that when you realize that this is not the right scheme or suitable scheme for you, you can redeem your investment. Second thing is that you invested for some goal, but in between there's an urgent need of money. That may be another reason you may redeem units. Or there may be a reason that there may be a change in financial attribute of the scheme. In that case also, you may miss when you started investing, at time the scheme was suitable, but now you find that scheme is not suitable for you. You may decide to redeem at that point of time also. So that can be another reason. But otherwise, I believe that if your financial goal is aligned with your investment, you should stay invested. Or one important reason can be rebalancing portfolio. See, suppose you decided your allocation in equity and debt should be 50-50%, but because of this kind of rally, your allocation is now say 70%, 30%. In such case, also you can rebalance your portfolio. For that reason, you may switch from equity to debt, or if required, from debt to equity. That can be another reason. Otherwise, I believe that one should stay invested till the goal is achieved.
Okay, so stay invested till your goal is achieved. Don't get distracted with what happens in the interim. Arnab, what would you say to this question? What are the top 3 reasons which justify a redemption? And is what we saw in December one of them?
So the 3 top reasons which I feel is, 1, you need money for some purpose for which you do not have liquid cash. So at that point, instead of taking a loan or borrowing, it is always better to redeem. So look at the circumstances and then decide whether the expense that you need is important and it cannot be financed through, or it need not be financed through a loan. Second part is that when you need to rebalance your portfolio, because if you look at the markets, you see what has happened in this kind of rally. The small and the mid caps have run up at virtually 40-45% in a year. And it is very likely that most portfolios will be see some sort of imbalance as what it was initially constructed. So at that point of time, if you are rebalancing to ensure that both within asset classes, between equity, debt, gold, etc., you are rebalancing, or even within the equity portfolio, if you want to rebalance between various weightages by market cap, that is the second reason why you should do it. And the third and final reason is that your goal is achieved and you want to use the money for the specific goal. That is when you should be redeeming the money. Otherwise, the whole benefit of years long investing, the point here is that the outflows which we have mentioned are going in from the folios where there is also a regular investing going on. So idea for regular investing is to slowly build your wealth and not rely on market timing. Now, if on the other side of the transaction, while you are trying to sell something, you are trying to rely on market timing, then it goes against the principle which you are following. So that is why one should be careful and have a specific reason for taking the money out.
So to explain it simply, if you need to take a personal loan but have a good, mutual fund investment, you may as well not pay a high interest rate on personal loan, and you could then redeem some of those investments for what you need, but you have to be judicious about it. Now, having said that, there are some cases where there is an unusual run-up. Now, Pankaj, let me come to you on this. Last year, for example, small cap funds broadly gave superb returns. Now, this entire year, there seems to be a consensus that you may not see the same level of returns. You had, in some cases, a 40% return on some certain small cap funds. In that sense, wouldn't it make sense to, reallocate at least, redeem and then push in your investments elsewhere?
Exactly. This is rebalancing again within the asset class. See, in equity only, you realize that small cap have outperformed large cap, and you wanted to have a percentage allocation in small cap. So you should definitely rebalance your portfolio. In that case, you can redeem from the small cap or mid cap to invest in large cap. But many times we have seen in some sectoral funds or thematic funds, unexpected rallies there, and you have gained a lot from there. So in that case also, you can rebalance your portfolio. So this can be one reason for redeeming your units.
Arnav, let me take that question to you. You mentioned rebalancing broadly, but let's go into a bit of detail. If you have seen huge run-ups, should you stay cool and calm, knowing that perhaps you won't see that same kind of a return going forward, and believe in the long-term picture?
No, that much is certain. See, whenever you see any category of funds showing abnormal returns, and when I say abnormal, anything above 15-16% qualifies as abnormal. So if you are seeing 40-45% return, one thing is certain, that this is not a sustainable return. You might see it for 1 year, maybe 2 years, but not for very long, because the market goes through a cycle. So that is one point. The second thing here is that one needs to make a distinction between getting out of a fund completely and reducing your exposure to nil, as compared to just rebalancing in terms of taking money from one area and putting it into the other. Because what happens is that when you look at your portfolio overall allocation, according to your needs, you need it to be in a certain way. So if that entire balance is changed, you need to bring it to where you actually want it. And which is what the rebalancing part is, that you shift money from one place to the other, either between asset classes or within equity itself, and which is where that shifting a little bit of money comes into play. Now, the third question here is that when do you do this? You do not do this just because markets have run up. There should be a specific time period wherein you have fixed at which point the entire portfolio is reviewed, and then you make these changes. Now that brings a little bit of what you call scientific process to this entire thing, and which then justifies the fact that you are taking some money from one area and allocating it elsewhere.
Absolutely. So keep that in mind when you're redeeming. Don't get trigger happy with your mutual fund investments. And perhaps some people, we don't know the details, of course, because these are cumulative figures and what individual decisions were behind it is not very clear. But a large number of people clearly decided to cash out. That's not necessarily the best strategy unless you need the money. You may as well not borrow it, use your investments or put your investments to good use. We're taking a very short break, but come back after the break, because on the other side, we're addressing your queries with our experts. Stay tuned.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking.
All right, this is the part of the show where we address your queries. If you want to send in a query to us, you can contact us on any of our social media handles. Those numbers will flash on your screen as well, and we'd love to hear from you. So let's begin with what Vipasha Dubey has asked us. Vipasha Dubey is aged 51, and her query is that she wants views on the ICICI Pru Infrastructure Growth Fund in the form of a SIP. She's looking to invest 10,000 rupees a month for 3 years, considering the government impetus on infrastructure. She says, I'm currently investing in large cap equity fund. So great question there, Vipasha. Thank you so much for sending it in to us. I'm coming to Pankaj first to answer this query, and it's a really good one, Pankaj, because infra is the big theme, and you've seen a lot of funds launch infra themed funds as well. What do you make of her specific query, and is it wise to invest in a specific infrastructure themed fund?
See, it's a thematic fund. So any point of time can see that different sectors, different themes can outperform the broader market because of government's policies and situation. This looks a good theme. So this viewer can definitely invest in this fund. But because the fund is good in this category, you see, this is a well diversified within this theme. There are around 54 stocks and spread across 12 sectors. So it's not a very concentrated portfolio fund. It is a well diversified within the theme. But as I said, any theme or any sector can outperform the broader market for a certain period of time. So if she wants to invest for next 3 years, this can be considered as a good fund. She can definitely have allocation, but she should review the fund's performance and the theme. And as soon as the themes plays out, she should exit from this and should invest in the diversified fund.
All right, but when will you know that the theme has played out? You know, this segues very well with our previous question. You're just assuming, I mean, no one, if I ask the biggest expert in the market right now, do you know when the investment theme will play out? Nobody knows. It's linked with the India growth story.
I agree with you, but suppose government has some higher allocation in defense sector, or they are focusing on infra or capex. So this gives you some indication that these sectors can do better than the broader market. But otherwise, I agree with you. It is very difficult to know. And that is why the retail investors' suggestion is always that they should invest in diversified funds so that fund managers will take the call in this sector, they should allocate more. But because her question was very specific and she seems to be positive on this sector. And this is the thing that I also agree that this sector has, or this theme has potential to deliver better returns than the diversified fund for this point of time. So that is why I said that she can consider, but I agree with you, it's very difficult to understand that this sector or this theme will do better than others.
So it's a bit of a risk with thematic funds. Arnav, what would you advise Vipasha?
See, I want to make two big distinctions. One is a good fund necessarily might not be the right fund for you. So looking at her portfolio, I mean, where she has just exposure to large cap funds, my solution would be that, I mean, you go across the market cap, but stick to diversified funds. Do not go for a specific theme. So the fund is good, but is it right for her? According to me, in that sense, the answer would be no. The second point is that, see, markets always run up ahead of expectations. So if you look at this fund, the 1 year performance shows some 60% return, the 3 year performance shows 40% compounded annual return. So the question also is whether all these thoughts about the infra boom and all is already baked into the prices, because markets always run ahead of the actual happenings. So in that sense, it's also not very clear and nobody knows about this, because this again becomes a question of market timing, which nobody is sure about or nobody can predict as to whether the gains are already there in the portfolio holdings. So which also increases the risk for the investor as well as for a portfolio like this, where a thematic fund can cause a bit of imbalance also.
Okay, so yeah, maybe you need to look at your entire portfolio first. Another question coming in from Vikram, and it's an interesting query. Remember, if you want to send us queries, the WhatsApp number's on your screen. So he's age 33, and the query is, how can a retail investor identify if a fund follows growth /value/gap style of investment? very specific and interesting query there. He's mentioned his current portfolio with a horizon of 25 years. He's only 31. So Navi Nifty 50 Index Fund, he's putting in 15,000 rupees a month. Kotak Equity Opportunities Fund, also 15K a month. And Tata Small Cap Fund, also 15,000 rupees a month. Arnav, why don't you fill that first?
So one way to identify the actual manner in which a fund manager manages a portfolio is by looking at what are the kinds of stocks which he or she is including in the portfolio and the way it is managed. Now, as far as one of these components go, value investing, there is a separate category of funds which follow the value style of investing. So that part is simple. But even apart from that, there are many other funds where they follow this style, even though they are not necessarily value oriented funds. So looking at the portfolio and trying to understand this, that is the main way in which one can actually find out which style the fund manager is following. But that requires a little bit of skill, expertise, which a lay investor might not have. So that might be difficult for an investor to do. The second part is with respect to the existing holdings which the investor has. Now, if you look at it, there is one large cap fund, there is one large and mid cap fund, and there is one small cap fund. So if we break up the exposure, then a very large chunk of the exposure is to the large cap, followed by small caps, and the mid cap is very small because within the large and mid cap fund, the mid cap exposure is close to 40%, and the remaining is mostly in large caps. So again, when a portfolio is being constructed, one needs to look at and maintain this kind of internal balance, because large caps are steady, consistent companies which grow their profits in a particular manner, while small caps are more volatile in nature. So ideally, what this portfolio would need is a little bit of rebalancing towards mid cap, away from small caps.
Okay, so more mid cap, away from small cap. I have no time to take that question to you, Pankaj. Unfortunately, I have to wrap. But yeah, thank you to Arnav and Pankaj for joining us today, taking all our queries, and of course the important question of where to and when to redeem. If you have queries, reach out to us. The WhatsApp number's on your screen. Until the next time, looking forward to seeing you again, and thank you for watching.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
अंतरिम बजट के बाद वित्त मंत्री निर्मला सीतारमण का ये पहला इंटरव्यू है। प्राइवेट नेटवर्क में ये पहली बार हमसे बात कर रही हैं।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk appetite.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a
Hello and welcome. This is Earnings Edge. I am Agam Vakil and with me is Mihika Barve. We are going to take you through some important conversations here. But before that, a quick look at the markets and how things are faring, where it is turning out to be a little bit of a tough one for the bulls because we are in fact looking at the Nifty trading at day's lows, taking a cut of about 0.5%, and we have now clearly lost out on the mark of 21,700. That was a pivot point, and it has been over the course of the last few days, but we are starting to see that the weakness seep in, and specifically when it comes to the Bank Nifty, that is taking a cut of well over 800 points as we speak. This one also trading near day's lows, looking at a decline of, well, 1.9%. So, well, a good near 900 points gone on the Bank Nifty, and a lot of that, no prizes for guessing, is on account of private sector banks. But we shift focus back to earnings, and the first one that we want to take up is Paras Defense, where we have earnings coming through. Of course, I'm going to also have my colleague Mihika, who's with me to talk to the management about how the quarter's gone by. We have Amit Mahajan, the director, with us. Amit, good afternoon. Thanks for joining in. My first question to you would be the top line, where we have seen subdued growth, and in fact we've seen a decline in profitability this time around. Can you take us through the quarter and what your assessment has been, whether or not this is in fact a one-off?
Good afternoon. Firstly, thank you for having me on the show. And yes, the company operates in a fashion that is more project oriented and not quarter on quarter. So every quarter will not give you the right indication of how the company is going to do for the whole year. The good part is everything as far as the revenues are concerned or the operations are concerned is absolutely on the mark. Very solid order book. The profitability, yes, because there are 2-3 reasons. One is this particular quarter, because we are a project-oriented company, this particular quarter was little heavy on the defense engineering side on the supplies, which is almost 65% as compared to optics and optronics, which is the most profitable vertical of ours, which contributed only 35%. This will get ironed out in the quarter 4. The second one was there is a lot of R&D activity which is happening on the subsidiary side. And they have not yet started making revenues, which will start in the next financial year. So a little bit of loss effect of our subsidiaries can be seen on this. But again, when you see it on the yearly balance sheet side, I don't think there is any concern from our side.
Thank you, Mr. Mahajan. Moving on, you did mention a strong order book. May I know where does the order book stand as of Q3, and what was the kind of intake the company saw?
So we are standing with an order book in excess of 620 crores, which is including the run rate that we are doing. So it's a very, very strong order book. Apart from just the order book, the good side is the opportunity size that the company garners is huge. It is at least 2 to 3x of the order book that we have. So the opportunity is very good. The order book is very good. Being a project-oriented company, there is 5-10% here and there, which keeps happening. And at the end of the year, it will show a good growth in line with whatever we have been projecting.
Okay, so an order book to the excess of 620 crores. And what are the kind of expectations that the company has for Q4? And does the fact that, you know, the current year is an election year, does it have a certain impact on the order intake for the future?
So the Q4, usually if you go through all the defense stocks, Q4 will be very, very strong. Looking at we work in a zone where we are working for defense, we're working for space. Most of these projects are to a great extent isolated when it comes to the economic requirements of the nation. So the national security rides over any and everything. Our order book has been strong, not because of elections or not elections, but the very fact that India has started looking at inwards. Make in India, Atmanirbhar Bharat, all these policies, along with the positive indigenization lists, these add up to the opportunity spectrum and the bouquet. This has been swelling, and this has been the requirement of the armed forces rather than anything else. So this drive and this has changed the strategy of almost all the buyers as well as all the suppliers. This is a permanent change. And this will always ensure that Indian manufacturers will always be having good opportunity size in front of them.
Right,
Amit, election year or no.
Sure, Amit, we were just trying to understand if there is any sort of seasonality, because from what we understand, a lot of your peers at least tend to get the largest amount of orders in the final quarter of this financial year. And, because this is a very heavy quarter in terms of order intakes, we were trying to understand whether or not this applies to you as well. We do understand that specifically with the kind of business that you deal in, the order flow could be lumpy and may not necessarily have that seasonal approach. But if you could give us your point of view as far as this aspect is concerned, especially given we are moving into elections. So,
if I may call it, there is no one company which is a peer to another company in defense. If you are saying there are peers that you are taking reference out of, I would want to mention that either there are companies who are, say, into electronics or into RF and microwave, and then there are companies who are government-based companies. So both their businesses are very different. Paras is a very different company. Paras has multiple technologies that we bank upon. One of the widest range of products that we offer to the tier 1 companies in defense. So our business is fairly distributed and not dependent on one odd stream of technology. At the same time, we are not as lumpy as a government company or not so much dependent on the government initiatives, because we are not a government company. So we are serving a lot of tier 1 companies. We are serving a lot of R&D requirements of the nation. And it's a blend of all the references that you can take off.
And, with the order book that you do currently have, what is the kind of execution timeline or earnings visibility that the company has over the next few quarters?
So it starts from being, say, 6 to 18 months. That's because the say certain verticals, they will do much faster turnaround, certain projects will do faster turnaround, and certain projects will take its own time of gestation. So from 6 months to 18 months, this is the time frame that we have the order visibility to execute the orders on hand. At the same time, we also have good inflow that we see coming on the order book. This effect, we would want to retain a good, handsome 2x order book to past revenue. This is the kind of ratio we want to maintain.
And when you talk about the FY25, what is the kind of revenue growth as well as the order book growth that the company expects?
FY25, we would want to retain the kind of order book that we have this time, or slightly better it, because we are expecting our subsidiaries will start chipping in. handsomely in the next financial year. So we would want to at least maintain a revenue growth of 30%.
Okay, so 30% revenue growth. And as you did mention, the defense engineering segment is the one where the margins are a little lower. So are you all seeing the kind of traction for the optics segment going forward? Is there a certain revenue mix that you all do target?
So optics has natively contributing 50% of our revenues. In this particular quarter, it slightly dipped. Maybe it will also continue for the next quarter, but next quarter, the profitability will be retained. Optics, our target has always been that optics will take care of the 50% of our revenue and defense engineering will take care of 50%. The blend is of optics gives us profitability. The defense engineering gives us wider reach to the customer. At the same time, it also gives you faster turnaround. So it's a blend that we always carry with us.
Okay, right. Amit, we'll leave it at that. Thank you so much for joining us and taking us through the quarter as well as what we can expect going forward. We wish the best for the future.
Pleasure is all mine.
Right, so that's the management of, Paras Defense telling us about how the quarter's gone by. And of course, while it's been a subdued quarter, they have a very strong order book going forward. And of course, they have given us a good idea of the execution timeline as well. On that note, it's time to slip into a short break, but don't go anywhere. We have lots more managements to talk to. Stay tuned to NDTV Profit.
Presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Welcome to AU Video Banking.
यहाँ बैंक के सारे काम हो सकते हैं, सोच बदलो और बैंक भी। AU स्मॉल फाइनेंस बैंक, बदलाव हमसे है।
पतंजलि हनी ने पास किए हैं प्योरिटी के 100 से भी अधिक इंटरनेशनल पैरामीटर्स, तभी तो बनाइए प्योरिटी में मेरा लीडर।
पतंजलि हनी 100 में 100।
जाने कब से रहते हैं।
फिस्कल डिफिसिट के नंबर को आपने अच्छे से मैनेज कर लिया तो थोड़ा खर्च करने का रूम था, चाहते थे तो कर सकते थे आप, लेकिन वो उस चक्कर में भी या उस लालच में भी आप लोग नहीं आए। मेरा कहना आपके पास स्पेस था फिर भी क्यों नहीं किया?
सबके मन में ये जरूर एक भरोसा, कॉन्फिडेंस था कि जनता समझ रही है कि जो योजनाएं हम तक पहुंचा और सरकार जो ट्रांसपेरेंट तरीके से किसी लालच में नहीं पड़ा और कुछ लीपापोती करने का कभी कोशिश नहीं किया, ऐसे सरकार जिसका समर्थन होना चाहिए हम देने को तैयार है, ऐसे मूड में देश है।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty.
Once again, an 8% revenue growth on a year-on-year basis, and profit has risen up as much as 36%. To take us through the quarter, well, we have Skanda Prasad Sitaraman, the CFO of the company, who's joining us on the show. Mr. Sitaraman, good afternoon. Thanks for joining in. Well, can you take us through the quarter gone by? Can you tell us through what has in fact driven growth? Can we expect growth to better over the course of the next few quarters? And can we also expect you all to maintain your margins, which have in fact come in at around 14%?
Good afternoon to you, and good afternoon to all your viewers. Thank you for having us on your show. It's been a very good quarter for us. Revenue expansion has begun. You've seen that we have grown in the quarter, especially on the back of large projects starting both in Chennai and Bangladesh, and also the execution speed on the existing projects. From a margin perspective, you rightly mentioned, we have been demonstrating this growth over a period of last 3 to 4 years and steadily maintaining it in the double digit. And we have also grown it in this year as well as this quarter. So this is a margin profile that we expect to maintain going forward because of the mix of projects that we have. EP projects, industrial projects, international projects in line with our strategy, which is helping us build on revenues, good margin profiles, and more importantly, cash, where we have demonstrated a net cash positive. And something I would also like to share is you would have seen our filing with the stock exchange. We have got an upgrade in our credit rating to IND A+ with a positive outlook on long-term basis, which is an endorsement of all these efforts. And now with this growth, we are moving into the Q4 and the next years. The robust order book gives us a very, very good confidence on growth both in the next quarter as well as going forward. And with almost 40% of our order book being in O&M, the long-term revenue visibility, cash visibility, and margin profiles are also looking good.
Thank you, Mr. Sitaraman. So you do expect to maintain the 14% margins, but I want to move on to your order book. What is the current status? And I wanted to know if the company is leaning towards more municipal clients or industrial clients.
See, we put out this strategy that we want to look at 4 basic sectors: EP, industrial, international, and O&M, to improve the share. Water is primarily a municipal sector. We cannot take the social element out of it. But by mixing more of EP, industrial, international, O&M, we are making it that much more secure. Second, we are looking at payment security driven projects. Like we take projects only with sovereign guarantee or with federal government backing, or with a letter of credit or backed by multilaterals. So even in the municipal space, our projects are of very high quality. The third most important aspect we look at is advanced technology. We are a knowledge organization. We are a technology and process contractor. We are not an EPC player. So you would see that we focus on projects which are in the desalination space, in the recycle and reuse space, and in the industrial space, which allows us to deploy our proprietary technologies and processes and also build our references. This is more value accretive than being an infrastructure player on the civil front, which we are not. We want to remain asset light, we want to be margin accretive, and we want to be in the high technology space of the water sector.
Right. So the total order book as of your presentation is 11,900 crores. Now, can I get some kind of execution timeline, or what is the revenue visibility that you do see in the upcoming quarters?
Yeah. Generally, the EPC gets executed over a 3-year period on an average. And O&M, today we have very, very long-term O&Ms, 10, 15, and even 20 years. Our Chennai desalination plant is a 20-year O&M. So these are long-term profiles of revenue which will unwind.
All right. Well, Mr. Sitharaman, thanks for joining us and taking us through and giving us insights into what's really gone down the quarter gone by. Of course, we'll continue to keep an eye on all the factors that you have spoken about. And that's we take about giving us an idea about how things are panning out. From there on, we shift focus to Kaplan Point Laboratories. We have Vivek Siddharth, the COO of the company, who's joining us on the show. Vivek, good afternoon. Thanks for joining in. It's a strong quarter. Can you take us through the highlights and what's actually, in fact, driven the revenues as well as margins, and if whether or not you could, in fact, expect to sustain this as well?
Yeah. So for us, consistency has always been key, especially because almost 83-84% of our business is Latin America, where we are mostly focused on the private market, and we don't have too much of a play in institutions. So if you look at our past few years' growth in general, I think you would see that consistency has always been key for the company. We are very, very focused on cash flow, bottom line, and top line in that particular order. So and the growth has been coming through 3 main levers, I would say. The existing business in Latin America, US injectable business is one as well. And finally, we are starting to see a little bit of momentum coming in from our oncology business as well, which will also start to grow in the coming few quarters.
Right. Well, of course, if you can also give us an idea about the oncology business going in, what sort of targets are you working with, and what can we expect?
Yeah. So far, what we've done is we've been using outsourcing manufacturers for many of the products that we've been supplying in the market. Now, with our oral solids oncology plant coming on stream in the next few weeks, we'll be able to focus more on in-house manufacturing. Of course, with anything in pharmaceuticals, you can expect there to be a fair amount of gestation period, because every product approval takes about 12 to 15 months. So we don't want to put an exact number to it, but oncology is a space that we've been targeting for quite some time. We never had our own manufacturing for that. Now that that's coming to stream, I think over the next 18 months, we can start to see something meaningful out of this space.
Right. We're going to understand that your EBITDA margins have also been aided further by new product launches. Can you tell us a bit more about this and the kind of contribution that they made?
Yeah. So we've always made sure that we hold on to the assets that we are developing. We're not really a CMO or a CDMO for larger companies. We do some amount of CMO, but we've always known that for something to be sustainable over a longer period, we wanted to make sure that we have the destiny in our hands, rather, So despite the fact that we were one of the small to mid-sized kind of players in the largest market of the US, we've always kept a sharp focus on the R&D and the pipeline and stuff. So obviously, as more of these approvals start to come through, you can see that the revenue will start catching up as well. So in the US especially, I would say quite a large percentage of the new growth has come through way of newer products that we've had approvals over the last few quarters.
Vivek, we also understand you have about 13 ANDAs under review, and you're expecting about 3 to 4 approvals in the coming months. Can you talk to us about that as well?
Yeah. So it's quite interesting. The next few approvals that we expect are going to be in the ophthalmic space, which is something that's a little bit new for us. It also goes through retail compared to the hospital segment, which the injectables usually go through. But we have a decent strategy in place for that. We are expecting to have more approvals also in ophthalmics in the next couple of years. So it'll be interesting to see how we do it. It's just that the ophthalmic line that we have at our plant is largely underutilized. So launching these products will not be an issue. We need to make sure that we time it well, but it'll be value accretive to our revenues, I would say, because we're not replacing any other current existing product with these ophthalmic ones.
Right, Vivek, we leave it at that. Thank you for joining us and taking us through the highlights as well as what we can expect coming in for Kaplan Point. And that's, of course, the management of Kaplan Point Laboratories giving us a true picture of what we can, in fact, expect with respect to, their approvals which are pending, and of course the products that are slated to be launched. But with that, we're completely out of time on the show, but don't go anywhere. We have India Markets Close up next. Stay tuned in.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
अंतरिम बजट के बाद वित्त मंत्री निर्मला सीतारमण का ये पहला इंटरव्यू है। प्राइवेट नेटवर्क में ये पहली बार हमसे बात कर रही हैं।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
you can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me. Well, thanks for tuning into India Market Close, and it's not looking a pretty picture for the markets, unfortunately, and a lot of stocks are taking a beating, which is very large relative to what the index fall has been. So there's a serious profit booking piece that is happening. Look at the broader end of the spectrum. Forget the mid caps and the small caps. Look at the broader end of the spectrum. There's some serious pressure at the mid cap and the small cap end of the market. So those indices will come up on your screen. Nifty Bank is down 1.7%, 1.7 Nifty. PSU Bank is down even more. But the mid caps and the small caps, and small caps in particular, 1.67 for the mid cap 100. Pull up the small cap index, 2.63%. Now look at the Nifty, look at the PSU index or the Nifty PSE ETF as the case may be, because that has taken a big crack in the session today, and a lot of stocks are really correcting very swiftly. The market breadth, before we go to the heat map, and the market breadth will come up on your screen and you'll see what I'm talking about. Look at this change that happened sometime early in trade, and then how adverse the market breadth has been throughout the trading day today. It's not often in the last few days that we've seen an advanced decline ratio which is as bad as it is looking right now. 400 to 1600, that's 1:4 in favor of the declines. Frankly, I can't remember the last time that I saw this. So, well, very bad for the broader end of the spectrum for sure. But let's start with the large caps and just show you what's moving. And then Tamanna will highlight a clutch of those mid caps and small caps. So the top loser is Hero MotoCorp, and then Coal India preceding its numbers, down about 4%. Some of the other PSUs, so Coal, BPCL, ONGC have all corrected in the session. There are very few gainers, and that's the problem. Banks are looking under pressure because in SBI, Kotak Bank and ICICI Bank are all under pressure. ICICI Bank down about 1.7%, just moving around a bit. And the gainers don't have as much weightage. So, I mean, between Dr. Reddy's, Divi's and Apollo Hospitals, yes, they are doing well, but they don't quite wield the weightage on the index that you need to hold the index up higher. But mind you, like I said, the index, you would be flattered, you will be deceived if you just look at the index and think of the kind of carnage that is there in the markets, because that is still down 0.64%, Tamanna. The larger cuts at the broader end of the spectrum are very severe.
And PSU banks leading. PSU banks, entire PSU pack. This was a conversation Neeraj and I were having this morning about how PSUs perhaps will see more pain after a run-up in valuations before they recover. And you're seeing that play out definitely. So that's the Nifty PSE. And let's pull up the PSU bank index as well, because that's also seen quite a bit of pain this morning. Yeah, that's about 3.5% down. But let's come stock specific. And if you have, as a company, put out a poor set of numbers, you are going to be beaten down, brutally punished by the market today. And that's what's happening with Amber today. Amber Enterprises, poor numbers. They've gone into a 50 lakh loss this quarter versus a profit last quarter, 12% down. SJVN, we highlighted this morning, poor numbers. That stock 20% down. Bharat Forge, on the face of it, doesn't seem like very bad numbers, but they have missed estimates on two parameters, their revenue and their profits. Their margin, EBITDA, seems fine. Anyway, doesn't matter. Today, that stock is being hit quite badly. We'll in fact speak with the management in a bit from now. Zydus, though, is showing an upswing, and that's because of a buyback approval by the board. The buyback price is at 1,005, and it's a 600 crore rupee buyback. So at 859, well, you're seeing some interest and some enthusiasm. That's not the only one with positive moves. We showed you three negative moves. Let's show you three positive moves, although for different reasons. Zomato is definitely one of them. The stock has been in focus since their Q3 numbers were out some days ago, but that momentum seems to be continuing today. Paytm and Honasa, the other ones that we should talk about very quickly. Paytm, because of What's being seen as some relief from the regulator, we have reported that they may extend the deadline for when their payments bank pretty much shuts shop beyond 29th of Feb. So that's talk about 3.5% up. Manasa off the day's highs looked like a pretty solid Q3. They've had some 250% jump in profits year on year. But yes, some profit booking there as well. Overall, though, Neeraj, one would reckon that the story continues to be on government-owned companies. And some of them perhaps getting a much-needed reality check.
Much-needed reality check, that's the way to put it, really. And frankly, let's ask our guests the same question. Is this a much-needed reality check for some of the entities? Hemen Kapadia, Senior VP Institutional Equities at KR Choksi Stocks and Securities with us on the show. Hemen, good having you. Good afternoon. Great, in fact, great talking to you today because such a day requires experienced hands. Tell us, what does the screen tell you? Because the Nifty, if you see, will not make you feel that it's that bad, but it's actually a lot of pressure out there.
A very good afternoon to you, Neeraj. Thank you for having me on the show. It's always a pleasure. Absolutely. The Nifty hasn't done much, but otherwise it's chaos and mayhem all around. We spoke last Monday also, Neeraj. I said the VIX is elevated. Two things had to happen. Either the market goes down or the VIX goes down. The VIX didn't go up, the market went down. And there were no apparent event risks left on the horizon. Credit policy discounted, Federal Reserve meeting discounted, nothing major. So the VIX has finally taken its toll. The dollar index continues to be on the strong side, Neeraj. So that's another point of pressure. And like I think you also mentioned, I think there needs to be a reality check. The laws of gravity need to catch up because some of these stocks were going simply berserk all over the place as if they've discovered gold and silver, not even silver, diamonds in the mine. So somewhere we needed a decent time price correction. We're riding on top of a phenomenal move. I mean, you can't run 2 marathons in a row, right? So you had to take a breather, and that's what's happening. And where things have moved too fast, I think that's where it's been hit. And like, I mean, if the results are bad, you're slaughtered. So frankly speaking, it is the mid caps and small caps which have been battered more, like you mentioned, Neeraj. Bank Nifty, we've been down for 5 weeks. This is the 6th week. I think HDFC Bank, ICICI Bank, and Axis SBI, I think these bank stocks weighted would be what, 70-80% in the Bank Nifty. So I think HDFC Bank has managed to sink everything as far as the Bank Nifty is concerned. So frankly speaking, absolutely on point. Nifty hasn't gone so bad, but markets are were in complete chaos. So I guess we needed something like this. So it's going to take time to play out. I'm not so bearish yet. Important levels haven't been broken, Neeraj, and things aren't so bad. But yes, a reality check is what I would say this is.
A reality check is the theme of the day, and NHPC is another company that seems to be getting a good dose of it. Let's pull up that stock results out, and then you're seeing that sharp fall off the cliff, down 15%, just as I've been seeing in the last couple of minutes, has gone from a 10% to a 15% cut. The first numbers that we have, revenues are at 2,055 crores versus 2,582 year on year. So drop over there. Net profit has also slid. And you have that figure coming in at 628 crores versus 776. Look at the cut on the EBITDA, 57% down at 720 or 721 crores versus 1690 crores. Another one of those favored golden boys and golden girls of PSU companies which had run off. Margins have also actually been slashed quite a bit, more than half, from what I can see at first cut. So yeah, you're seeing that pain play out as well. Sudeep Bandyopadhyay also joining us on the show today. He's Group Chairman, IndiTrade Capital. Very good afternoon to you, Sudeep, but not a very good afternoon for some stocks and companies. I'll quickly pull up the railway pack as well because they're feeling this shared pain all over of what's happening with public sector owned companies, and RVNL down about 9% right now, but the whole lot, Railtel, let's see what's happening with Jupiter Wagons, Titagarh, Texmaco. Sudeep, what do you reckon? We've been having this sort of debate in the newsroom about whether this is a short-term reality check cut after a run-up of valuations, and then you will see some of these companies carry on their uptrend, considering it's a big focus in terms of government policy, or is there more pain left?
Well, I have been maintaining my view that some of these PSU, particularly in the defense and railway space, have really run ahead of the ground reality. I'm not doubting the intention of the government or the initiatives taken by the government, as well as the order wins or the business wins by these companies. They are real and they will definitely yield results over a period of time. But the key is the results will come over a period of time. And I think the market was factoring in things little too early. And that is unrealistic. Defense company getting contract for submarines. I mean, one has to realize that the submarine manufacturing is a long process. It takes multiple years for this to happen. Now, if you start factoring in that earning and discounting it and giving a valuation, I think that's a bit unrealistic, and that is what was happening. So, time-wise correction was warranted, and I'm pretty sure that that's what is happening. Or even if it doesn't happen now, it recovers tomorrow. It will happen at some time, because eventually it has to catch up. The reality has to catch up with the valuation, and that has to happen somewhere. These are good companies. There are a lot of important things, good things which have happened to these companies over the last 5, 7, 10 years, and they are on a good trajectory. There's tremendous government support. Their environment is right, but the valuations were not right, and that will have to get kind of resolved at some point of time or the other, and probably that's what is happening.
So, Deep, beyond PSUs, the clutch of other stocks which on poor numbers are coming off as well. We are at the fag end of the earnings season, I understand, but do you anticipate the pain at the broader end of the spectrum to worsen? Because the interest around India seems to be alive and kicking, if almost any sell-side brokerage is to be believed.
Neeraj, not really. The way I look at it, I think fag end of the earnings season, normally companies come out who don't have anything good to talk about. I mean, this is a very general statement, may not be specific to any company, but that's the reality. And, I don't want to extrapolate that into future. I think, some of the companies have come up with results like Tata Power and all come up with results which are much below the market expectation. There is a rationale for that. But whatever we want to say, the reality is there was a little bit of froth in the market, and probably that will get taken out at some point of time. After such a humongous rally, both in India as well as globally, I think bit of correction, bit of consolidation, bit of profit taking, whatever name we want to call it, is par for the course. I don't think we should get too perturbed with this. Fundamentals of the market, the structure of the market hasn't changed. I strongly believe that we will maintain the positive bias in the medium to long term. Short-term corrections, short-term this volatility is bound to be there in the market the way it is poised.
Let's talk about, you mentioned Sudeep, Tata Power, and let's see what's happened to Tata Power. That is a stock of the day, not in a very positive way, but that entire pack, even an SJV, and down 20%. And I mentioned that in my opening. So the energy space seeing a lot of pain, but so is Tata Power. The shares have fallen after the company reported muted post-tax profits in Q3. Now, earlier in the day, we spoke with Praveer Sinha, the MD and CEO, about the company's Q3 performance and outlook. Listen in to what he said.
We need to look at the results, that consistency is coming in the company. And second is that whatever we are doing, it will be sustained going forward. So that's the good part of the result. Also, the important part of the result is that we are seeing that our performance is now tilting more towards our core business. All our existing operations, whether it is our generation or it is our transmission, distribution, renewables, have yielded good results. And this time, nearly 71% of our profit has come from the core business, which we expect in the future quarters will move to 80 to 90%. Secondly, what is also important is that many of the changes that we have made is stabilizing our operations, and this will ensure that there is a much better and consistent performance in the long run. So it's a very satisfying quarter as far as we are concerned.
All right, satisfying for Praveer Sinha, but not for the investors of the Tata Power stock. For sure, near its day's lows at this point, nearly 6.5%, 7% down. Hemen Kapadia, do you think there is a possibility of a bounce back here on Tata Power?
Actually, Tamanna, from a very near-term point of view, I think it could take some time. But the bigger picture remains unequivocally bullish. I mean, okay, time like this, I don't think anybody bothers much about the bigger picture. But support comes in around 360. So we're not very far away from there, Tamanna. So 360, 340. I think 360 should provide some cushion for a recovery. Sustainable at this point of time? Not sure, but I think 360 should provide support for a bounce, Tamanna.
Sudeep, very quickly before we take that break, on Tata Power or some of the power companies, because it is believed that these are the last bastions of growth. Somehow Tata Power has kind of failed. You answered that briefly. You reckon that there'll be more pain in store?
Not much. I think the coal prices have come off, and Tata Power, there's a combination of Indonesian coal as well as local coal. The coal realizations are down, and I think predominantly that's the reason why Tata Power, the profit and the margins were down. As far as some of the other power companies are concerned, like NTPC, I'm pretty confident and bullish. And I think, fundamentally, medium-term, the power sector is a great place to be in.
Okay. We come back and we try and talk about the commentary that is coming from one of the auto ancillaries, which is Bharat Forge, wherein they have cut what they would do in terms of growth for Q4 and further into FY25, and which is why the stock is down 11%. We'll connect with the management as well. Stay tuned to NDTV Profit. We'll be right back.
Presented by Patanjali Honey, world's best Patanjali Honey, 100% proven on more than 100 parameters of purity.
फिस्कल डिफिसिट के नंबर को आपने अच्छे से मैनेज कर लिया, तो थोड़ा खर्च करने का रूम था, चाहते थे तो कर सकते थे आप, लेकिन वो उस चक्कर में भी या उस लालच में भी आप लोग नहीं आए। मेरा कहना आपके पास स्पेस था, फिर भी क्यों नहीं किया?
सबके मन में ये जरूर एक भरोसा, कॉन्फिडेंस था कि जनता समझ रही है कि जो योजनाएं हम तक पहुंचा और सरकार जो ट्रांसपेरेंट तरीके से किसी लालच में नहीं पड़ा और कुछ लीपापोती करने का कभी कोशिश नहीं किया, ऐसे सरकार जिसका समर्थन होना चाहिए हम देने को तैयार है, ऐसे मूड में देश है।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many
quick check on the markets, and the largest pain in the bank Nifty, I would reckon, nearly 2% down, even as you are seeing that ongoing profit booking. But more than the Nifty and the Sensex, one would reckon that the broader markets are seeing a tumble this afternoon. Let's pull up Bharat Forge and that statement from Baba Kalyani that you're seeing on your screens. Perhaps one of the reasons why the stock is feeling pain. A statement from Baba Kalyani talking about how growth momentum will moderate in both domestic and export markets across industries looking into Q4 and ahead on FY25. He says our endeavor will be to outperform the market driven by our diversified business mix. But the outlook, he's saying, will be muted. Or to specifically quote him, growth momentum will moderate. Himen, a quick take from you on Bharat Forge.
Actually, Tamanna, Bharat Forge is one of the better looking stocks, frankly speaking. And we have seen it actually post a fresh all-time high yesterday and today. And now it's virtually fallen off a cliff. So it's a bit perplexing. 1300 was important, 1180 is important. I'm saying was because in the past tense, everything has gone for a toss. We've seen huge volumes. I think it's volume. We still have half an hour left and volumes are more than 40 lakhs in the cash market on an NSE. We're not very far away from supports. Support comes in at around 1126 and the intraday low is 1131. So I say for the time being, it's going to take a breather over here. But yes, if it ends, okay, we are on the week, still too early to take that call, but it ends here like this, it's a huge downward bar reversal on the weekly chart. So
got it.
I'd say a panic sell-off seems to be petering off as of now.
Okay, well, let's talk to Amit Kalyani, Joint MD of Bharat Forge. He joins us right now on the show. Amit, good having you. Thanks for taking the time out. Neeraj here.
Hi, Neeraj.
Hi. Well, I think the statement around what could happen in Q4 and FY25 seems to have spooked the markets more than the performance. Amit, what's changed in this landscape for you guys to be cautious about the Q4 after having what has arguably been not such a bad the first 9 months? So what's changing?
Oh, I think we've had a good 9 months. Our 9-month profits are almost equal to last full year's profits. And, for Q4 will also be good. But I think, if you look at the end markets that we serve and the end geographies that we supply into, there is a lot of stress and there is a lot of, uncertainty in those markets. Many of the markets are starting to slow down, show signs of stress. And, they have all kinds of issues, right? From geopolitical issues, political issues, financial issues, other issues in those markets. And I think we need to be cognizant and be responsible in communicating to the market and to our stakeholders and not just always paint a rosy picture. And I think we always look at giving our stakeholders a slightly longer term view rather than a short term view. We've gone through these cycles many, many times, and we've always come out stronger through these cycles. In this cycle, particularly, we have 3 verticals which are brand new, which is our industrial castings vertical, which is our aerospace vertical and our defense vertical, which are unhindered and which will continue to provide us a lot of growth momentum. And they also have a lot of export business. So I think overall as a company, we will do well. We will grow with double digits in spite of the headwinds that we see. Hopefully, post-elections, we should start seeing a lot more clarity on, reform and capital formation in India, which will lead to, demand for our kind of products. But I think one should be cautious because when you look at what's happening globally, especially in Europe, I mean, there is no doubt that there is a lot of pressure.
So, Amit, is this some signs of maybe client conversations the way they may have happened? And I love the statement. In fact, both me and Tamanna love the statement that you made that it's responsible on a part of a large leader like you to tell it out to investors, not just of your company, but people who are watching economy about what's happening. So my question therefore is, are these client conversations that talking about maybe some stress coming in as the year rolls on? And is this predominantly global in nature? Because the hope is that India still, I mean, if the RBI is to be believed, right, RBI is to be heard, 7% growth for FY25, that's probably not a bad scenario to be in.
That's a great scenario to be in. In fact, I think that whatever pressure that we see will be transitory, will be short, and will allow us great new growth opportunities. With a strong balance sheet, with strong execution capability, I think we stand only to gain from these adverse situations outside. But it's going to be a little bit of time, for the, let's say, the proverbial, let's say, for it to hit the bank, if you want to call it that. Meanwhile, Q4 is not bad, but I'm still a little suspect or skeptical about next year. Although we will grow, I think the underlying markets are not going to be as strong as everybody wants to believe.
Got it. Yeah, these are tall.
I mean, look at China, for example.
Please.
Even China. Sorry, Neeraj.
No, please continue.
If you look at what's happening in China, the bad debt situation in China, it's like an onion being peeled. More and more layers, and more red layers are coming out, and red ink and bad news. So China being a big growth driver for the world economy, I think those days are over. China for China now, and what happens with that is India is going to become a big growth driver, and 7% growth, next year, if that's forecast, that only has to accelerate in order to provide overall growth for the markets.
Okay, we'll come back to this piece as well, but just in justice to talk about what you've done in the quarter, what you could do in quarter four, and here's my question: when I look at what you've done, Amit, not just in this year, but since maybe the March 2022 quarter, you're probably sitting at the highest EBITDA margins. So you've done commendably well on that front. Revenue numbers are looking okay relative to maybe the rest of the industry, looking very good. Now, in a slowdown scenario, potentially slowing down scenario of FY25, are these manageable? And of course, what led to this kind of growth that you've seen in quarter three?
I see. What has led to this growth is actually increase in our components business, increase in our industrial business, increase in our defense business. Please remember that our oil and gas exports are down 2/3. In spite of that, we are growing. So some of these markets will come back, some markets will go down. So overall, it may end up balancing each other, and we will still continue growing. I think profit outlook for 25 will be higher than 24. All I'm saying is that the magnitude of jump will not be as much.
Hi, Amit, Tamanna here. And I really must reiterate what Neeraj said. I really appreciate a management coming out and saying clearly that this is how we see things panning out. We don't want to paint a rosy picture. It's rare in these times. So kudos for that. Having said that, you also go on to say that while external circumstances may seem to be negative, demand may moderate, etc., you will outpace the industry. So let's get into a bit of detail on that. How exactly do you think that will be achievable? And can you set any guidance on that end?
So look, in terms of guidance, I'd say that high single to low double digit is where I see our growth next year. Now, if we have some significant new wins in any of our defense or other businesses, that will give it an additional boost. But that's where I see it. One flip side that I see is that in a market that goes down, sometimes costs also come down. So profitability can have a positive impact as well. But that remains to be seen. Overall, I would say that we're well placed. All the new verticals that we're in, which is defense, industrials, and aerospace, are seeing high double-digit growth. And we expect that to continue. This is very profitable growth, and it will allow us to, offset a lot of the other reduction as well. So I'm not pessimistic about the year. All I'm saying is that I'm being realistic.
Do you see your India focus increasing? You explained the
absolutely.
Change. Yeah. So
absolutely. Actually, the way we've started classifying our manufacturing now is India manufacturing versus global manufacturing. And India manufacturing is going to be our biggest growth driver going forward. If you look at the casting business that we bought, the industrial forging business that we bought, that added, almost close to 1,000 crores of capacity to our company, and that can double in the next 2 to 3 years based on just us getting more customers with the existing capacity that we have on hand.
Amit, on the word on oil and gas, I mean, and the exports having come off so much, the recency of the financial health of some of the global oil and gas majors seems to be very good. Do you expect a turnaround? Because everybody from Chevron to Exxon to whatever else is posting record high profits. So do you think there could be a turn around the corner?
See, what is happening, Neeraj, is the kind of sector that we're in, which is the shale oil sector. There are a lot of small companies which are exploration E&P companies. And these E&P companies in the low interest cost regime used to drill multiple wells and explore and cap them when not needed. Now with interest rates being what they are, they are not doing that, let's say, exploratory drilling and exploring as much. So they're only building capacity when it's needed. Plus, if you see in the US, the transportation infrastructure for oil and gas, especially for gas, is not good. And even the export infrastructure, it's only now being put in place. I think these two will also provide a flip for the overall oil and gas sector once it comes into place.
Okay. One small follow-up from my end on the other space. I remember sometime around September or October, your peers, and I'd asked this to you as well, but your peers had mentioned, from the forging side at least, companies in the forging space had mentioned that Europe is going to see a lot of replacement demand come in on the forging side, and therefore the outlook on forging demand will not look weak. Now, US, we've seen some bit of weakness. You're talking about how Europe business looks slightly wobbly. What could happen on the auto anch side for you as well as a company or for 2024?
See, the pass car side in Europe is okay. The truck side is definitely slow, and it is going to be slow this year. There's no doubt about it.
Got it.
I mean, even if you look at Volvo's own, or any of the other large OEMs, they've all talked about this, that there will be a slowdown. But slowdown is great for us because it allows us to gain market share, shift new business here. We've always come out stronger out of the slowdown. So it's not something to be worried about.
Got it. Amit, my last question, at least, and excuse me for not knowing the numbers offhand, but what about leverage and interest costs, because they seem to be getting pushed further and further away the rate cuts? Is that an issue at all?
So we are repaying between this year and next year about 1,000 crores of debt. And we still have about 22 to 2,500 crores of cash on the balance sheet. So we're absolutely in great shape.
Okay, great.
Thank you.
Okay, Amit, thank you so much for taking the time out and being with us. All the best. That's Bharat Forge. And Sudeep, before we take that break, have to get you in on this conversation as well. Here's one large auto ancillary saying that growth could be a concern. We are forewarning. And clearly, while they're saying could be, the statement mentions that if they have gone ahead and said that FY25 could see moderation, further into FY25 is the moderation, then there's a slowdown anticipated. Is this a Bharat Forge specific issue? You reckon some of the others could face this problem as well?
Well, Neeraj, I definitely don't think it's a Bharat Forge specific issue. It's good that they have flagged off. I think what they're talking about makes a lot of sense. There is probably no point in painting a rosy picture for a company which is manufacturing for the world. Multiple pockets of the world, whether it's Europe, whether it's China, whether it's parts of Eastern Europe, a lot of turmoil going on, West Asia. So obviously there is, there are challenges, and they are kind of recognizing those challenges. While India may be all right, the other global markets are not that promising at this stage. So they are flagging that off. But as far as Bharat Forge is concerned, I think there are two areas which Mr. Amit Kalyani mentioned, and I think we have been pretty bullish on, is aerospace and defense. I think both these spaces, they are gaining traction. It used to be a very small fraction of their total turnover, which is now continuously increasing quarter on quarter. And we believe that this is going to become a very, very important factor, maybe in 3 to 5 years' time. And we know Defense Make in India is a big thrust for the government, and Bharat Forge will definitely play a role with being an established industrial player. So we are looking forward to that. Aerospace is a new area where they are doing a lot of work, and I'm sure that also will become an important area. So we'll carefully watch these new developments while monitoring what's happening as far as their core business sales and core business numbers are concerned.
Absolutely. Quick look at the markets before we take a very quick break. Sudeep and Himen, stay on with us. The weakness continues. IT stocks showing some kind of an improvement, but overall you are seeing a market in the throes of profit booking, I would say. Not really a meltdown of any sorts, but yes, you are seeing profit booking definitely on the horizon. The Nifty now under the 21,650 mark. Very short break. We're coming back with buy today, sell tomorrow, BTST or STBT, however it may be called, for the afternoon. Stay tuned.
बजट के बाद वित्त मंत्री निर्मला सीतारमण का ये पहला इंटरव्यू है। प्राइवेट नेटवर्क में ये पहली बार हमसे बात कर रही हैं।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right. Some believe in swiping right. Some run away from risk. Others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Well, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
All right, back with India market close and not looking too pretty. Very quickly, let me get in Agam Vakil, my colleague who can best break down what's happening on the derivative side in the session today. Agam, what is the data saying?
There was expectation that today would be a day of consolidation, perhaps in advances, but that really hasn't come through. And in fact, there has been further weakness on the benchmarks. The Nifty has come off by around 0.7% as we see more longs, more shorts added to the system. But it is perhaps the Bank Nifty which is taking a little bit of the focus, the sheen, the thunder out of the Nifty, and that's corrected another 1.5%. To put things into perspective, Thursday was a day where we saw a sharp cut. Friday saw about a short covering, and today we saw another down move of around 150, but a 1.5% decline there as far as the Bank Nifty is concerned. And that has weighed down on the Nifty 50 as well. A lot of cost constituents there. Now, this as far as your options open interest exchange goes. Let's talk about your open interest distribution, and we are looking still at a 500-point range, but now we will start to see a little more gathering around 21,500 in terms of puts. So we keep an eye on that one as well. A lot of traction has come through in your stocks, and the stocks of course at the moment are where we are seeing a sharp 15% knock on Bharat Forge. Of course, we just spoke to the management, but there really isn't any respite there because it's currently locked in a lower circuit of 15%. Of course, it's an F&O circuit and shorts building in there, along with Bandhan Bank, which are reacting to earnings which came on Friday post-market. Besides that, we have shorts for Nalco as well. Astral and HCL Technologies, on the other hand, looking at longs among stocks which are seeing unwinding. Again, a lot of longs unwinding in SPI, United Breweries, Petronet LNG, and of course, short covering for Divi's Laboratories and Escorts. But once again, as we move into tomorrow's weekly options expiry of the Fin Nifty, there will be a lot of focus on the private sector banks, specifically something like a Kotak Mahindra Bank and HDFC Bank, which are in fact continuing to weigh on the benchmark. And that is something that we will be keeping an eye on as we move into trade tomorrow as well.
All right. Thank you for that, Agam. So a bit more volatility expected perhaps tomorrow as well. The startling story really is, and let's pull up the CPSE index, the Nifty CPSE, which tracks all your public owned companies or your government owned companies. That's nearly 5% down now. Yeah, 4.5% to 5% down. And SJVN, NHPC now beaten down 16%, NLC, Cochin Shipyard, Coal India also feeling a lot of pain. Coal India numbers are expected later today, and we'll get a preview of what the numbers are showing, but the market seems to have decided in advance to cut some positions over here. Sudeep, we spoke about PSUs generically, but especially in your power space, you're seeing the most kind of a pain. Any views on an NLC, an NBCC, a Coal India?
I like Coal India. I think this is one company which the market had written off long before, realizing that the traditional energy is still a long way to go. We were all focused on green energy and what green energy will do. I think the realization has dawned now that the fossil fuel will continue for the next 30, 40, 50 years at least. And Coal India has a huge role to play there. Also, the electrification of rural India, which is now almost complete, resulted in significant incremental power demand, which led to demand for coal. So Coal India's demand for coal has increased significantly. Coal India's own efficiency, which was a big question mark earlier, has improved significantly. So both these two factors combined together, I think they are in for a good time in the foreseeable future. It's a reasonably well-managed company, is a dividend-paying, good dividend track record. So I think for a long-term investor, there is absolutely no problem in Coal India. I'm not sure about this quarter results, but irrespective of that, I think it's a good buying opportunity.
All right, stay on with us. Nuvama now has reiterated its MSCI expectations at anticipating India's representation to move around 18.5%. Now, this is significant in terms of inflows that we will see and could be some positive news going ahead. What are the details, though, and why does Nuvama have these expectations? Mahima is joining us with more. Mahima.
Right, Tamanna. So as you rightly mentioned, we are expecting that our representation in MSCI index will move up to 18.5%. at present, the representation stands at 17.8%. MSCI will announce its rejig changes tomorrow, that is 13th of February, and India could see close to 800 USD million to 1 billion FII passive inflow. Now, PSUs are ruling these inclusions in Feb review. If we talk about the global standard index, the names that are making to the cut according to the average flows and volumes are Jindal Steel, Union Bank and NMDC. If we talk about the inflows, NMDC might add approximately $186 million, PNB will add around $180 million and BHEL will add approximately $156 million. If we talk about the small cap index, the names that are making to the might make to the MSCI index include Oren Pro Solutions, Jupiter Life, Inox Wind Energy. And in terms of inflows, we are expecting that IREDA, Cello World and Honasa are the top three names that can make it to the list. The exclusions include Prestige Estates, GMR Airport Infra and RVNL and also Privy Specialty.
Thank you for that, Mahima. You are seeing a movement in some of those stocks today, but overall, yes, more pain than gain at every end of the spectrum. Himen, should we come to you on your BTST ideas? Where do you see spots of optimism in a market like this, or do you see opportunity galore?
Well, Tamanna, if I can sidestep your question about the BTST or STBT, because the intraday chart shows some sort of a mild oversold situation, while the daily setup seems abysmal. So either way, it's going to be a Hobson's choice. Opportunities galore, but I'd wait a bit. I think that the galore part hasn't yet started. We need 21,550 breaks. We'll get everything at 21,200. So I'd wait just a wee bit. But yeah, at the risk of a gun at my forehead, on my this thing, I have one STBT on CanBank at 545, stop loss 549, target of 536 on CanBank, risk reward ratio 1:2. That's an STBT. A BTST on Chola Financial at 1126, stop loss 1129, target of 1140. Risk reward ratio 1:2. Once again, request to investor, if it's possible, avoid the STBT or a BTST because it could go either ways. Like I said, oversold, setup not looking positive. So I don't think it's a market where one should do carry home a trade just for the sake of doing a trade.
Fair. And no gun to your head. If you think that this is not a market for a BTST or an STBT, that's absolutely fair. The Nifty, by the way, has cracked under the 21,600 mark.
Somehow, I don't know, Tamanna, I've been saying for the last few days that the market, some of the indicators, the quant indicators, all pointing towards this being the zone from where the bounce back can happen. Maybe we're terribly wrong. I'm not the one to predict markets. But somehow, I tend to agree with him. And today on this front, it seems a bit overdone. Now, this may be the famous last words, and we may see a further crackdown tomorrow. But somehow this seems a bit overdone. Won't be surprised if the rest of the week, we may consolidate or actually be higher from where we are right now.
It's tough to say right now,
Very much so.
But Himen is saying that right now, don't get into BTST more.
Yeah. So we to anyways just. Yeah. I mean, just saying it out. Just it looks okay.
Correct. But anyway, like we said, 21,600 has been breached on the Nifty. Himen, where is the next sort of fault line you see now that we're under a 21,600, 21,587, and for the Bank Nifty as well, which honestly speaking has had the deeper cut?
Okay. Frankly speaking, the Bank Nifty has been getting cut for quite some time now, Tamanna.
Yeah.
Coming back to the Nifty, my level was 21,680. Obviously, that's gone. 21,550 is the next level, followed by 21,338 and 21,137. So I believe that even if I feel a small bounce consolidation is there, but the inherent weakness might, up till now, the dips have been bought into, the decline fizzles out, soon we make a new high. I think it might take a few days before that happens. So these are levels on the downside. If parity has to be restored for the Nifty, we need a closing about 21,834 on the spot. I don't think that's happening at least the next couple of days. I'd love to go wrong on that. And the second, the Bank Nifty that you speaking about, 44,483 is very strong support. Last time that we closed below that was on 28th November 23. So 44,483 is very strong support, and Bank Nifty has been down for a long time. I would not like to short the Bank Nifty. I believe there can be a surprise recovery coming in, if not tomorrow, the day after. I think the villain of the piece is HDFC Bank. So if there is even a mild recovery in HDFC Bank, which is quite oversold, I think we will see a positive impact on the Bank Nifty. Upside levels, 44,950, 45,600. So Bank Nifty is something I wouldn't touch. I believe it has the propensity to surprise a bit on the upside.
Okay. Today is a day when even the good ones are getting punished, right? The numbers, as Tamanna was marking on your screen, Samvardhana, Motherson, the EBIT numbers are much better than the revenue numbers. Margins is stronger than what they did.
Look at the EBIT, 49% up.
Exactly.
Mood kharab hai.
Mood kharab hai. I think वही है. And look at the net profit. For Mazagon, okay, it's in the green. Sorry, I got confused. But Samvardhana Motherson is one example. Inox Wind is down 5% despite the fact that the margins and the numbers were much higher than the others. So everything which has even delivered good numbers is getting punished. Bharat Forge, good numbers, just that the commentary is weak, of course, and therefore that is justified. But some others, no, not so. And
if you look at the commentary though, Neeraj, it's a more atmospheric sort of judgment. They're not saying that we are going to have a bad year. They're saying industry-wise, this is what we see happening. Demand will moderate, and lower growth.
Lower growth, and therefore maybe that's I reckon the reason why this stock is punished the way it has been. But Samvardhana Motherson, Sudeep Bandyopadhyay, would you come in? I mean, because again, like Bharat Forge and Auto Ank Major. The numbers are not too bad. We don't have their commentary as of now, but if something's weak for Bharat Forge, probably true for some of the others too, and China is a big market for Samvardhana Motherson, I presume. I'm just trying to understand. The numbers look rock solid. Is it the global picture spooked by Bharat Forge that is leading to Samvardhana Motherson also correcting the way it is?
I would suspect so, Neeraj, because the numbers are rock solid, and it's a great company. I love this company, and they have been doing pretty good work, and they are gradually expanding their component per car, and it's a very systematic, structured way. I also believe that introduction of EV will make these companies even stronger, because their component per car will increase even further. I think the commentary of Bharat Forge about demand in FY25 and the rest of the current calendar year is spooking the market as far as auto and demand is concerned and auto and growth is concerned. So probably that's the reason we see a similar kind of a fall in Samvardhana Motherson.
Mazagon Dock also on your screen right now, and big uptick over there, and stellar set of numbers versus even estimates from what we can see. Look at the sharp upswing, a rare sight in today's market. Your net profit is more than double of Bloomberg estimates, 77% up year on year. Consolidated, this has been stock of the year in a sense for 2023 and has turned out a stellar set of numbers. Revenue is also showing a healthy uptick and 30% up really. So you're seeing Mazagon Docks responding well. Himin, a story that you can hop on to right now?
I would take a footstep, Tamanna. I wouldn't make a complete hop actually. But yes, upward bar reversal, like you mentioned, in a market like this, frankly speaking, is very gratifying sight. The setup has been positive but corrective. So yes, I think the respite makes you feel a bit good. Yes, 2220 closes above that today. I think we see a near-term bounce coming in. But if I can draw your attention a bit, Tamanna, we've been 6 months in counting into a corrective phase. So the setup is a bull market correction in the sense we've gone up, we've retraced. And the correction is happening by moving sideways and not going down. So inherently, we are in a bull market. And within the bull market, we're seeing an intermediate correction, which I don't think has ended today. I believe it could be some time away. But yes, if it sounds like sacrilege, but if it comes through 1900 or maybe 1800, that'll be the time to buy.
Okay, 1800 is the time to buy. We may be some way off from 1800 right now, but Mascot and Dock bucking the trend in this particular market. Let's talk about another space which is not doing too badly, and I'm going to pull up a Coforge, which seems to be, steady rock, especially on a tumultuous day. Already that stock has seen quite a run up, another 2.5% up today. You want to come first on this, Himanshu?
No, well, sorry, I think I've lost that feed from our guests, but the point being that it's the last 5 minutes of trade left. Before we get in the closing strategies from Himen, can we actually hear out from Inox Wind's Devansh Jain, who spoke to my colleague Anushi about the company's Q3 and the growth drivers going forward?
It's been a milestone quarter for us where we've turned PAT positive. More importantly, I think we've been saying this for the past 3 quarters. In Q1, we turned EBITDA positive. In Q2, we turned cash PAT positive. In Q3, we've become net profit positive. And I think we've said as tailwinds are there in the sector and the whole sector's coming back after a deep slumber or a very painful transition pain of the past 5 years, I think we are primed for very significant growth and significant profitability as we keep moving forward. So I think this is just the beginning. The quarterly EBITDA was close to about 100 crores. We've raised significant amount of capital over the past 6 months. We raised 800 crores from marquee institutional investors to pair of debt. Prior to that, the promoters had pumped in about 600 odd crores, and then we'd raised another 500 odd crores. I think what's going to happen is over the next 3 to 6 months, our interest cost is going to become zero, number one, as we become net debt free. And number two, as the sector takes off now, and as our order book, which is very large, one of the largest in the sector now, and as we ramp up more and more supplies, I think you're going to see a significant churn in terms of the profitability ramping up substantially.
Well, confidence exhibited by at least Inox, and that's very domestic and very sector specific, and you can assume that. Okay, we have minutes away from market close. Having a quick word, maybe you gave us some closing strategy, but I want to pin it down. If somebody has to look for one closing strategy on a stock, again, it will not be STBT, it could be sell today and buy after a few days, or not be BTST as well, but one stock.
Okay. I would say, one sec. For me, the toss-up is between Adani Enterprise and Adani Port. In a market like this, Neeraj, they've held rock solid firm. So, I mean, that is simply amazing resilience. So, I'd say Adani Port to buy, not as a BTST, but for a few days, because 6 days of consolidation and the stock is holding in a market like this. So, a relief rally or even a recovery bounce should take Adani Port to 1300, I believe.
Okay. And Sudeep, just before we let you go, in a nutshell, of course, any businesses that have looked interesting recently? It need not be a buy or a sell recommendation, but just a business recommendation.
Well, I like the business of Larsen and the way they are poised, both domestic as well as international. We know they are getting lots of international orders, 1/3 plus order book is international already. And also the margin profile of the company is changing. We know that they have moved out of many unrelated diversifications. Working capital has improved. So earnings, the estimate, the way we look at it, margins and earnings estimate is improving. Structurally, it is moving into a very, very good position. And for long term, I think it's a fantastic stock to look at.
All right, let's take a look at how we are closing in today's market, and it's been a rough day. There is no doubt of that. We look at where we're ending. All right, we've managed to at least close above the 21,600 mark so far. So Nifty is looking like it recovered from those sub 21,600 levels. The pain on the Sensex as well, but I want to pull up the Bank Nifty. I want to pull up the Bank Nifty and the broader indices where the real pain is. Your PSU banks saw sharp cuts today. Your entire PSU basket has seen very sharp cuts. PSU banks down nearly 5%. And your biggest components, they're hurting. Bank of India, other stocks like that are all down in the red. Let's pull up the heat map and see what kind of closing we're looking at and what we're getting into. It's just the pharmaceutical pack which has shown some signs of life. So pharma, IT would be the green ones today in the market, which are showing an upswing. Dr. Reddy's, Apollo Hospital, good numbers. DV's, decent numbers, or at least relatively seems like it. Wipro, HCL Tech, all of that is fine. But Coal India, and yeah, markets have closed there. Coal India coming in ahead of its numbers, down nearly 5% already. Hero Moto also down 4.5% on numbers that seem decent. ONGC, again, you have a quarterly number which the street doesn't seem to have liked. So you're seeing that weakness really persist. Advanced decline ratios, and we'll see where the markets have ended. What's the kind of breadth that we're seeing in the markets today, which started relatively on a positive note. So we'll pull up those advanced decline ratios for you, and look at the skew over there. Look at the skew over there where, you're really seeing both an 5 times decline ratio there in the markets today. So about after mid-morning, that gap has only widened as we've come into close. So what has not worked? We've already told you that public sector companies on high valuations are really being hit. So are railway stocks, so are energy stocks. Tata Power was another key loser that we saw today. And that's the kind of trend that perhaps volatility that we will see for the next few days. Tata Power down finally 8% after its quarterly numbers. And NHPC too, I just want to pull up an NHPC as well because their numbers had come in before close, and that's closing about 15% down. So all in all, a tough day at the markets. Will this be the end of the pain? Are we going into oversold territory where we could see a bit of a bounce back tomorrow? Well, you'll have to join us back tomorrow morning for that and more. But for now, from Neeraj, myself, and the entire team that puts together India Market Close, thank you so much for joining.
Presented by Patanjali Honey, world's best Patanjali Honey, 100% proven on more than 100 parameters of purity.
फिस्कल डिफिसिट के नंबर को आपने अच्छे से मैनेज कर लिया, तो थोड़ा खर्च करने का रूम था, चाहते थे तो कर सकते थे आप, लेकिन वो उस चक्कर में भी या उस लालच में भी आप लोग नहीं आए। मेरा कहना आपके पास स्पेस था, फिर भी क्यों नहीं किया?
सबके मन में ये जरूर एक भरोसा, कॉन्फिडेंस था कि जनता समझ रही है कि जो योजनाएं हम तक पहुंचा और सरकार जो ट्रांसपेरेंट तरीके से किसी लालच में नहीं पड़ा और कुछ लीपापोती करने का कभी कोशिश नहीं किया, ऐसे सरकार जिसका समर्थन होना चाहिए हम देने को तैयार है, ऐसे मूड में देश है।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show. Thanks for tuning into Talking Point. I'm your host, Neeraj Shah. Our guest today is Rajiv Batra, head of Asia ex Japan and China equity strategist at JP Morgan. Rajiv, welcome to the show. Thanks for taking the time out. I hope all is well. Just wondering, what are your thoughts around what the world markets do in a year which is fraught with election risk as well as geopolitical election calendar and the geopolitical risk being as heavy as they are?
As you have rightly pointed out, 2024 is a record-breaking year for elections, with elections taking place in 77 countries. Although the US elections are arguably the one race which will going to have a broad global consequences. But that's where we will need help of navigating the equity markets, particularly the high beta Asia or emerging market equities. In that, the idea should be trade rather than invest and go through with earning cycle, because the P re-rating phenomena or valuation re-rating phenomena will be largely dependent on the monetary policy maker. If we see any kind of a rate cuts and easing, then valuation will come into play. If not, then earnings will be buy all end all for market to track, and that will be driving the performance from here on. But that said, there will be cycles within the cycles that will play out, like domestic cycles could be divergent from what is happening globally, and particularly in the domestic markets like India, where they are having a long-term growth prospect in play, structural areas are working, so that will help them do well in this kind of, you can say, a very complicated year or an environment to outperform the emerging market equities.
What's your sense about what the Fed or central banks at large could do? The beliefs have been very, very disparate, and post the Fed comments as well as the comments from some of the FOMC members in the last 3 or 4 sessions, the view around when the rate cuts start are very, very different. What's your base case, and when do you think the market starts discounting that?
13th December last year, Fed took a pivot by saying they may need to relook the policy stance, and within the dot plots, it was revealed that we may witness 3 rate cuts this year. So bond market or equity market pricing shifted quite rapidly, and at one point of time, start of this year, market was pricing in close to 7 rate cuts this year. Now, looking at the inflation data, which is slowly, steadily making a comeback, robust economic growth print in the US, and still a broad-based gain in employment, Fed is going to take some time to go for either a rate cut or say we are totally done with this cycle. Premised on that, JP Morgan economic team is forecasting the rate cut starting from June this year, and we are forecasting 5 rate cuts, 1 in June and then 4 in the second half. Once Fed starts cutting, that will open door for Asia, emerging market, even India to relook at their monetary policy situation. But before Fed do anything, can emerging market or any other Asian countries react and go before Fed? Chances looks pretty low.
Okay, yeah. And to an extent, the Reserve Bank of India in the policy meeting earlier kind of highlighted to that effect as well, that the eyes on the globe, and of course they also mentioned about the global debt sustainability, but it seemed in some fashion that central banking, global central banking would probably drive risk assets. Just one perspective. I read in your note very interestingly, because I was looking at Asia notes more closely by virtue of our viewers being such a large dominant Indian population, which is that you mentioned that you might be partly constructive on China. Please correct me if I'm wrong.
For the central government, 60 state governments, 20 states, put together 16. We are somewhere around 81 odd is what you indicated in your press conference last week. So is this a concern that there is no known debt benchmark to be reached? Just like say a government wants to attain FD of lower than 4.5 by 26. So any thoughts on this front, and how this stickiness can come down, and anything that you have been suggesting to the GOI?
What we have been as Reserve Bank suggesting to GOI, that is bilateral, and that is direct communication between the central bank and the finance ministry. So I would not like to touch upon that. But the two other aspects which you have mentioned, I think the first one is you said that the interest payments are rising. Now, when the inflation is high, naturally the central bank has to take monetary policy action by increasing the rates. So the borrowings which are done, the government borrowings which are done during that period, naturally the borrowing costs will be higher because the yields would be higher. But as we move forward, as inflation has started moderating, now going forward when inflation moderates, logically the final point will be where the bond yields also come down. And in fact, I should say that look at the 10-year bond yield. The 10-year bond yield, I remember in May 2022 when we started this rate increase, the rate hike cycle in May 2022 when we started, the 10-year bond yield was 7.14% or so. Today, the 10-year bond yields have again come down to about 7.17, 7.18% in that range. But in between, the bond yields had gone up to 730, 740, and it had remained there for some time. So it is a function of your inflation level and the quantum of liquidity available in the system. If you recall, in the first year of COVID, again, due to the efforts of the Reserve Bank and all that steps we had taken, I think that year the borrowing cost was one of the lowest so far as government borrowing was concerned. So therefore, in the intermittent period, the interest payments, as a quantum, it is linked to the bond yields. So therefore, going forward, when inflation is brought under control, I think bond yields will soften and the borrowing costs of government also should come down. Then their 10-year bond yields are in any case they have started softening, and 5-year also. Bulk of the government borrowing are in these two buckets. Now, the other point which you mentioned was about debt benchmark. You see, during the COVID, at the peak of the COVID, the general government debt to GDP, that is central government and state governments put together, the debt to GDP was about 88%. That was the peak which was at the time of the COVID pandemic. That is because the government had to give a lot of fiscal support to the people and to various sectors of the economy because of the challenges coming from the COVID. Now, so therefore at that time the debt to GDP of the general government had gone up to 88%. Now it has come down to about 81% or so. And with the fiscal roadmap, consolidation roadmap which the government is following, the target of reaching 4.5% in 25-26, I would expect, the debt to GDP also to start moderating. And incidentally, it is a very important point which was mentioned in my monetary policy statement. I had devoted one paragraph, if you recall, to the problem of government debt in the context of the global economy. And the global debt to GDP is expected to cross 100% by 2030. But even now, the debt to GDP of advanced economies is far higher than the debt to GDP of the emerging market economies. I think emerging market economies are today in a position to respond far better to the needs of fiscal consolidation. And so India is definitely, in the forefront of that path of fiscal consolidation, which the emerging market economies as a group are now following.
Thank you, sir. I'll move on to Siddharth Upasni from Money Control.
Hi, this is Siddharth from Money Control here. A couple of quick questions. One, starting off with debt. Post-budget, the Finance Secretary had said that the 40% debt to GDP ratio target the FRBM committee had suggested, let's say, historical relic, and that it's from pre-pandemic time. So that needs some sort of a re-examination. Where do you stand on that? And second, just on bond yields, we'll expect any inflows into government debt to rise post-June once it's listed on the JP Morgan indices, the FER security.
I'm sorry, I didn't get that. Is
inflows into government debt will start increase post-June once the listing on the JP Morgan indexes begins. While we know that the RBI takes a look at close look at the bond yields, especially when they are rising. What about when they are falling? If they do fall quite a bit once these inflows come in, is there any mechanism that you have in mind to manage sharp drops in yields? Thank you.
Sharp drop in yields?
In yields, once inflows keep continuing for 10 months, 25, 30 billion, whatever.
Okay, and the first question you said was about the, okay, now I'm not aware of what the Finance Secretary has said, but on the issue of 40%, whether it is valid today or not, I don't want to comment because and offhand I don't want to comment. There was a government committee which had been appointed, which had recommended, I think, 40 plus 20, 40 for center and 20 for the states. So government has to take a call. What is the level of sustainable debt so far as government finances are concerned? We are the debt managers of the government. RBI is the debt manager of the government, and whatever view the government takes with regard to their borrowing requirements, RBI's responsibility is to ensure a smooth completion of a non-disruptive completion of the borrowing program of that particular year. But yes, certainly, debt to GDP is a very critical issue in the fiscal consolidation roadmap. And I think if you go by the fiscal deficit target which the government has itself followed against a budget estimate of 5.9, the RE is 5.8. And the general expectation was probably the government fiscal deficit would be this year 5.2. The market was expecting 5.2, 5.3, 5.4, but it is 5.1. So therefore, I think there is every reason to believe that the government will adhere to the path of fiscal consolidation. Whether 30, 40, 50, I would not like to comment on that. With regard to JP Morgan bond index, we have to see how much of it, various estimates are being made by the market. There are also suggestions by participants in the market that some of it has already come in. We have seen in the recent months, constant inflows of, constant inflows both in the FDI and in the FPI route. FPI route is very robust, incidentally. I have given the figures in the monetary policy statement. 32 billion net. 32 billion is the net FPI inflow against an outflow last year in the corresponding period of about $6.5 billion or so is what I had said. So FPI flows are robust. And so JP Morgan, how much actually will come, we'll have to wait and see. And it's not as if, it's all going to come in a single burst. It will come over a period of time. RBI has managed, if you go by our track record, both when there are outflows and when there are inflows, in both the situations, the Reserve Bank has got an excellent track record in managing the flows. And going forward, even this year also, we are confident of handling the, what you are, referring to, the expected inflows, higher inflows. As and when such a thing materializes, we will be able to deal with it. And bond yields, as you will appreciate, as the central bank governor, I would not like to say how much is the bond yield, whether it will go up or go down, because that is a signal to the market. We don't like to interfere in the, you see, it's a market. The rates should be decided there in the market. The Reserve Bank cannot and should not, it's only in a crisis situation like the COVID we announced the GSAP and all that. But that was an exceptional situation. But on a normal basis, the Reserve Bank, we like to leave the market to determine what should be the bond yields. So I would not like to comment on the yield curve in the future.
We'll move on to Manikanta Patnaik from Economic Times.
Sir, what is your view on the budget's sustained focus on capital expenditure, for fourth year in a row? And sir, a supplementary question, I think I wanted to follow up on Lakshman's question. Two countries with which we had an UPI arrangement today. So are there more in the offing, and which are those countries?
You see, there are several countries with which we are under discussion. Both the Reserve Bank and the NPCI International, which is the international wing. There's a subsidiary company of NPCI to handle their international business. So NPCI International and the Reserve Bank, together we are in dialogue with a number of countries. And the list of countries and the names I would not like to mention, because there is a country on the other side. He may or may not like their country being mentioned in our press conference. So as and when something gets finalized, you will automatically come to know about it. And with regard to that was your question, and what was the first one you said? CapEx. No, CapEx is a GDP multiplier. In fact, research has shown that the GDP multiplier of capital expenditure is about 1.2, going up 1.2%. 1.2 going up to about 1.4. So it is a multiplier. It has a multiplier effect on the GDP. And definitely a thrust on capital expenditure is always welcome. I have said it in my monetary policy statement also, that government capital expenditure will support the GDP growth.
Tarun Sharma, Z Business.
I think we can conclude enough for you.
Sir, Tarun from Z Business. Sir, I have two questions. First, on the green energy front, sir. Government has a plan to net zero by 2017, sir. And there is recommendation from the Power Ministry to RBI to include the green energy funding as a priority lending above 30 crore. Secondly, there is some relaxation in the provisioning for the green energy finance. First question. Second, sir, recently you issued the discussion paper on the capping or dividend part, sir, which 31st January was the last day. So, is there any discussion in the board meeting, because DE has some concern on the dividend capping ban, especially?
I think you have said what Power Ministry has said, what DA views are, and so I am not aware actually of this, but keeping that aside, we examine these aspects. Ministries of government have their views, they share their views with us. We take them into consideration certainly, and then we will take whatever decision we feel whatever decision appears to be appropriate, we will take that, but it will naturally be based on lot of discussion with various stakeholders, and ministries of the government are certainly stakeholders. So therefore I don't want to speculate on the request suggestion of the Power Ministry or the Finance Ministry on dividend, etc. 31st January was the last date. So comments do take time to, and we get comments in hundreds, so they have to be examined carefully. As and when we take a decision, you will know about it.
Radharaman Mishra from PTI Bhashan.
माइक ले लीजिए, चलिए कंक्लूड करते हैं क्विकली. हाँ,
मेरा सवाल है सर, पहले भी पूछा जा चुका है सर, जो यूपीआई कार्ड के बारे में, रुपी कार्ड को लेकर भी दूसरे देशों में रुचि है सर?
बहुत है रुचि.
और एक सवाल सर और है, थोड़ा हट करके सर, हमारे कलीग थे सर, अभी तुरंत साइबर फ्रॉड के जरिए सर 1.5 लाख रुपए निकल गए.
सॉरी,
1.5 लाख वो बैंक अकाउंट से निकले सर, राइट?
और उनको आधे घंटे लगे कस्टमर केयर तक पहुंचने में और वो पहुंच नहीं पाए, पैसा तब तक निकलता रहा। तो सर मेरा एक चीज़ पूछना था कि क्या ऐसा कोई कॉमन प्लेटफॉर्म बनाने का आप लोग का प्लानिंग है जहाँ की कोई भी शिकायत पत्र करें और वहाँ पर सुनवाई?
नहीं, साइबर फ्रॉड कंप्लेंट के लिए तो एक ऑलरेडी वो तो एक कॉमन प्लेटफॉर्म है ना. व्हाट इज दैट इज कॉल्ड, you have that, no? What is that called?
1930 common number to lodge.
1930 है कॉमन नंबर, आप उसमें कंप्लेंट लॉन्च कर दीजिए. लेकिन व्हाट यू आर टॉकिंग, अब हिंदी में बोलूँ या इंग्लिश में? नहीं, आपको जो पसंद है हम उसी में बोलेंगे. ठीक है, मैं हिंदी में आंसर में देता हूँ आपको. तो देखिए, साइबर सिक्योरिटी बहुत जेन्युइन प्रॉब्लम है. दो तरह के सिचुएशन से. एक सिचुएशन ऐसा है जहाँ की कस्टमर खुद बाई मिस्टेक कस्टमर वो बिलीव करते हैं ये जेन्युइन मैसेज है. किसी बैंकों के नाम पर कोई मैसेज आता है, वो उसको जेन्युइन बिलीव करके, या कभी कभी एब्सेंट माइंडेडली, और ऐसा हो जाता है कि वो OTP शेयर कर देते हैं या कोई पर्सनल डेटा शेयर कर देते हैं और फिर एक फ्रॉड हो जाता है. इसीलिए सारे बैंक्स आपने देखा होगा SMS वगैरह भेजते रहते हैं अकाउंट होल्डर्स को. हमने भी काफ़ी एडवर्टाइजमेंट RBI के तरफ से कर रहे हैं कि किसी भी तरह का पर्सनल इन्फॉर्मेशन जो है आप शेयर मत करिए. अगर कोई बैंक से कोई मैसेज आ रहा है, आप डायरेक्टली, मतलब जिसमें ये कह रहा है कि ये इसको क्लिक कर दीजिए और ये हो जाएगा, आपका KYC हो जाएगा, ये बिल्कुल बैंक्स ऐसे कभी नहीं करेंगे. आप डायरेक्टली आपका जहाँ पे अकाउंट है वो ब्रांच को डायरेक्टली कॉन्टैक्ट करिए. सो ये एक टाइप का सिचुएशन है जहाँ की कस्टमर मतलब बाई मिस्टेक कर देते हैं और उस बीच कुछ पैसा निकल जाता है. लेकिन हमने ये मैंडेट किया है कि अगर आप डायरेक्टली बैंक को कंप्लेंट करते हैं, बैंक का जो कंप्लेंट मैनेजमेंट पोर्टल है उसमें, इफ़ यू कंप्लेन विद इन 24 और 48 आवर्स वी हैव सेड, 24 आवर्स, 24 घंटे के अंदर अगर आप कंप्लेंट करेंगे और गलती जो है अगर बैंक का है तो वो फुल रिफंड दे देंगे. वो सर्कुलर हमने इशू कर दिया है. लेकिन साइबर सिक्योरिटी का ये एक सिचुएशन है. दूसरा सिचुएशन है जहाँ की कई तरह का मतलब हैकिंग करके वो फ्रॉड करते हैं. उस दिशा में बहुत सारे कदम उठाए गए हैं. उसमें रिजर्व बैंक और जो संबंधित मिनिस्ट्रीज है गवर्नमेंट का, उनके बीच हम रेगुलरली डिस्कस करते रहते हैं सिस्टम को और कैसे मतलब मजबूत बना सकते हैं, ये फ्रॉड जो आता है उसको कैसा प्रिवेंट कर सकते हैं. वैसे आपकी जानकारी के लिए मैं बता दूं, बहुत सारे हैकिंग अटेम्प्ट्स और बहुत सारे फ्रॉड अटेम्प्ट्स हम ब्लॉक करते रहे हैं. लेकिन वो इन्फॉर्मेशन जो है मतलब वो बाहर हम पब्लिसाइज नहीं करते हैं.
अंतरिम बजट के बाद वित्त मंत्री निर्मला सीतारमण का ये पहला इंटरव्यू है. प्राइवेट नेटवर्क में ये पहली बार हमसे बात कर रही हैं.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the strategy.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
As we've got your options covered.
Markets begin the week lower as benchmark indices close almost 1% in the red. Broader markets too underperform. HDFC Bank and ICICI Bank drag the markets. PSU banks drag markets lower as the Nifty PSU Bank Index ends over 4% lower. Unified Payment Interface or UPI services rolled out in Sri Lanka and in Mauritius during a virtual ceremony attended by Prime Minister Narendra Modi and the top leadership of both island nations. Hello and welcome welcome. You're watching The Reporter on NDTV Profit. I am your host Pallavi Nahata, and as always, the show will aim to bring to you market headlines along with national and international news. Before we can move on with the show, let's see how the markets have fared today. Benchmark indices affected by the Monday blues, closing lower with losses led by banks and financials. My colleague Tamanna Inamdar joins us for a quick market wrap.
Well, if you were feeling the Monday blues, don't worry, so was the market. The start of the week has been a dismal one on the Lal Street. The only, I think, silver lining is that the Nifty has managed to close a tad above the 21,600 mark. In the last few minutes of close, even that was seeming unseemly. Even as, in the red, the Nifty and the Sensex seems, as much as a crack is seen there, the fact is that the broader indices have felt much more pain. The Bank Nifty now under very crucial levels today after today's cut. The mid-cap 150 also 2.5 points down. Let's look at the small-cap index, nearly 4% down. The mid-cap about 2% down. The biggest culprits of the day are the PSU banks. The PSU bank index also seeing sharp cuts, as were the overall PSU basket of stocks. The PSU bank index about 4.5% down. And let's pull up those components and look at what has suffered the most. Central Bank of India, UCO Bank, IOB, all of them on circuits. At least the last, the bottom three on circuits, number 2, 3, 4, are really seeing terrible kind of cuts today. But it's across the space, and we were talking about the CPSE as well. And SJVN today saw massive cuts, and NHPC. Now, some of them have to do with their quarterly numbers coming in, which have not been up to the mark. But it's not just those kinds of companies that have seen this kind of a drubbing from investors. Let me pull up the Nifty heat map and show you what kind of an impact we've seen there. But before that, I have the advanced decline ratio here. And the spread in the advanced decline ratio shows you how the bears really took hold of the street today. Coal India before the results down about 5%. Hero Motor on the back of numbers looking weak. ONGC also a weak quarter, which was expected, frankly speaking, because you have seen crude prices internationally slip, but definitely being punished quite a bit by the street. The only sort of relief space was the pharma and IT pack. Dr. Reddy's Apollo Hospital doing pretty okay today, as was Divi's, but I can't say the same for the wider audience. So are we going to see this PSU drubbing continue tomorrow, or are we now in a bit of an oversold territory? We'll have to wait and watch for that. Perhaps the pain is yet to continue.
Thanks a lot for that, Tamanna. Now, moving on, the JSW Group over the weekend had announced its plans to set up a $5 billion EV plant. My colleague Tushar Singh has managed to gather some additional information about the plant. Let's find out what's the latest.
Hi Pallavi, very good evening to you. So after the weekend's announcement of a $5 billion EV enterprise in Odisha, what we are hearing from sources within JSW is that the construction for this EV facility, both in Cuttack and Paradeep, will begin by the end of this year, subject to regulatory approvals that are supposed to come in by this year. Exact commissioning or the actual production will actually start in the next 2 or 3 years. They also pointed out that this plant, the EV plant, is at the group level. So JSW Group is responsible for the construction and production from this particular plant, and no other conglomerate companies are involved in this particular project. So look at what JSW is going to do. The JSW is going to spend about 40,000 crore to set up 2 facilities in Cuttack as well as Paradeep. It will create around 11,000 direct jobs. What all is in the offing? A 50 gigawatt hour battery plant for both mobility and storage systems. An OEM plant, that means a car factory, will make 1 lakh commercial vehicles, that's electric buses and electric trucks, and 3 lakh passenger cars, electric cars. An auto components plant will also come up. A vendor that will be only earmarked for building the electric powertrain that will go into the CVs and the EVs. A vendor ecosystem will also be developed for other components. Apart from that, at Paradeep, 2 other plants will come up. One is a copper smelter with an annual capacity of 1 million tons per annum, and a lithium ion refinery with an annual capacity of 60,000 tons. So apart from that, another maybe R&D facility will also come up. We'll get some clarity on that from the company. That's the story about JSW's EV plans going forward.
Now, stay with us, Tushar. Tell us a little bit about what's happening on Hero MotoCorp. The shares have slumped in today's day of trade, and that's despite stellar Q3 numbers. What's going wrong with the stock?
Absolutely, Pallavi. So essentially, Hero posted some really good numbers for Q3, indicating a revival in two-wheeler sales and an uptick in a rural revival as well. So if Hero sells more motorcycles, it means there is some revival seen in the rural space. But still, the stock crashed by more than 5% due to the fact that Hero has actually warned about a decline in operational profitability due to the EV business that it is trying to build. So essentially, if you quick look at the numbers, revenue was up 21%, EBITDA was up 47%, net profit was up 51%. But the fact that Hero pointed out the marketing expenses that goes into building this EV line of vehicles under the Vida brand is going to eat into the operational profitability, and that has hurt the stock today.
Okay, thanks a lot for that, Tushar. Now, moving on. We should communicate honestly with stakeholders and not just paint a rosy picture. That's what Amit Kalyani, the joint MD of Bharat Forge, had to say. Listen to what more he has to say.
Our 9-month profits are almost equal to last full year's profits, and for Q4 will also be good. But I think if you look at the end markets that we serve and the end geographies that we supply into, there is a lot of stress and there is a lot of uncertainty in those markets. Many of the markets are starting to slow down, show signs of stress, and they have all kinds of issues, right from geopolitical issues, political issues, financial issues, other issues in those markets. And I think we need to be cognizant and be responsible in communicating to the market and to our stakeholders, and not just always paint a rosy picture. And I think we always look at giving our stakeholders a slightly longer term view rather than a short term view.
Now, in an attempt to coax middle-class households to spend more, consumer goods makers are cranking up their advertising and promotion budget. My colleague Sesha Sen joins us with more on this. Over to you, Sesha.
Right, so FMCG companies' ad spends have surged 12 to 36% on a year-on-year basis in the December quarter, the quarter that was marked with the festive season as well as the sporting extravaganzas like the ICC Men's Cricket World Cup. Now, this translates to about 8 to 17% of the total sales that was spent on advertising and promotions. And this trend, according to the companies, is likely to see an uptick in the coming quarters as well as companies chase volume growth. So what are the factors that would be driving ad spends and where exactly companies are spending? To understand, Diageo India had said that the main key driver of ads would be the sporting events, for example the IPL, Indian Premier League, that is likely to be advanced in view of the Lok Sabha elections, as well as the Women's Premier League is scheduled later this month, so companies expect January to March to be a high ad spend quarter. Secondly is the price value correction that companies are taking in light of easing inflation. So companies want to recoup the lost market shares to smaller peers, so they are bridging the pricing gap with the regional brands. Thirdly is that the companies are also focusing on improving visibility of the new launches, ranging from specialized toothpaste to shampoos and even the most hyped Korean noodles. So aspirational packaging to stay relevant with young shoppers is also likely to see ad spends going up. And lastly, the other factors such as election and rising consumer confidence could also contribute to forcible surge in the ad spends.
Thanks a lot for that, Sesha. Now, the PJ Surendra Park hotels closed the day almost 0.5% lower. That was after listing at a premium of over 20% on its IPO issue price. We caught up with the management on how they plan to use the proceeds. Listen into a slice of that conversation.
We definitely are going to expand on the asset-light side of the model. Currently in the asset-light side of the model, we have 1,018 keys. These keys we plan to raise by 1,753 keys to arrive at a number of 2,071 over the next 5 years. Overall, our plan is to raise our keys to 4,403 over the next 5 years. So we are going to be highly focused on all sides of growth, that is our own properties, the asset light, as well as the leased properties.
Okay. Also, your 3-year average ROE and ROCE are minus 3.2% and 3.4% respectively. The ROE stood at 8.9% in FY23, while the return on capital employed was approximately 11% in the same period. Where do you see this going forward? What is the trajectory that you're looking at?
So the numbers are going to significantly improve as we use the proceeds of the IPO to retire the debt. So we would be a debt-free company, firstly to begin with, and we will obviously have a significant amount of cash flow going forward. So all these parameters are going to significantly grow going forward.
All right. Also, your revenue concentration is around 75% of 75% of your revenues come from your top 5 hotels as per FY23. So this could be a concern for you. How do you plan to overcome this? Do you have any strategy in mind?
So as far as our hotel strategy is concerned, we currently are market leaders in occupancy and RevPAR. We have outright leadership in terms of occupancy. Our occupancy of 92%, we have done an occupancy of 92% last year, and this is a 30% premium over our competitors. We have the highest occupancy in the country. We are also market leaders in RevPAR, outright market leaders in RevPAR in the segment in which we operate. We have a very, very strong position in terms of F&B. Our F&B contributions are among the best in the country. We are among the best in terms of EBITDA margins, and we are going to grow at a significant pace in the years ahead.
Now, moving on, SpiceJet has started adopting measures to reduce its workforce, aiming to save nearly ₹1 billion annually. Reports suggest that it's likely to lay off 1,400 employees. This workforce rationalization is expected to save the airlines ₹100 crore annually. That's according to the company's spokesperson. Sources have also said that currently the number of employees in the airline exceeds the required workforce for a reduced fleet post-COVID. The company has a fleet of 40 planes now, down from about 120 prior to the pandemic. We're closely tracking what else is happening on SpiceJet, but now it's time to slip into a short break. Stay tuned, we have a lot more lined up on the other side.
फिस्कल डिफिसिट के नंबर को आपने अच्छे से मैनेज कर लिया, तो थोड़ा खर्च करने का रूम था, चाहते थे तो कर सकते थे आप, लेकिन वो उस चक्कर में भी या उस लालच में भी आप लोग नहीं आए। मेरा कहना आपके पास स्पेस था, फिर भी क्यों नहीं किया?
सबके मन में ये ज़रूर एक भरोसा, कॉन्फिडेंस था कि जनता समझ रही है कि जो योजनाएं हम तक पहुंचा और सरकार जो ट्रांसपेरेंट तरीके से किसी लालच में नहीं पड़ा और कुछ लीपापोती करने का कभी कोशिश नहीं किया, ऐसे सरकार जिसका समर्थन होना चाहिए हम देने को तैयार है, ऐसे मूड में देश है।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, Some believe in swiping right. Some run away from risk. Others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Welcome back. You're watching The Reporter on NDTV Profit. Now let's jump into another top story of the day. After France, India's UPI payment service is now available in Mauritius and Sri Lanka. This comes on the back of New Delhi's increasing bilateral economic ties with the two countries. We have Pragati Oberoi joining us with more on this. Pragati?
Right, Pallavi, absolutely right. After France, now India's UPI payments will be accepted in Mauritius and Sri Lanka, and this comes as a significant step, especially since India made its stance very clear during its G20 presidency that they want to extend more and capitalize more on the DPI. Now, the interesting bit here is that with regards to Mauritius specifically, both RuPay and UPI connectivity has been enabled between India and Mauritius, and as far as Sri Lanka is concerned, it is restricted to the UPI payments. The move comes after recently in France also UPI payments became possible with India, and that's even then we announced that the payments would start specifically from Eiffel Tower. But with the announcement in Mauritius and Sri Lanka, as of now we know that if any Indian tourists or Indians go to either of these countries, they'll just have to take out the QR code scanner, scan a particular QR code, and they will be able to make their UPI transactions in these two countries. The significance bit here is that even RBI Governor Shaktikanta Das has said that that the QR code linked mobile payments have been facilitated in Mauritius. He has also said that the RuPay card will be enabled to use abroad, and Mauritius origin India bound travelers who hold RuPay cards will also that will be issued by their banks. Indeed, a very positive move. We'll bring you the more updates as and when we have them.
Right. The UPI is coming up as the uniting partners of India. Now, that's the word coming in from Prime Minister Narendra Modi while he was virtually attending the launch of UPI in Mauritius and Sri Lanka today afternoon. Listen in.
फिनटेक कनेक्टिविटी के माध्यम से केवल क्रॉस बॉर्डर ट्रांजैक्शंस की ही नहीं, क्रॉस बॉर्डर कनेक्शन को भी बल मिलेगा। भारत का यूनिफाइड पेमेंट्स इंटरफेस यानी यूपीआई आज नया दायित्व निभा रहा है, यूनाइटिंग पार्टनर्स विद इंडिया।
Now, former Maharashtra Chief Minister Ashok Chavan has resigned from the Congress National Party ahead of the impending general elections. During his recent interaction with the media, he explained his departure further.
मी आज काँग्रेस पक्षाच्या विधानसभेच्या सदस्यत्वाचा आज राजीनामा अध्यक्षांना भेटून दिलेला आहे आणि त्यानंतर मी काँग्रेस वर्किंग कमिटी काँग्रेसच्या प्राथमिक सदस्यत्व याचा मी राजीनामा आणि विधिमंडळ काँग्रेस पक्षाच्या सदस्यत्वाचा राजीनामा आज मी दिलेला आहे. यापुढची राजकीय दिशा मी 1-2 दिवसांमध्ये निर्णय घेईल. अद्याप मी ठरवलं नाही. मला काय अवधी लागेल 2 दिवसामध्ये मी माझी राजकीय भूमिका पुढची काय असेल याबद्दल निवेदन निश्चित करेन.
Now, there's been a ban on protests and rallies in the national capital until the March 12th, ahead of the Farmers' Delhi Chalo March. The order cites serious significant threat to public safety, the security of public and private property, and maintenance of public peace, order and tranquility within the region. With that, it's a wrap on today's edition of The Reporter, but stay tuned to NDTV Profit for fresh news and updates.
अंतरिम बजट के बाद वित्त मंत्री निर्मला सीतारमण का ये पहला इंटरव्यू है. प्राइवेट नेटवर्क में ये पहली बार हमसे बात कर रही हैं.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money,